headlines at the Fed are on Bloomberg.
Right now, if you had to tip the scales, the next move is going to be an increase or a cut. It's pretty heavily weighted to the increase for me.
Nobody covers the Fed like Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
As pessimism really continues to build, while Beijing also rebuffs the U.S. request for their nation's defense chiefs to meet. Plus, the Spanish Prime Minister, Pedro Sanchez, calls early elections after his Socialist Party suffers a crushing defeat in regional ballots. May inflation figures actually slow more than expected. Now, this is a picture across the board. We did open on a high, and now a little bit more pressure. Partly European stocks pretty much unchanged, actually. There's a bit of bouncing around. Again, markets trying to stabilize after yesterday we had Memorial Day in the U.S. and here in the U.K. Market being closed because of a bank holiday. FTSE 100 down 0.2%. The DAX a little bit up. It's all about the debt ceiling. So let's look at what this means for treasuries and some of the moves out there. T-bills, of course, the most sensitive ones that we need to look at, but also look at the sectors on the move. So we did have a couple of earnings. Our Joe Eason did a fabulous job in running out and really telling us what was moving in the UK the most. I know he started with some UK supermarkets. So on the up, we have media, technology and real estate, all gaining between 0.8%. And then energy down 0.9%. Banks also a little bit under pressure, but they're within a range of up or down 0.8%. So nothing huge. Treasuries, though, and U.S. stock futures have advanced on hopes that Congress will pass a debt accord to prevent a catastrophic default. Backers only have a week left to pass the deal. Now, for more on this, let's bring in Bloomberg's senior reporter for global markets, Jan Patrick Barnett. JP, thank you so much for joining us. So what are markets looking at? I don't know whether, we could see some kind of dangerous event like T-bills. I know that's probably the screen you have behind you.
Yeah, absolutely. So I think it's no major danger at this point. I mean, the market was very hesitant to price in any catastrophic outcome from the debt ceiling debate. Anyway, markets never do. They only do when it's getting very, very close and very dangerous. Then they start to react on it because it's so unpredictable. Now we have a deal, but that also means that the market is not going up tremendously. So don't expect a massive price firework at least from the stock markets. It has to go through Congress, and even President Biden said he's never sure 100% what Congress will do, but he is confident that they will get it done. So let's hope he's right on that case.
JP, apart from T-bills that we're looking for, I mean, is there anything else in terms of part of the markets? I know there's also maybe liquidity concerns in certain pockets, but do you look at T-bills and dollar, or how could you play this if we come to the 11th hour?
Yeah, dollar, definitely. I mean, you can also look at economic sensitive sectors in the stock market that could be moving on it, because if the government has less money to spend, and they have introduced a cap for the next 2 years, it's always going to be see how that money will be distributed across the economy. I would also like to look at what the Fed is doing, because now that ceiling is in place, maybe they have a little bit more leeway in their next decisions that are coming up. So short-term interest rates for sure, the dollar definitely, and then everything that is economic sensitive in terms of sectors I would watch.
Is there anything else, JP, that when you look at, for example, the inflation figure out of Spain, does it change the game for the ECB and therefore maybe some of the value or attractiveness for some European stocks?
Yeah, well, I wouldn't say that it's totally changing the game, but what is interesting in Europe and in the US as well is that the inflation theme is sort of coming back into the market. We have seen a flip in pricing for the Federal Reserve. Not so much for the ECB yet, but it's a reminder for markets that the inflation game is not over yet. It's not won. There's always this, let's say, under the surface concern that inflation might come back in what shape or form. What will the economy do if there's no recession? Will this actually be really good, or will we then see prices go up again? So I think the market is still a little bit on the edge, not super nervous, but still watching the inflation game very carefully. And every change in the underlying data there could be something that make investors jittery. But for the moment, we are all excited about AI, and that seems what is the main driver for the market at this point.
Yeah, so we're also looking for NVIDIA, actually, an extremely valuable company that could go even higher. Thank you so much, JP Barnett, there, our senior reporter for global markets. Now let's get to our MLive question. We asked our guests this week, what will be the biggest risk for stocks over the next 12 months? And here's what they said.
I think we're in a challenging period right now, an anticipatory period as to what's going to happen with the debt ceiling, what's going to happen with the Federal Reserve on June 13, 14, and then what happens with the potential for a recession. But longer term, I'm in definite agreement that we should be deploying our cash.
With equities in about near the top of a 7-month range, it's really difficult to see that now, before this being solved, being the proper time for a real, true, genuine breakout.
We don't expect a big bear market either in US stocks.
The market's not pricing in a recession, far from it. I think the market's pricing in normalization. If we actually do enter a recession, and in our view, it's going to be a recession, because of the bank lending standards, because of the lagged impact of rate hikes, as the consumer savings buffer runs out.
We do expect a recession to begin sometime in the second half. And for the equity market, that means down first and then likely back up essentially to here.
Well, let's discuss all of this with our senior European equity strategist from our Bloomberg intelligence team. He's Tim Craighead. Tim, always good to catch up, especially on such an important topic with so many cross currents actually impacting stocks heading into the second half. What's your overall outlook for European stocks?
Well, it's not a particularly technical term, but I would say sloppiness.
That's CFA level 4.
Exactly. You think about it. We've got stocks near a record high. We're only a few percent off of where they peaked in 2022, and we're up 20% from last autumn. So there's been a healthy rally. And valuation, while not stretched at 12.5 times forward earnings, does imply a pretty big pivot as we look out over the course of the next year and a half in interest rates. And that does bring the inflation outlook and interest rate trajectory into focus. And broadly speaking, we're still of the camp, we believe the same thing that Bloomberg Economics does, that we're not going to see a tip over in inflation, as aggressively as seems like a lot of prognosticators do.
So NVIDIA, and I keep on being told, look, watch out, because if it gains 4%, then this is a game changer for NVIDIA. Is there an equivalent, actually, of NVIDIA in Europe?
Yeah, it's a funny thing, because it is a case where tech is, approaching, depending on how you define it, 30% of the U.S. market. Could be a little more, could be a little less. Over here, it's 6. So specifically, NVIDIA, we don't have. What we do have is LVMH. So you think luxury goods here and a play on China is what's exciting and a key driver for European markets over the course of the last year. Interesting enough, if you look right now, what's really driving the U.S. market is tech. What's driving European markets, use RRG as a function. It's fantastic.
RRG, go.
RRG. Consumer staples and healthcare. It's a defensive market where we've gone post first quarter earnings.
But if you look at LVMH, they lost quite a lot. If you put it in context, it's still probably peanuts. That's also CFA level 3. But how volatile could we see some of these stock moves?
Yeah, LVMH brings up an interesting point from the standpoint of it has been a big China play. And there's other elements of the European market that are more dependent on the China recovery story, which has been a big deal. That's one of those risk factors we look at into 2024. Does China stall from the standpoint of where that trajectory is going? European margins are very elevated right now, still at near record levels, where U.S. has fallen with recession worries and whatnot. So that's still a risk factor in Europe. There are a few things that we're focused on here.
Tim, thank you so much. Tim Craighead there, our Bloomberg intelligence team leader, of course, looking at some of the risk and rewards in European stocks. Now, coming up, a key gauge of Chinese stocks slumps as much as 20% from its 2023 peak. So we discuss that next, and this is Bloomberg.
solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Welcome back to the Open, everyone. 41 minutes into the European trading day. The focus firmly on that inflation print, of course, CPI in Spain. A bit better than expected, or certainly not as high as economists had expected. And then firmly, of course, the focus is on the debt ceiling, with, we understand, Kevin McCarthy and President Biden calling individual lawmakers to try and make sure that the deal is done. Now, stocks in Hong Kong and Shanghai have also closed the session with modest gains. Still, the Hang Seng China Enterprises Index, which is a key gauge of Chinese stocks in Hong Kong, hovering close to a bear market. Well, Bloomberg's chief China markets correspondent, Sofia Ortega-Costa, joins us now from Hong Kong. Sofia, great to speak to you as always. So tell us a little bit more about the slump and why it's actually happening now.
Yeah, exactly. How did we get here? This was an index that was outperforming every single benchmark in the world only a few months ago, and now we're basically teetering on a bear market. It's really a confluence of factors. And when we had the reopening story that fell through because consumers in China weren't spending to the extent that we saw in the US and Europe after COVID-0 was scrapped. So that really kind of dented sentiment on the ground, but also geopolitical concerns. Let's not forget that there was some expectation going into this year that US and China tensions would at least thaw, and that hasn't come through either. And now we're getting actually hard data, Francine, on China's economy. The PMIs, all the kind of data for April was quite disappointing, missing expectations, even though we did get a very, very strong set of March data. So really kind of undermining the macro picture there. It's all about confidence right now. If you look at the market, it's essentially showing that investors are almost pricing in a recession right now, even though China is targeting 5% GDP growth this year. The market just doesn't believe it. Investors are not confident, and even if they are, and even if they want exposure to the China story, they prefer to express it either way. As you had Tim Craighead earlier on in the show talking about LVMH. So it's really interesting because even if you want to own China, you own European luxury instead. Yeah. So crisis of confidence and really kind of downward spiral right there.
So I was going to ask you, Sophia, what can we expect going forward? Is it going to get worse before it gets better, or is there a floor that we could find?
What's really interesting to me right now, Francine, is that, as Bank of America equity strategists put it, it's a market that's too cheap to short and too mediocre to go long. So it's kind of, we're somewhere in the middle. But what's happening is that investors are selling Chinese stocks because there's a lack of catalyst. So it doesn't take much for this market to turn around. Let's not forget what happened at the end of October and November when COVID-0 was scrapped. Nobody believed it would happen, and then it happened incredibly quickly. And you you saw the melt up there. We do have the PMI figures due tomorrow morning, my time in Hong Kong for May. So a contraction is expected there. When expectations are low, the bar to beat is getting lower and lower. So any kind of indication also of what Beijing plans to do to get that consumer to spend. Consumers are still very cautious, still saving. Let's not forget households' income was really depleted during COVID-0, and unemployment, youth unemployment, is at a record 20%. So any kind of indication of how Beijing plans to fix this could really turn the dial. But right now, sentiment is weak, and it will take a lot to move that needle.
Okay, Sophia, thanks so much as always. Sophia Arta-Acosta there with the very latest on the Chinese markets. Now let's switch to geopolitics. And China has also declined a U.S. request for the two countries' defense chiefs to meet this week. That's after Beijing raised concerns over sanctions that Washington imposed on its top general back in 2018. Well, Rebecca Chung-Wilkins, our Asia government reporter, joins us now. So, Rebecca, good morning. What is Beijing saying with this messaging?
Well, we had Beijing confirming yesterday that it was going to send a defense minister to this sort of key defense forum that's happening in Singapore at the end of this week. And just within a few hours, we had them officially rebuffing an invitation by the US to have both their defense chiefs sit down in a one-on-one meeting. So it does appear that there's been some very carefully calibrated response. And I think the message is pretty clear. Beijing is absolutely not willing at this stage to play nice. And it isn't responding to those calls from Biden, saying that there's going to be a thaw in relations. Security very much still a sticking point, something that others have called really the irreconcilable factor in the relationship between China and the US. Even while we do see, for example, these ongoing talks that have resumed between Raimondo and her Chinese counterpart discussing commerce and trade, not much practical movement there either. But the fact that there is not even a sit-down, no bilateral meeting planned so far for this weekend does also shift the focus to the rest of the region, the rest of the Indo-Pacific, quite how these US and China tensions are going to refract through the rest of the region, and how US and Beijing are going to be out courting these nations, trying to convince them that it's strategically in their advantage to align with either side.
So, Rebecca, meanwhile, China is also rejecting claims from the US that it's de-risking rather than decoupling. I mean, fine-tune that for us.
Absolutely. I think there is deep skepticism, both from Beijing and more broadly in the state media, over this attempt by the US to sort of warm up its language a bit, to walk back some of the intensity. And we know, of course, Biden, along with those G7 nations, has tweaked language, talking more about de-risking, less about decoupling, that phrase that makes a lot of European leaders like Macron, Schulz, which Biden needs to win over, makes them a little bit nervous. So there's really a shift in rhetoric that, for example, one state media commentary has said is nothing more than disguised decoupling. So very much still a skepticism, a lack of faith by Beijing that this walk back in rhetoric alone will translate to anything tangible, particularly when it comes to all of these economic sanctions leveraged by the US.
Rebecca, thank you so much. Rebecca Chung-Wilkins, our Asia government reporter. Now, coming up, Pakistan's prime minister says climate-vulnerable countries are at risk of falling into a financial debt trap. We discuss the cost of climate change for emerging market nations next. This is Bloomberg.
in Big Ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open, everyone. 51 minutes into the European trading day. These markets are a little bit undecided whether they want to go up or down. European stocks practically unchanged at the moment. The DAX gaining, but the CAC 40 is actually down 0.4%. The focus firmly on inflation in Europe. The focus also on the debt ceiling in the U.S. Now, let's also take a look at some of the things that markets are watching out for today. 10 a.m. UK time, we'll get a final reading of Euro area consumer confidence for May. 2 p.m. European Central Bank Governing Council, Robert Holtzmann, will speak at a banking event. At 4:45 p.m., the ECB's François Villeroy de Gallo will deliver comments at the Paris FinTech Forum. And there, of course, are Fed speakers later. 6 p.m. UK time, Federal Reserve of Richmond President Thomas Barkin will speak on monetary policy at an online event. Now, from farmers to governments, many in emerging markets are falling into a climate debt trap as unpredictable weather coincides with the surging borrowing costs. So far this year, cyclones have battered Southeast Africa. The Horn of Africa has been hit with the worst drought in 4 decades, and record temperatures are currently being recorded across Southeast Asia. Now, for more on all of this, let's bring in Bloomberg senior Africa reporter Anthony Sgwatsin in Johannesburg. Anthony, thank you for joining us. So how are the rising rates actually disproportionately hitting the most vulnerable countries?
Okay, well, thanks for that. The poorest countries in the world are generally the ones that are hit hardest by climate change. That's across Africa, Southeast Asia, perhaps parts of Latin America as well. And they're fairly indebted. So they're having to deal with these natural disasters, droughts, floods, rising seas, and at the same time borrow more money. But that's very difficult when you've already got a large debt load and you're struggling to pay that back. So the countries that haven't caused climate change in terms of emissions tend to be paying the highest price.
So what's the likely end result here for some of these nations?
Well, if things don't change in terms of the amount of climate finance available, we're going to see countries stepping back from spending the money they need to strengthen roads and bridges, build irrigation schemes, and build buttresses against rising seas. So every time we have a natural disaster in the future, it's going to be worse and worse. So it's a pretty dire outlook. What probably needs to be done is there needs to be more finance available in terms of grants, concessional finance, and that's something that's being debated quite heavily, and I'm sure will come up at COP28 later this year.
So, Anthony, how much of progress can we actually expect at COP28, and is there anything that could be done in the meantime?
Well, I think these things are always long-term projects. I mean, we just need to see more finance. It has previously been pledged that half of climate finance will go to adaptation, that's strengthening bridges, roads, irrigation schemes, and half should go to mitigation, which is renewable energy. But that hasn't happened. In fact, we have an estimate in the story that perhaps $1 in every $12 that gets spent on adaptation compares to $12 spent on mitigation. So that needs to change. Now, there's a strong push by organizations, countries, and I'm sure they'll take that to COP, and it'll be a major push this year. Whether there's any progress, we'll have to wait and see.
Anthony, thank you so much. Anthony Sgwatsin there, our Bloomberg senior Africa reporter in Johannesburg. Now let's also get to the Bloomberg Business Flash. And prices in UK stores are rising at a record pace as the cost of living crisis shows little indication of easing. Now, according to the British Retail Consortium, shop price inflation accelerated to 9% in the year to May. Lower energy and commodity costs saw some slowing of price rises on staples, including butter, milk, fruit, and fish. Overall food inflation remains above 15%. Qantas says running an international airline will be at least twice as lucrative in the post-COVID era thanks to new income from lengthy direct flights and deep cost cuts during the pandemic. Now, at its first investor day in 4 years, the Australian carrier gave an update on its vast fleet overhaul and turnaround plan. The forecast suggests there will be no immediate let-up to soaring fares for international travelers. And Xiaomi is deepening local sourcing in India, where the Chinese smartphone company is seeking to regain lost market share. It's the first time an Indian supplier will make an audio product for the Beijing-based tech giant. The president of Xiaomi India called it a milestone for the firm and proof of its commitment to the country. Then China's Zhengzhou 16 mission has blasted off from deep in the Gobi Desert, showcasing the Chinese space program's rapid progress. Well, state media reported the rocket took off on Tuesday morning, sending these 3 astronauts to the country's space station. Now, the crewed mission, China's 11th, comes as Beijing seeks to narrow the gap in its space race with the U.S. Well, that's your Bloomberg Business Flash. Now, the other story we're watching very closely is what's happening in Turkey after the elections, and of course, investors trying to read the tea leaves on how President Erdogan will put his cabinet. If you look at the changing tea leaves, one of the appointments that could be extremely significant would be Mehmet Şimşek, a former finance minister who advisors to Erdogan have been courting to oversee economic policy. That's according to people close to the matter. And on the back of that, banks in Turkey getting some 9%. Now, that's it for the European Market Open. Surveillance Early Edition is up next, and this is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
News breaks. No one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
DOJ or other authorities
Could face bigger challenges.
elections next.
Fed was going to keep rating World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Joe Biden and Kevin McCarthy step up lobbying efforts in Congress to win approval of their debt ceiling agreement, while U.S. futures and treasuries mostly gain. A key gauge of Chinese stocks is hovering close to a bear market as pessimism builds. Beijing rebuffs a U.S. request for their nation's defense chiefs to meet. Plus, the Spanish Prime Minister Pedro Sanchez calls early elections after his Socialist Party suffers a crushing defeat in regional ballots. Well, May inflation figures slow more than expected. Now, first thing is first, so let's check in on the markets. Now, we did start the day on a high. Now, some of those gains actually petering out with the European stock 600. You can see pretty much flat at 461, flat 0.04% higher. So not huge, but the focus is also on inflation. Of course, in Spain, that wasn't as high as expected. That could make the job of the ECB a little bit easier. The focus also, of course, in the U.S. and the debt ceiling, and we know that Kevin McCarthy and Joe Biden are literally calling lawmakers on the phone one by one to get them behind their plan. The U.S. 10-year yield for the moment holding up 3.7346. Watch out for any sudden movements in T-bills like we saw in the last 3 weeks. You can see Brent 76.36. We had a good conversation, of course, in Qatar, also with the Saudi oil minister about some of the supply and demand going up there. Remember, June the 4th is a big, big deal for OPEC to meet. And then you can see the Turkish lira 20.2962. The focus on Turkish lira is, of course, some of the investors trying to read the tea leaves of what Erdogan does next, how he puts his cabinet together. And we understand, for people familiar with the situation, that they've also been trying to court the former finance minister, Mr. Şimşek, very well respected amongst economists and, of course, amongst G20 leaders. Now, there is a little bit of a difference between the DAX, that's gaining 0.3%, also gains for the FTSE MIB in Italy, and then the CAC 40 down 0.3%. Now, the White House and Republican leaders have geared up their lobbying campaigns as they look to win support for a deal to raise the debt ceiling and avert a default. Now, President Biden has been personally calling lawmakers to support the bill with a vote in the House, likely on Wednesday, before he goes to the Senate. Well, joining us now is John Bilton, head of global multi-asset strategy at JP Morgan Asset Management. John, great to speak to you. Thank you so much for coming on. You're like Ninja John, coming into the studio to really make us smarter on the debt ceiling. Will we have a deal, or will we? I don't know what the markets are thinking right now, actually, is my question.
Yeah, well, look, I think the markets have clearly sort of seen it as being, there's a little bit of near-term relief. The X date where, you know, all hell was due to break loose, that seems to have been averted so far. Clearly, there's a lot of politicking going on in the background, as is always the case with these things. But the agreement between the two leaders, the leader of Congress and Joe Biden, is of pivotal importance. So really, at this stage, I think the market is moving its focus away from the immediate risks and more thinking and digesting, okay, what does this mean for growth going forwards? Maybe takes a tenth or a couple of tenths out of GDP long run, but by and large, it avoids this great unknown which we've all been concerned about.
So it's not the time to you know, play something with T-bills or something like that, or are there pockets of the market which you can hedge yourself in case we don't get it in time?
Well, I think you've got the mechanics of the money markets will do what they do. I mean, ultimately, there is more funding to be done, more T-bill issuance, between $600 and $1 trillion due to be issued before the end of the fiscal year in September. And of course, there's concerns among some that could lead to a big liquidity crunch. Reality, it probably transfers from other mechanisms, things like reverse repo, etc. But it's definitely worth watching. And I think the market will continue to look at that like a hawk. But by and large, at the moment, I think we're going back now to thinking about the Fed, to thinking about earnings, the usual drivers of the economy.
John, I love all your research notes because they're straight to the point, and you basically put it beautifully. It's like some of the near-term risks obscure some of the medium-term potential for a lot of the stocks. What are the medium-term potential?
Well, you know, we've been going through a downgrade cycle now for the best part of a year in earnings. Earnings were estimated, excuse me, to be coming in for this year at about $250 per share. They're now looking like they're going to come in around 220, maybe flattish to last year, maybe even slightly down. But what we're seeing is an economy which continues to function beneath the surface, albeit a bit slower. And that doesn't necessarily spell disaster for stocks now that we've repriced them lower. Are they a bit expensive? Yes, they probably are. We'd all like to buy things a little bit cheaper, wouldn't we? But the reality is, now as we look at forward earnings, we've got to start to think about 2024, 2025. And yeah, as we look beyond the near-term risks, those earnings could be going through a process of bottoming.
Unless we get a credit crunch. And I know, again, you think some of there are contained risks in regional banks and also commercial real estate, which is, a bolder call than most that come on here. But when do we know whether the consumer holds up in the US and elsewhere?
Well, the consumer is sitting on around $1.5 trillion of excess savings left over from COVID. True, it's not spread evenly across all of the consumer base. But gradually, as that gets taken down, and we see this saving maybe getting it down to around $1 trillion, $1.1 trillion at the end of this year, it means that you've got a substitute for consumption coming in there, and it's a powerful block of money. You can't have it both ways. You can't take all of that down to zero and then assume that we don't get some kind of spending boom. Consumers today are comfortable to use their savings to support consumption because the job market is relatively stable as things stand.
And that holds.
And we think that holds. We think that holds.
So the implications of some of the asset allocation, do you do it regionally, or if you want to, for example, play China, you buy, an industry that's very exposed to China, such as luxury?
Well, I think we've got a few things that we can play. Chinese stocks look extremely cheap at the moment. But, how much they are reflecting concerns about the region from a geopolitical standpoint, that's open to interpretation. But certainly it's the only region on the planet, based on our long-term capital market assumptions, which has a positive tailwind from margins. So there's a lot of good things there, but I think that you've got to be quite selective. It's a stock picker's market even today.
And you like treasuries. So when you look at, and I really love your portfolio insights because they're like neat and well put together. You have basically a high conviction on U.S. treasuries, but then if you look at some of the different currencies, so you like yen.
Yeah, we think that the yen, we're seeing it today with the Bank of Japan beginning to get twitchy as the yen has sold off. We feel that we will get movement in Japan. They're just running some way behind US and Europe. We're seeing inflation beginning to pick up there. Would the Japanese like to get off of zero interest rates? You betcha. So we do think that there's support for the yen further out.
All right. Thank you so much. John Bilton, Head of Global Multi-Asset Strategy at JP Morgan Asset Management, stays with us. We have that inflation figure actually from Spain that we need to really dig deeper and try and understand what that means for ECB going forward. Now, we also need to check on NVIDIA. We know that the chief executive of Chip, NVIDIA getting the kind of treatment usually reserved for celebrities and sports stars during a trip to Taiwan. And you can see NVIDIA gaining some 2.3%. If you look at some of the AI and the frenzy that it's gotten to some of the stocks as a whole, NVIDIA certainly had a dizzying week. I think on Wednesday, forecast revenue for the current quarter, that was more than 50% beyond analyst estimates. So that's really signaling some kind of explosive demand for the chips powering artificial intelligence tools like ChatGPT. We'll have plenty more on NVIDIA. The company's valuation is closing in on $1 trillion, a market no chip maker has ever hit. Coming up, China turns down a U.S. invitation for a meeting of the country's defense chiefs. We'll tell you why and what it means for relations between Beijing and Washington. That's next, and this is Bloomberg.
Suppose somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to show up. And you know this like I know this. I got on a lot of planes. Even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China has declined a U.S. request for the two countries' defense chiefs to meet this week. That's after Beijing raised concerns over sanctions that Washington imposed on its top general back in 2018. Now, let's bring back Bloomberg's Rebecca Wilkins. Rebecca, thank you so much for joining us again. What exactly is Beijing saying with this messaging?
Absolutely. Well, I think it's pretty loud and clear that although Beijing is going to send its defense envoy to this really important security forum that's happening in Singapore over this weekend, it's not yet ready to play nice with the US, despite this sort of walk back in language that we've seen from Biden and others. So officially, they have rejected this request for a sit down between the US Defense Minister Lloyd Austin and the Chinese counterpart. Security remains one of these issues that seemingly some view as irreconcilable, but it's very, very closely watched, of course, in this context by other nations in Asia who are finding themselves sort of refracted and increasingly troubled when it comes to treading a line between China and the US.
So, Rebecca, meanwhile, China's rejecting claims from the U.S. that it's de-risking rather than decoupling. It's fine nuances, but it can really get people going.
Well, Francine, I think from Beijing's perspective, there is no nuance here, in fact, actually, that although Biden has walked back his language and is now talking in terms of, as you say, de-risking rather than the decoupling word, which has really frightened some European nations, that actually one state sort of media commentary saying de-risking is simply another way of disguising decoupling. And I think the important thing for China, at least from Beijing's perspective here, is really whether or not we see a tangible change in the behavior. And despite those meetings on the commerce level between Raimondo and her Chinese counterpart, we still are yet to see any pullback in some of those economic sanctions that the US and its allies have levied. So until we see any real substantive change, I think this shift in rhetoric really isn't holding much water when it comes to Beijing and its policymakers so far.
Thank you so much, Rebecca Wilkins, there in Hong Kong for us. Now, a key gauge of Chinese stocks in Hong Kong has raced to earlier losses today after trading close to a bear market. Well, weak economic recovery and tensions with the U.S. have left traders with little reason to buy. Still with us, John Bilton, head of global multi-asset strategy at JP Morgan Asset Management. John, we talk about fragmentation, we talk about supply chains again being rewritten. We know that, for example, Apple's looking more towards India than China. What does that mean longer term about where you want to be invested in?
Well, I think we've got to look at the fragmentation of supply chains as being a sort of general phenomenon. We certainly have seen some big geopolitical events in recent years. You know, start with COVID. We saw some of the fragility in supply chains, the invasion of Ukraine. We've seen the stresses in the energy market. So clearly what's happening is governments are recognizing we may have hit a near-term limit in things like goods, energy, raw commodities in terms of sort of broad globalization. But make no mistake, services globalization is still running very strongly. What does it mean at the margin? I think it means that we potentially are seeing perhaps a move away from the absolute efficiency of supply chains, moving from just in time to more just in case. And that, by definition, means that you end up making investments which may not be as productive as you'd normally hope when you're putting money to work for long-term investment.
So does a just in case look like, John, for John Bilton? Is there a part, is it almost like a natural hedge, even if returns are lower?
Well, I think what we've got to recognise, it's actually it's a general economy-wide thing. I mean, you may be taking a small amount out in terms of your overall economic efficiency, maybe slightly more inflationary at the margin, slightly less growth. But also there are things that can be done, and Europe's done an amazing job really in terms of pivoting to think, well, if we are going to invest in renewable energy, if we have to think about a broader global supply chain, how do we invest for the long term and potentially create new productive assets, renewable grid, sustainable grid, etc. So it's not all bad news, because what may have done is also brought forward some thinking and some investment, which is much needed over the longer run.
But when you look at the sectors, so I don't know how you play, is China going through a downturn that means that you retrench in terms of investments that are linked to China, or do you expect policymakers to put in more to support the economy?
Well, it's a tricky one if you look at it, because actually China's done really well so far this year. Coming out of COVID, it definitely had a COVID dividend, ex-COVID dividend, very strong growth in the first quarter, in the first few months out of that. It's now slowing down to a more pedestrian level. I think we've got a situation where the Chinese authorities are likely looking at the world more broadly and thinking we don't really fancy an inflationary spiral kicking off, so we don't want to overstimulate. We're growing at a level which is pedestrian but in line with the rest of the world. It's not a bad news story, but it's being painted at the moment, I think, as a glass half empty story because of some of these geopolitical tensions, which, to be clear, are quite well reflected in valuations as things stand. So
do you buy more into China, and do you go for, how do you play China?
Well, I think, again, it comes down to it being more selective. I think we can see with this constant drumbeat of tension that you're not just going to get folks going and saying, I want to buy China just as a block. I think they're beginning to treat it more as a developed style market, more OECD style, thinking, where are the Chinese authorities putting money to work? We've got an aging consumer here. We've got a more services-led economy. Where do we need to invest in things like healthcare, financial services, rather than the old, construction and export type of boom which has led China in the past?
John, we also had that inflation figure out of Spain actually slowing more than expected, nearing a two-year low. What does that mean for the ECB? They're also going through some of the framework, right, and how they want to play it, and that will come out from here, I think, until the end of the year.
Sure. Well, look, I mean, a bit like the Fed. We saw inflation begin to turn back end of last year, beginning of this. We're now 6 months down the line still talking about have we had the last hike. The ECB are not going to take just one data point. No. It's a very welcome one, don't get me wrong, lowest in 2 years for Spain, but there's still signs of strong services inflation, even if goods inflation is cooling down. And make no mistake, the ECB, while they are no longer on the at or a little bit below 2%, they've got a more symmetric target. They have a target nonetheless, and it's a good way down from here. More rate hikes to come, to my mind.
But so are markets mispricing how aggressive the ECB also wants to be to make sure that inflation is under control? And actually, is the most painful part of going back to that target between inflation at 5% to 2% or nearabouts?
Well, you've got to remember, we hear it from central bankers all the time. Policy operates with a long and variable lag. They will keep going until they feel comfortable the trajectory is right. They will speak more hawkishly. And I expect that we're going through a period at the moment where the euro is weakening a bit because of more hawkish pricing getting put in for the Fed. Get down a cent or two lower than here, the euro could be the way to play it, because if you look at the economy in Europe plus the policy outlook, it looks like euro should probably be stronger in the medium term.
John, thank you so much as always for joining us. John Bilton there, head of global multi-asset strategy at JP Morgan Asset Management. Now, coming up a little bit later, climate change and the financial debt trap. Why higher interest rates and extreme weather are actually pushing emerging markets deeper into debt. We'll have a full roundup of that extremely important story. That's coming up shortly, and this is Bloomberg. You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it's very different, and it's not something people have had to operate in for a long time.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquay here in London. Now, let's look at what NVIDIA has been doing pre-market. It's actually gaining some 3.1%. Again, NVIDIA's market capitalization soared $1.84 billion in a single day and actually drove an AI rally around the world. That was in the last couple of weeks. The company's valuation now is closing in on $1 trillion, a market that no chip maker has ever hit. In fact, one analyst responded with a research note entitled Greatest Beat of All Time. Remember, it was last Wednesday that they forecast revenue for the current quarter more than 50% beyond analyst estimates. Now, let's get your other stocks on the move with Joe Easton. Joe, start with supermarkets. You're looking at UK supermarkets, and good morning again.
Absolutely, Fran. Good morning. So there's loads going on in the UK supermarket space today. Firstly, we had the data today from the British Retail Consortium showing retail prices up around 9% in Britain. That's the highest level since 2005. Meanwhile, the UK government were on TV yesterday saying that they might actually try and cap some prices for things like eggs and milk in the supermarkets. That could be a risk. And then finally, the third bit of news we had was Asda doing a deal for E&G's supermarket petrol stations, and this would encroach potentially on Sainsbury's territory. Sainsbury's shares down slightly, Tesco managing to stay high. They do obviously benefit from the higher food prices, but that is a bit of a mixed picture. Marks and Spencer giving up some of those massive gains that we saw following their earnings last week. That one slightly weaker. Elsewhere, I'm also looking at the staple goods space. We've had a couple of CFO changes announced. Nestlé, they are recruiting the LSE, London Stock Exchange, Anna Manns to be their new CFO. She announced she would be leaving the LSE last year. That stock is actually falling, though, because their CFO, he's been there around 8 years. He's pretty highly regarded, and this has come as a bit of a surprise that he is leaving. Unilever as well, announcing a new CFO. A bit of uncertainty at both those companies, I think, that is hitting them. Meanwhile, finally, just quickly, WPP, one of the companies benefiting from that NVIDIA push into AI. NVIDIA and WPP, the UK company, are teaming up on AI in advertising. They say this will cut costs in terms of producing adverts, finding customers to target. That's boosting WPP. The best performer on the FTSE 100 today is the advertising giant here in London.
All right, Joe, thank you so much. WPP, you can see gaining some 2%. We haven't even talked about KitKat. We'll get that, of course, in the next one made by Nestle. Let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Drones had damaged several residential buildings in Moscow early this morning. In the latest sign, the war in Ukraine may be spreading beyond the country's borders. The mayor of the Russian capital says no one was seriously injured in the attack, the biggest on Moscow since the start of the war last February. Now, Japanese Prime Minister Fumio Kishida says he will fire his son from his post as political secretary. This comes after a scandal over a party held at the PM's official residence in December last year. The premier had already reprimanded his son, but a recent poll showed 3/4 thought his behaviour was indeed a problem. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, inflation in Spain has cooled more than expected this month. We dig deeper into the CPI print with the latest on the PM's call for early elections as well. That's next, and this is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
Joe Biden and Kevin McCarthy step up lobbying efforts in Congress to an approval of their debt ceiling agreement. U.S. futures and treasuries mostly gain. Well, a key gauge of Chinese stocks is hovering close to a bear market as pessimism builds. Beijing rebuffs a U.S. request for their nation's defense chiefs to meet. Plus, the Spanish Prime Minister Pedro Sanchez calls early elections after his Socialist Party suffers a crushing defeat in regional ballots, while May inflation figures slow more than expected. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, back to our top story today in the White House, and Republican congressional leaders are trying to rally support for an agreement to raise the debt ceiling. The lobbying campaign has ramped up as the U.S. draws closer to a possible default. Well, let's bring in Bloomberg senior editor Bill Ferries. Bill, lots of lobbying behind the scenes. What's it actually going to take to get this deal over the line?
Well, I think President Biden and Speaker Kevin McCarthy are both working hard to ensure that even though they know they'll lose some members in this vote, they're not going to get 100% support. They want to make sure that there isn't a critical mass of opponents on either the Republican or the Democratic side. So far, most of the opposition we've heard from are people you kind of would have expected to oppose the deal, particularly some of the Republicans in the House who, in their political careers, have never voted to increase the debt ceiling. Some of those Republicans say that Speaker McCarthy didn't get enough for their side in the talks, but they were never expected or never counted in the calculations about who would support this. So I think Biden and McCarthy are both looking to just make sure there's no critical mass of opponents and that a vote can happen fairly swiftly this week.
So, Bill, what are the biggest stumbling blocks?
Well, I think on the Democratic side, there are some people who are very much opposed to the increased work requirements for government aid. I think on the Republican side, frankly, some members don't think the spending cuts go deep enough. You essentially have the U.S. government holding relatively flat on spending over the next 2 years. Republicans went into those debt talks arguing for a 10-year cap. So that was their starting position and probably not something they expected to get. But 2 years for some is just far too little.
All right, Bill, thanks so much. Bloomberg senior editor Bill Ferries there with the very latest on the debt ceiling. Now, Spanish inflation slowed more than expected in the year to May, nearing a 2-year low. The data supporting ECB doves who say the continent's historic price spike is actually fading and interest rate increases can soon end. Now, for more, let's get straight to Bloomberg's European correspondent, Maria Tadeo. So, Maria, what does the CPI print actually tell us and what the ECB could do?
Yes, Francine, and if you look at the Spanish numbers, which obviously they provide a preview of the many numbers that will be to come and obviously culminate with the big euro area CPI print, what it shows is that inflation is cooling, but it's also cooling significantly. Now, overall, when you look at the headline number and the core number, which again, the Spanish measure core inflation is slightly different, but the direction of travel is the same. There is downwards pressure on inflation. Now, overall, and you alluded to this before, if you are on the dovish side of the European Central Bank, a lot of this could prop up the argument that the massive part of the tightening cycle has already happened. We've now entered the final stage, maybe higher for longer, but nonetheless, the bulk of the work of monetary policy has been done, and now it's a waiting time. That is for the monetary policy. That is for the ECB decision that is due in about 2 weeks' time. There's also the national dynamics of this for the Spanish government. In theory, this should be good news. Inflation had been a big narrative in the country, but obviously with this new election that is now expected to take place on July 23rd, a lot of this is up for play. Will the economy be significantly enough to change things for the Prime Minister?
So what's the thinking behind calling this election in July? I know, Maria, you intimately understand, of course, the inner workings of Spanish politics. It seems like a big gamble after he lost some regional elections yesterday. And also the 23rd of July, we haven't really seen many elections in the middle of the summer.
Yes, and Francine, you know very well in multiple countries, especially in the south of Europe, when you get to August, you clock out. It's a summer holiday. So a lot of this means that if you're going on holiday where you have to prep a way to vote by mail, and if you were expected or wanted to take a holiday, maybe you're not going to do it on the weekend. But a lot of this could have serious implications on the turnout. A summer election is always a big gamble. But the Prime Minister has two things in mind. If you don't like what people are saying about you, if you don't like the political narrative around you, you often try to change it as a politician. That's what he's doing. He is ripping up the script, trying to insert new talking points in the conversation. He woke up yesterday to very bad media coverage, essentially suggesting that he was a loser, and not just the Socialist Party, but really the entire left-wing universe of Spanish politics. Unquestionably a victory for the Conservatives. He's trying to do damage control, but also really contain, and this is the key, the narrative that the country has already started a new election cycle, changing from left to right. It is a risky move, but he's taken big risks in the past, sometimes paid off, and he's hoping to repeat that again. Can it happen? Well, the issue is that they're running almost more than 500,000 votes behind the Conservatives.
All right, Maria, thanks so much, as always, for that great insight. Maria Tadeo there on the Spanish elections and that CPI print out of Spain. Coming up, what will be the biggest risk for stocks over the next 12 months? That's our latest MLive Pulse question. We'll speak to Tim Craighead. We'll bring you the results next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
I think we're in a challenging period right now, an anticipatory period as to what's going to happen with the debt ceiling, what's going to happen with the Federal Reserve on June 13, 14, and then what happens with the potential for a recession. But longer term, I'm in definite agreement that we should be deploying our cash.
With equities in about near the top of a 7-month range, it's really difficult to see that now, before this being solved, being the proper time for a real, true, genuine breakout.
We don't expect a big bear market either in US stocks.
The market's not pricing in a recession, far from it. I think the market's pricing in normalization. If we actually do enter a recession, and in our view, it's going to be a recession, because of the bank lending standards, because of the lagged impact of rate hikes, as the consumer savings buffer runs out.
We do expect a recession to begin sometime in the second half. And for the equity market, that means down first, and then likely back up, essentially to here.
Well, Bloomberg guests there answering our MLive Pulse question, what is the biggest risk to stocks over the next 12 months? Now, let's discuss all of this with our senior European equity strategist from our Bloomberg intelligence team, Tim Craighead. Tim, thank you so much for joining us. So first of all, what did we find out? There's like a short-term risk that is not necessarily longer-term kind of advice for stocks.
Yeah, I would agree with some of those folks that were just commenting. Our outlook into mid-year and into the second half is one of a mixed market volatility, sloppiness, if you will. At this point, valuation is not stretched. You know, it's 12.6 times forward earnings. Earnings are now coming through, if you look at 1Q earnings, much better than expected, far better actually on a comparable basis than what we saw in the States. But you also have to realize the second half earnings outlook is for very muted growth, if not even a decline in earnings before we see some acceleration in the next year. And there are an awful lot of externalities that can create volatility with stocks at this point close to record levels. So, you know, it's a funny thing in that, you know, there's a lot of worry. Stock's pretty elevated right now, and we think that that continues to cause a little give and take.
Tim, the other thing, we're all obsessed with AI, and we're all obsessed with NVIDIA. I mean, this is just an incredible story. So last Wednesday, they came out with a forecast, and I think it beat 50% beyond analyst estimates. I mean, this could be the greatest beat of all time, and it could get to $1 trillion in market cap.
Well, and it not only was it a beat by that much, but it was a beat of a big number. So it's like the law of large numbers don't count, right? It's interesting thinking about tech and where it's going. The positive is it's clearly driving the U.S. market from a sector perspective. If you look at RRG as a function, the tech stuff is in the upper right, you know, quadrant, and it's big. We don't have the equivalent here. You know, technology is 6% of the European market. It's almost 30% of the U.S. market. However, you know, tech isn't always so great. The reason why there was an earnings recession in the U.S. for the second half of last year and into early this year is because of technology. Where here, we've had better than expected earnings coming through, driven by things like luxury goods. So, you know, our equivalent in Europe, LVMH, but, you know, clearly it's a wholly different business and driver.
Yeah, it certainly is. And so the dynamics, of course, are very, very different. Tim, talk to me a little bit about risk and rewards going forward. So where do you see the main pitfalls? So there are definitely external issues that we've got to stay on top of. The U.S.-China tension, and, you know, a little of that might be European-China tension. It's a geopolitical factor that we hope doesn't go pear-shaped, but we've got to monitor. Fine. The U.S. political cycle is gonna accelerate over the course of the next 6 months. And I think discussions about energy transition and how supportive the U.S. is with that big package that's currently plowing through markets and expectations may be a topic of discussion. The biggest single European issue to me, I'm going to sound a little bit like a broken record, is margins. It sounds really basic, but operating margins in Europe right now are hovering at 15%, which is close to peak levels, only better in 2007. And margins tend to be cyclical, and yet we've plateaued for a year. I mean, you talk about this big package in the U.S., which is the Inflation Reduction Act. Does that take greening, you know, the economy and technology away from Europe and put them in the U.S.?
Well, thankfully, there is the European equivalent program.
Smaller.
It's smaller, but it's still sizable. And even though there is that, you know, make it in America sort of context of the U.S. program, there's certainly European companies that are benefiting from that spending as well. So hopefully it doesn't go away. Hopefully this continues to be a big secular stimulus that will play through the global economy.
Okay, brilliant. Thank you so much for joining us. Tim Craighead there from our Bloomberg intelligence team. Now let's also get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Prices in UK stores are rising at a record pace as the cost of living crisis shows little indication of easing. According to the British Retail Consortium, shop price inflation accelerated to 9% in the year to May. Lower energy and commodity costs saw some slowing of price rises on staples, including butter, milk, fruit and also fish. Overall, food inflation remains above 15%. Now, Qantas says running an international airline will be at least twice as lucrative in the post-COVID era, thanks to new income from lengthy direct flights and deep cost cuts during the pandemic. At its first investor day in 4 years, the Australian carrier gave an update on its vast fleet overhaul and also turnaround plan. The forecast suggests there will be no immediate let-up to soaring fares for international travellers. And Xiaomi is deepening local sourcing in India, where the Chinese smartphone company is seeking to regain lost market share. It's the first time an Indian supplier will make an audio product for the Beijing-based tech giant. The president of Xiaomi India called it a milestone for the firm and proof of its commitment to the country. China's Shenzhou 16 mission has blasted off from deep in the Gobi Desert, showcasing the Chinese space program's rapid progress. State media reported the rocket took off on Tuesday morning, sending 3 astronauts to the country's space station. The crewed mission, China's 11th, comes as Beijing seeks to narrow the gap in its space race with the US. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. Now, Turkish President Recep Tayyip Erdogan is expected to name a new cabinet in the coming days, with investors, of course, watching for any signs that he's willing to move away from his unconventional economic policies. Now, the most significant appointment would be Mehmet Şimşek, a former Merrill Lynch strategist who also previously served as the Turkish finance minister. On the back of that, I think a lot of the focus is on what bank stocks could do, gaining some 9% on the Turkish stock exchange. Well, Selva Bahar Baziki from Bloomberg Economics is in Ankara, and she joins us. So what can you tell us about this potential cabinet pick and how comforting that would be for international investors, Selva?
Yeah, Mehmet Şimşek is a former finance minister. He served in top economy-related positions before as well, and is quite a market-friendly name. He reportedly met President Erdogan in person just days before the president expected to announce a new cabinet. And that increases the possibility he may take active part in politics again. Now, in our view, appointing officials like Mehmet Şimşek, who can help restore market confidence, would just be the first step the president could take for a policy reset. Declaring a firm commitment to central bank independence would be the next. The central bank itself would need to start a credibility-building exercise, tightening its policy stance and unwinding its complex set of regulation and practices in favor of the lira, including stealth currency market interventions.
So, Selva, are there any signs that Erdogan is also willing to change his overall approach to the economy?
Well, the country's been following an unorthodox policy framework guided by the president's unconventional view that higher interest rates actually put up inflation rather than the conventional view, then down. This approach has led to a surge in inflation, severely negative real interest rates, taken a painful toll on the lira, and contributed to a ballooning external financing gap. We see the buildup in these economic vulnerabilities definitely calling for a policy pivot. Turkey has local elections coming up in March next year, and this likely means that the pivot that we foresee coming will feature a policy tightening that will fall short of what the economy needs. This may be better for growth in the short term, but it definitely means a weaker lira, higher for longer inflation, and trimmed long-run prospects for the economy going forward.
Selva, thank you. When you look at some of the, the pitfalls, how soon does President Erdogan have the markets on his side? How long does it take for them to turn if there's no significant change in how he handles the economy?
We have expectations of a high summer tourism revenue coming up. That would alleviate some of the pressure off of the lira, which has been actually suffering and recently hit an all-time low. That follows 2 currency crises in the past 5 years. At the end of the summer, when that revenue stream is also starting to run down, and with high external debt payments coming up in the last 2 months of the year, we see October as the latest point for a rate hike, potentially.
Thank you so much for all of the insights, Selva Bahar Baziki there from Bloomberg Economics. Now, coming up, why many emerging markets are falling into a climate debt trap. We'll discuss the impact of extreme weather on countries already burdened by debt. This is Bloomberg.
Suppose somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
So I think the main thing we did, which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, from farmers to governments, many in emerging markets are falling into a climate debt trap as unpredictable weather coincides with the surge in borrowing costs. So far this year, cyclones have battered Southeast Africa. The Horn of Africa has been hit with the worst drought in 4 decades, and record temperatures are currently being experienced across Southeast Asia. Now, for more, let's speak to Bloomberg's senior Africa reporter, Anthony Squatsin, in Johannesburg. Anthony, thank you for coming on again. So how are rising rates disproportionately hitting the most vulnerable countries?
Well, the countries that are most affected by climate change tend to be the poorest countries. Those are countries in Southern Africa, across East Africa, Southeast Asia, and perhaps parts of Latin America. And they tend to be highly indebted at the same time. So when they've had to pay to deal with climate disasters or to strengthen their infrastructure to deal with future climate disasters, they've had to weigh that up against taking on more debt or paying off their existing debt. And often the climate concerns get relegated to the back seat. So it's a big problem.
So what's the likely end result here for these nations?
Well, if things don't change in terms of the global outlook on climate finance, it's very problematic. We're going to see countries not able to invest to buttress their infrastructure and against floods and droughts, and build irrigation infrastructure. And every time we have a natural disaster, it's going to get worse and worse for these countries, impoverishing them more and increasing their debt. So it's deeply problematic. There is a big push to boost the amount of climate finance available to countries like this for climate adaptation projects, but that's going to need a big shift in terms of how that money is offered, whether it's grants, deeply concessional finance, because they can't really borrow on commercial terms. It's just too expensive for them.
So, Anthony, how do you see this going as we get into COP28? Is there how likely are we going to get an agreement into the winter?
I'm not sure we'll get an agreement, but I think it's going to be a major theme. We're going to see a lot of the lobby groups from poorer countries push hard for this, supported by big organizations like the Global Center for Adaptation. It's a big focus. I mean, there is money going into mitigation, which is building renewable energy plants, because you can get a revenue stream from it. But there's very little private sector investment in climate adaptation, and not really very much in terms of grants or concessional finance either. It's just a really neglected area.
All right, thank you so much, Anthony Squatsin, there with the very latest, of course, on this important conversation. He is our senior Africa reporter in Johannesburg. Now let's take a look at some of the things that markets are watching out for today. 10 a.m. UK time, we'll get a final reading of Euro area consumer confidence for May. 2 p.m., European Central Bank Governing Council member Robert Holtzmann will speak at a banking event. Then at 4:45 p.m., the ECB's François Villeroy de Gallo will deliver comments at the Paris FinTech Forum. And then there are some Fed speakers a little bit later. 6 p.m. UK time, Federal Reserve of Richmond President Thomas Barkin will speak on monetary policy at an online event. Now, the other story we're watching out for is, of course, NVIDIA. We're close to a $1 trillion market cap. For NVIDIA, you can see a 3.1% gain on the back of some encouraging news. I mean, I have to say, it's almost been a dizzying week for NVIDIA. It all began on Wednesday when their forecast revenue for the current quarter was more than 50% beyond analyst estimates. And that really signals some of this explosive demand that we're seeing for chips powering artificial intelligence tools like ChatGPT. Well, Bloomberg Surveillance Early Edition continues in the next hour.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
and Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee
The
Lyons
door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
as they deliver news
This is such an important economic issue.
He's no longer trying to run away from
That
it.
really blew some minds.
insight
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
and analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
From New York City,
In London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. Selling the deal, Joe Biden, Kevin McCarthy step up lobbying efforts in Congress to win approval of their debt ceiling agreement. U.S. futures and Treasury rise after the holiday weekend. Drones have damaged several buildings in Moscow. It's the biggest attack on the capital since Vladimir Putin ordered the invasion of Ukraine. And market woes. A key gauge of China stocks inches towards a bear market as pessimism builds. Beijing rebuffs a U.S. request for their nation's defense chiefs to meet. Good morning. Welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in for Anna Edwards in London. She's taking a long weekend holiday. Kriti Gupta in New York, just back for your long holiday weekend. Kriti, I hope you're feeling rested, refreshed, maybe even ready to solve a U.S. debt ceiling standoff.
High expectations for what happens on this side of the Atlantic, Danny, but nevertheless, rested indeed after 3 days. Danny, when you look at the markets, though, and perhaps not seeing the same amount of kind of optimism to the same extent. I mean, you're seeing it, but it's not necessarily coming off of just this debt ceiling story. You're seeing it a lot coming from the tech story, and that's really where the outperformance really shows up. 0.5% already in the pre-market. A big caveat to what we've seen in the last couple of weeks. The idea here simply that we've kind of been in this wait-and-see mode for the equity market, but now they are charging higher. How much, though, is this a function of the debt ceiling as opposed to this kind of let's hop on the AI craze story? It's a similar interesting dynamic you're seeing in the two-year yield, because even though we do have that debt ceiling debate kind of potentially behind us, remember that vote at 3 p.m. today, the two-year yield still inching lower. You are seeing a bid into the bond market. So there is that realm of caution there. And I wonder how much of the geopolitics plays into that. We're going to dive into the two-year yield hovering at about 4.52. Remember, the yield story has really been driving, is that the right word? The FX story, that's really important. The Bloomberg Dollar Index unchanged at the moment. But remember, you are seeing a tug of war between the most commodity kind of focused currencies, the EM currencies, and your traditional euro, pound, etc. Gold as well. This is really interesting because, again, unchanged here. If we were seeing a little bit more relief or perhaps less relief, we would see a little bit more action in the precious metal right now, 1944 on gold. But I think a lot of this has to do with how Asia is really factoring into the story. And this is really important. You were seeing a major divergence between what you saw in Asian stocks overnight. This is really important because China, of course, has been dealing with a bear market or a potential bear market, getting really close and then pulling a win at the very last minute. You have the same story, although to the opposite side, with the Kospi index. This is, of course, the South Korean index where a good chunk of their stock market is made with semiconductors. This is really important, higher by 1% overnight. But remember, they are actually hitting a bull market. So even though you see perhaps dodging that kind of hit, the bear market in the Chinese market, South Korea really thriving and outperforming. You saw that overnight as well. The currency story is all that more important as we see the dollar not really going anywhere. The Japanese yen absolutely is. Slight weakness there, or excuse me, slight strength there, higher by about 0.2% on the Japanese yen. This comes after the BOJ did have a meeting between some of their policymakers. Look, nothing groundbreaking there, but perhaps something in terms of reconsidering the way policy should make it. But this is all in the backdrop of growth and inflation, and specifically Chinese growth, which of course is weighing on sentiment when you look at copper, Danny, down about 0.3%.
It's that same exact Chinese sentiment that's been weighing on France. The luxury story's just been so dominated. The French indices had been doing much better, but that has started to come in. Another day of that. CAC 40, that's underperforming. Looking at the European map, Kriti, it is just kind of a spotty day, I should say, because it's not like the U.S. where it's one market, everything is off. Yesterday, you had only a few regional benchmarks not trading. The UK was off for a holiday. Switzerland, Denmark, just to name a few. There were a few others in there, too. Overall, European stocks ended the day lower yesterday, so you do see the UK, for example, having to play catch-up with it. So that means even though there's some divergences, overall, just on the surface level, Europe Stock 600 is unchanged. The worst performing stock in the FTSE 100 today is Unilever. It is down 1.5%. I don't know what it is about today, but apparently this is the day, if you're a CFO of a consumer brand, you announce that you're leaving. It happened at Unilever. It also happened at Nestle. So something's in the water, apparently, or in the baby powder or whatever those companies sell. Unilever's also going to be losing its CEO soon, too, so a lot of changes happening there. Euro, that's a little bit weaker versus the dollar. It was weaker more than what we're seeing at the moment. We had some Spanish CPI come in. Inflation not as bad as expected. That brought a little bit of relief to the ever-climbing euro. Spain also has an election to deal with. An early election is being called by the prime minister, so a lot of politics to work through there. And nat gas, it's now moving higher. Just moments ago, about 30 minutes ago, this was lower. It was at a 2-year low. I mean, it's barely higher. It is still extremely low thanks to the fact that, I mean, it's not a good story, but the economy isn't doing as well in Europe, so that means less demand for nat gas and just a lot of renewable energy. So, Kriti, I mean, this is a big change. This number right here, 24, from when it was triple digits in the middle of the energy crisis in Europe.
Yeah, it absolutely is. A lot of doom and gloom out there, Danny, but when you look at futures and you look at sentiment around the world, perhaps a little bit more green on the screen. It's all coming down to one thing where perhaps everyone breathing a little bit of sigh of relief. President Biden and House Speaker Kevin McCarthy reached a debt deal this weekend to avert a historic U.S. default. Biden spoke after the agreement was made on Sunday.
The agreement prevents the worst possible crisis, a default for the first time in our nation's history. An economic recession, retirement accounts devastated, millions of jobs lost. I strongly urge both chambers to pass that agreement. Let's keep moving forward on meeting our obligations and building the strongest economy in the history of the world.
Joining us now, Wake Up Early, Zach Cohen of Bloomberg Government. Zach, walk us through the details of this debt deal. We know that defense, for example, was a major sticking point. What do we know about the kind of givings and takings of this deal?
Essentially what it boils down to is that the White House and House Speaker McCarthy and their assigned negotiators have essentially agreed to keep spending flat over the next 2 years, which obviously in a market that has seen increased inflation, that essentially means real cuts to especially non-defense spending, although defense is being kept at around 3%. Again, that's sort of what would typically be seen as inflation numbers. And so there's a couple of other factors that are included in there. There are some new work requirements, especially on food programs, known as SNAP here. That was something that Republicans really wanted to see included, as well as a codified end to the student loan payments pause that the Trump administration had put in at the onset of the COVID pandemic. So there's enough here that both sides can really come together and say, we really need to pass this bill, and now it's just a question of actually getting the votes to do so.
Yeah, do they have it? What are been some of the reactions of the key constituents here that will determine whether it passes or not?
The first vote really to watch really is at 3 p.m. Eastern time today. The House Rules Committee. This is a smaller panel that essentially sets the terms for floor debate in the U.S. House of Representatives. You've got two more fiscal conservatives, people like Ralph Norman and Chip Roy, who have essentially said they will not support this bill, whether they would actually vote to try to block it from coming out of the Rules Committee and essentially bar it from coming to the floor. That would be a really key vote. And then I think the swing vote there could be Thomas Massie, who's a third sort of more fiscally conservative Republican. And the three of them, along with every Democrat on the panel, could cause some problems for that bill coming to the floor. That being said, we don't know that that will be the case. And so if they can come to an agreement on that, then it should go to the floor and get bipartisan support from mostly Republicans as well as enough Democrats to get it across the finish line, with probably a couple of defections, both from the right wing, the more fiscal hawks of the House, as well as more progressive or environmentalist Democrats who are not happy with some of the provisions that have been added to this bill.
Talk to us a little bit about timing here, Zach. The idea here simply being that the X date for the Treasury, June 1st, June 5th, wherever it may be. For the market, someone was saying it was back on Friday. When you kind of factor in the time it takes to actually write the legislation, put it to a vote, what are the chances the Senate clears it in time?
Senate Majority Leader Chuck Schumer has already said that he's asking senators to, be aware and be prepared to potentially stay through the weekend on Friday and then through the weekend in order to vote on these bills. If the House does pass it on Wednesday, which is the plan at this moment, then it would go over to the Senate, and where they could clear it on Thursday, send it to Biden's desk by then. But the Senate has the filibuster, which essentially allows a single senator to hold up any piece of legislation if they have concerns with. This is something that Senator Mike Lee has even threatened to do over the course of these negotiations. No word yet on whether he would actually use every tool at his disposal to do that. You've got others like Senator Rand Paul that could, throw a wrench into the system. That being said, time is running really short to get it through the Senate, which typically takes a couple of days of up to a week to get any bill across its to-do list.
Yeah, really can't afford for things to drag on. Zach, thank you so much for that update. Zach Cohen of Bloomberg Government. So now that a deal has been reached, yes, it still needs to get through Congress, but now traders are switching their worries to what that increase to the debt ceiling could mean for money markets, could mean to the Treasury general account. Joining us now is Bloomberg Global Finance correspondent Shonali Basak. Shonali, because we have this issue right now where the Treasury's coffers are so low. What does refilling it mean? Could that add pressure to the financial system?
Yeah, it certainly could, and that is the worry out there of concern, as you said, is the Treasury General Account, which has dropped to the lowest level since 2017 here. And the idea here is that issuance could really bring it back up by hundreds of billions of dollars over the next couple of months alone. This is $1 trillion through the end of the third quarter. So it's a very sizable amount of issuance that's being expected into the market. Now, Danny, of concern here is not only the sheer scale of the issuance, it is also who might be buying. Because traditionally, money markets might have been taking on a lot of that, but there is that RRP facility at the Fed. And the question is, do they start to move money out of that into these Treasury offerings that we're going to see? Or who else would be the buyer, and what other kind of pressures would that put on the market? There's a concern that the banking system might take on some of this as well at a time where people are already kind of starting to get concerned about liquidity, as well as the bank's activity to really flush the money with the economy at a time where we don't really know the path of rates moving forward.
So that's the T-bill story. That's the market read through. Let's talk about the geopolitics here. There's a lot of executives that are going to China this week. We have Elon Musk and Jamie Dimon. Talk to us about how big of a deal this is for Wall Street.
Yeah, it's really interesting. There's a great kind of teaser on the Bloomberg terminal right now talking you through all the details of this event from JP Morgan. Morgan Stanley has a separate event, but JP Morgan's event here, 2,600 bankers, 2 days in Shanghai, CEOs, executives, Pfizer, Baidu, Starbucks. So you have a very significant range of executives coming into China, and the first really large global bank presence, the American bank presence in China since the end of the zero COVID policy. There have been pretty reduced ambitions in China as the economy had been weak. Global banks are making significant job cuts, but at the same time here, there is still a lot of question around the Chinese consumer, and not just for Chinese companies, as we've been mentioning, but for a lot of global companies that are doing business with JP Morgan in China as well.
Well, certainly a lot to digest when you look at geopolitics and the China question that's kind of creating this overhang in Wall Street, but also on the geopolitical front. Shonali Bassick all over that story for us. We thank you as always. And of course, Bloomberg will have exclusive access to JP Morgan's annual Global China Summit in Shanghai. We're going to bring you interviews with JP Morgan executives, including Jamie Dimon, and more tomorrow. Coverage you do not want to miss. And of course, as we talk about China and the banking sector, let's talk about China and geopolitics for a moment. China has declined a U.S. request for the two countries' defense chiefs to meet this week. That's after Beijing raised concerns over sanctions that Washington had imposed on its top general back in 2018. Joining us now to discuss is Bloomberg's Rosalind Matheson. Roz, thank you as always for joining us. What exactly is Beijing saying with this messaging?
Well, there are a couple of things at play here. One is, in fact, that this minister is sanctioned by the US, which makes it really awkward for the Chinese to agree for him to sit down in Singapore with his US counterpart. They've been saying for years that can't happen until those sanctions are lifted. But more broadly, of course, the defense space, the military space, the security space is really the area of high tension between the US and China. And that's one area where China's very clear. At the moment, our militaries are coming into close proximity in Asia. The US government has basically accused China of supplying weapons to Russia that may end up in Ukraine. And that's one area really where they don't want to have any discussions right now. They don't want to have any meetings between senior officials. But more broadly, there is a bit of an effort to get other officials to be meeting, particularly on the economic front, their secretaries of state possibly as well, all leading up to a further conversation even at some point between the president. So there is this approach to try and put things in different compartments. Areas that are too difficult are still off limits, but can we get a line of dialogue opening? So this really doesn't preclude that broader effort to put a floor under ties.
Roz, while we have you, when it comes to the latest with Ukraine and Russia, Russia has said that it downed about 8 drones over Moscow that were aimed at Moscow, rather. Well, what do we know about this?
Well, we know this is the latest attack on Moscow. Of course, there was the drone that fell on the Kremlin earlier in May, letting off that little firework. But of course, there have been skirmishes on the border between Russia and Ukraine for a couple of months. Attacks really that hit Moscow itself, they're kind of embarrassing for the Kremlin and for the administration of Vladimir Putin, because really what Ukraine is saying, and whether it's Ukraine doing it overtly, whether it's pro-Ukraine groups inside Russia doing it, whether it's anti-Putin groups doing it inside Russia, the message is the same. We're able to reach you right in the heart of Russia. And these attacks are really about sort of like sending that message. So it's quite embarrassing for Russia that this is happening.
Right, and as you say, not the first one either. Rosalind, thank you so much. That's Rosalind Matheson from our Bloomberg Geopolitics team. Coming up on the program, pessimism grows over Chinese stocks. We're just talking about the geopolitics, but it's also a sluggish economic recovery. We're going to have more on that. And we're going to be speaking to Maria Weitman, senior multi-asset strategist at State Street, on her outlook with one hurdle, the debt ceiling, being passed. And we're going to have more on that, too, the debt ceiling, that is, with Thomas Gift of University College London. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
The debt ceiling deadline closes in.
Debt negotiations grind on.
When exactly will the Treasury run out of cash?
Keep it tuned to Bloomberg for up-to-the-minute reporting.
The contours of a deal coming together.
Waiting for a deal.
And first-hand analysis from the political and business leaders who matter.
We're not going to default. We're going to solve this problem.
We have to come to an agreement right now.
The White House stands to lose the most.
What's the trade? What's the hedge?
For continuing coverage of the debt ceiling standoff, keep it tuned to Bloomberg, your global business authority.
Well, there's a lot of questions simply about growth in the United States. The idea here of whether or not the consumer is slowing down, but what about the rest of the world? Now that you have kind of this AI craze baked into the market, now that you have a lot of the debt ceiling saga, perhaps in the rearview mirror, I don't want to jinx it, one of the big focuses moving forward is going to be the Asian story. And I don't just mean geopolitics or supply chains. I specifically mean growth coming out of China. Fears are already baked into the Asian market. For our radio audience, stick with me. We are looking at a chart here of the MSCI China Index, essentially the Chinese stock market that has been really under pressure for, I want to say, going back to, well, mid-June 2021. You're seeing a lot of pain there. And essentially the concern is just how much of the growth is slowing down. Even if China has traditionally put 5-6% growth, we're now looking at, say, 3%. Look, growth is growth, but it is still slowing down at a pretty scary rate. And that is putting a lot of fears into the heart of equity market investors when you looked at China. But at what point does that spill over into the rest of the world? Joining us now is Bloomberg Markets reporter Justina Lee. Justina, is the Chinese growth story something that's being missed by the broader European and American investor base?
Yeah, it's really been pretty surprising, like how quickly the China reopening story has really run out of momentum. I mean, if you look at Chinese numbers there, I mean, industrial profits, property investment, retail sales, all of those have already started, disappointing on the downside. And at the same time, we haven't really had much monetary easing that a lot of economists have been calling for. And so I think if you zoom out, beyond China, I think that typically is bad news for Europe, given that they do, depend a bit for Chinese growth, and the stocks tend to be a bit more cyclical.
This is the thing, if we do get past this whole debt ceiling stuff, how long can this relief rally last? Because if we go back to the fundamentals, I mean, this fundamental and example maybe aren't that great.
Yeah, exactly. And of course, the narrative then shifts to, the Fed trajectory, and people already are getting more convinced that we're going to have another rate hike coming. Of course, we have jobs numbers on Friday that will kind of shed a bit more light on that. And I mean, as you kind of discussed in the last hour, and then we have liquidity worries coming from, this debt ceiling relief. And so obviously today markets are going to enjoy it, but it does feel like there are a lot of concerns down the road.
Yeah, plenty of stuff to still keep us up at night, even with the debt ceiling gone. Justina, thank you so much as always. That's Justina Lee from our markets team. And of course, for more market analysis, MLive Go is where you want to head on your terminal. This is Bloomberg.
What's happening on Wall Street?
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. We're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. Now keeping up to date with news from around the world, here's the first word. More than 30 NATO soldiers have been injured, along with at least 50 locals in northern Kosovo, as Serb protesters clashed with police and then with NATO peacekeepers. The demonstrators were seeking to block newly elected ethnic Albanian mayors from reaching their offices. The worst flare-up in violence in years threatens an EU-brokered plan to normalize ties between Kosovo and Serbia. Turkish President Recep Erdogan is promising a team with, quote, international credibility to manage the nation's finances. A new cabinet is expected to be named this week after Turkey's longest-serving leader extended his rule by another 5 years. Bloomberg has learned the most significant potential appointment would be Mehmet Şimşek, a market-friendly former finance minister. The lira weakened toward a record low after Sunday's runoff vote. Spanish Prime Minister Pedro Sanchez has surprised adversaries by dissolving parliament and triggering a snap general election. The move came just hours after the Prime Minister learned the full extent of his party's losses in local elections over the weekend. His opponents will have less than 2 months to prepare and campaign for the July general election, which had been expected in December. Prices in UK stores are rising at a record pace as the cost of living crisis shows little indication of easing. According to the British Retail Consortium, shop price inflation accelerated to 9% in the year to May. Lower energy and commodity costs saw some slowing of price rises on staples, including butter, milk, fruit, and fish. Overall, food inflation remains above 15%. Danny, 15% inflation and counting over in the UK. Is there any country that matches that or beats that?
I don't know, but I don't think so. And it's gotten to the point where the Prime Minister said he wants to talk with supermarkets about limiting their prices in terms of things like bread, butter. That's kind of worrying if you need to do something like that, Kriti.
Yeah, it really is. And I think it speaks a lot to the idea that, look, the cost of living crisis that you're seeing in the UK, it's pretty brutal, and it might be here for a while.
Indeed, higher rates isn't going to make us less hungry. All right, coming up, we're going to be speaking to Maria Weitman, Senior Multi-Asset Strategist at State Street. This is Bloomberg.
So I notice in a couple of drugstores, even in my area, which is not the poorest area in Washington, D.C., it's a nice upscale sort of area. When I want to get razor blades, you have to go to the front of the place and ask somebody to unlock it. Why are you locking up razor blades and other things that I might want to buy?
Yes. So, this is a national problem. And, this isn't, random theft. This is organized crime. And, state legislation has put guidelines on, how much the theft that you can steal before you're convicted. So it's a $1,000 limit. But we have been partnering with other retailers and sharing our camera feed. I know some of our partners here from Walmart are here, but we're all part of an organization that's coming together that says if we can put our camera feed together and tell that person has been in our store and their store, and the numbers are higher than 1,000. So we've been able to impact these theft rings most recently.
What are the things that are unlocking key the most? What are people trying to steal the most, other than razor blades? I guess?
I will tell you, it started at razor blades because that's such a high ticket item, but it's a lot of cosmetics. But really what happens is that they take advantage of what I would call the elbow move, and they just come in and swipe a counter. And so it's just a matter of categories now.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Selling the deal. Joe Biden and Kevin McCarthy step up lobbying efforts in Congress to win approval of their debt ceiling agreement. U.S. futures and treasuries rise after the holiday weekend. Drones have damaged several residential buildings in Moscow. It's the biggest attack on the capital since President Vladimir Putin ordered the invasion of Ukraine. And market woes, a key gauge of Chinese stocks, inches towards a bear market as pessimism builds. Beijing, meanwhile, rebuffs a U.S. request for their nation's defense chiefs to meet. I'm Kriti Gupta in New York with Danny Berger stepping in for Anna Edwards in London. Danny, a lot of doom and gloom out there, but when you look at the markets, green on the screen because thank God the debt ceiling the crisis there may actually be averted.
Yes, we got there almost, pretty much. Yeah, we got there. And that's part of the reason we are seeing a reaction in Europe. Okay, sure. Why would European stocks react to something happening in the U.S.? But I mean, we always see this, right? It's just reinvigorating the animal spirits, allowing a little bit of risk on. So on a benchmark level, European stocks up 0.1%. Now that differs between which benchmark you look at. The FTSE 100 overall is down. Part of the reason is it was offline yesterday, so it needs to play catch up to a red session yesterday in Europe. But it's also being dragged down by Unilever. They announced that their CFO would be retiring. Their CEO is also going to be stepping down, so a big change at the top. By the way, Nestle today also announced their CFO is leaving. Any other CFOs want to leave? Call into the program. We're happy to announce it live on here since today seems to be the day to do that. Meanwhile, euro, it is slightly stronger against the dollar. It was weaker in reaction specifically to Spanish inflation coming in weaker than expected. Still, that's rebounding a little bit now. Also rebounding is nat gas. This did start the morning down, and it started the morning at the lowest level in 2 years. Even though it's higher now, it still is reacting from more renewable energy coming out of Germany. A worsening economic picture means less demand for things like natural gas. It's still moving lower. But hey, Kriti, we'll just notch it as another green thing on the screen in reaction to the debt ceiling being figured out.
Well, speaking to yet another green thing on the screen, let's bring it stateside here, Danny, because you're seeing the exact same thing here in the States. In fact, the idea of Buy America seems to be really in vogue when you look at futures and treasuries alike, especially on the front end of the curve. 451 on that 2-year yield, down already by a move of 5 basis points. So bond volatility is back, but perhaps in a good way, unwinding perhaps a little bit of the hedging that was really leading up to this moment. Of course, futures higher by 0.5%. Again, some conviction, some momentum earlier in the session. What's interesting, though, is that even though, like I said, this Buy America theme may be in the air, the dollar isn't necessarily catching it. And that speaks to, once again, the unwind that you're seeing. Again, if you don't need that defensive bid, do you really need the dollar? I feel like that's perhaps the theme that you're going to see there, down by about 0.1% on the Bloomberg Dollar Index. But again, the defensive kind of just seeping into the commodity space just a little bit. Gold at 1948 on that precious metal, eking just a little bit higher by about 0.3%. Danny, about 30 minutes ago, gold is virtually unchanged. So I wonder if something's going on in the commodity space that we haven't yet factored in.
Okay, well, certainly a lot to mull over there. Let's get into some of these market moves. Joining us now is Maria Weitman, Senior Multi-Asset Strategist at State Street. Maria, just moments ago, we got this headline on the terminal. NVIDIA rising 4% in the pre-market, set for a $1 trillion market cap. It's down slightly from that, but I got to ask, just on an index level on this American equity market, is it possible to be bearish as long as the AI trend is bulldozing over every bear?
Yeah, that's a really good question. And indeed, that's how we kind of see U.S. market as tech is almost kind of a sim on its own and doing really, really well. If you look at equally weighted index, not great. If you're looking at kind of performance of like traditional measures like cyclicals versus defensive, not great. So yeah, I mean, great if you're in tech. We love tech. We see a lot of potential there. Everything else, quite skeptical.
Quite skeptical, but Maria, you say a recession is hard to avoid. In the equity market, is not ready for it. You're talking about some pessimism looking in these corners of the equity market. What else needs to sell off to get us ready for a recession?
I mean, the first thing is, I mean, when I say equity markets is not ready, I mean, the first thing I look at is analyst earnings expectations. And that's just really difficult for me to square this idea that we're going into recession, bond market is pricing recession. We're thinking, well, when Fed needs to stop hiking cycle, when they start cutting, what kind of probability of recession there, rising and all that. And at the same time, you have equity earnings estimates to trough in Q2 and start rising in the second half of the year. So those things are really inconsistent to me. And either of them proving wrong, either we're not top of the hiking cycle or we are not at the trough of earnings is really difficult for equities to stomach. So that's for me the downside.
Well, Maria, when you go and look at, say, the equity market specifically, how do you evaluate the entry point here? It feels like valuations have completely gone out the window, especially when you look at kind of this tech-driven rally. To see some sustainability in this risk-taking, do you feel like you're still looking for that breadth, or is this one of those kind of FOMO moments?
I mean, first of all, I would probably say that I would rather be in bonds than stocks. So stocks really not my favorite asset class. But if you have to be in stocks and you're a long-only investor and you're looking about kind of relative performance, which stocks are less likely to go down, I think what you need to look at is not valuations, is kind of sustainability of earnings, where companies are better able to protect their earnings in a downtrend. So where we expect, as I said, we expect recession. So we expect pressure on corporate earnings, and that's why I kind of brought up a consensus estimate where I think they're wrong, they need to be lower. And okay, within that, which companies are able to defend their margins a little bit better than others? So to us, it's staples, it's healthcare, and it's actually tech. So those types of companies we like. Regionally speaking, it's probably US over Europe. So that kind of types of trade we're thinking. So it's not absolute performance of stocks, it's relative performance, and it's more defensive.
When you look at that relative performance, though, how much of the defensive trade is ultimately a growth trade at the end of the day? I'm thinking of names like in healthcare, for example, in tech, where you are actually seeing this massive investment, both fiscally, but also from these corporations themselves. NVIDIA is just one example, but a lot of these incentives from governments around the world, isn't there kind of a fundamental money investment narrative to perhaps prop up some of these gains?
Yeah, no, couldn't agree more. I think the cycle is turning. So we do need to find areas where money is still coming, whether it's fiscal, whether it's huge cash flow generation things that we've seen in tech sectors, or maybe kind of windfall profits that we've seen in the energy sector in last couple of years. So yes, where do we have money? And free cash flow generation, cash on the balance sheets, those are really important factors for stock selection.
Somewhere out there, Cliff Asness at AQR is crying over you saying that it's all about growth and the value trade isn't coming in, Maria. Okay, you like bonds.
I mean, you know me long enough. I mean, I love growth stocks. I've been in tech. I know. For years and years.
I love that. You're like, please don't pit me against my peers. I don't want that. Okay, let's go away from equities then. Let's go into bonds. You like bonds. Where on this curve are you positioning? If you were on the front end, you probably got killed as of late, considering we priced out those rate hikes. But where exactly do you like?
I mean, you have to go for safety. You have to go for safety. And I mean, the key conversation we kind of thinking is that where is that terminal rate? And so market has done kind of 180-degree of kind of turns. Is that first we started the year of, okay, Fed is going to pivot, and then no, data is stronger. Then we had banking crisis, and then we kind of data is being strong, and we are kind of crawling back higher. And our view is that inflation still hasn't been conquered. We still think, oh yeah, it's slowing down, but not fast enough. And we're seeing that terminal rate probably needs to be higher. So we're beginning to see this repricing, and I mean another hike coming, and probably pause. We don't see any cuts this year.
Yeah. I mean, the market doing a swell job as of late to price those cuts out for 2023. Maria, I'm afraid we're going to have to end it there. Thanks so much for joining us. That's the growth-loving State Street's Maria Weitman. All right, coming up, we're going to turn our gears to politics. Thomas Gift, UCL Center on U.S. Politics Director, joins us next on all things debt ceiling. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
So I think the main thing we did, which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
Everything I'm seeing come out of this negotiation gives me a source of optimism and thankfulness that we're going to get past this.
I think the clown show is over. I think there is a 100% chance this passes next week, and we're done with this for the time being.
This deal is pretty good. Not great, it's not perfect, but no deal ever is. So I think Democrats should be very satisfied with it.
But I think it does. I think that global financial markets and economic watchers more broadly will be breathing a big sigh of relief.
Obviously, when the US share market reopens on Tuesday, there's going to be a bit of uncertainty about whether it passes through Congress. So that's going to hold the market back a little bit.
And I think that it's going to be a positive development, and it does ease some headwinds that were threatening that global recession.
Bloomberg guests expressing optimism about a deal on the U.S. debt limit. The agreement forged by President Joe Biden and House Speaker Kevin McCarthy heading into a crucial final stretch with less than a week to win congressional passage before a June 5th default deadline. Joining us now from Washington is Thomas Gift, director of the UCL Center on U.S. Politics. Thomas, thank you as always for joining us bright and early from Washington. We really appreciate it. Talk to us about the nitty-gritty of this deal, though. How much of a difference to the economy is it really going to make?
Well, I think a lot of this has been priced in already, but it's certainly good news. I do think that this bill will get over the finish line because it's a big opaque item of legislation, and that allows both sides to kind of sell the proposal as a win precisely because it's so complex. There's enough room here for both sides to claim victory. Democrats can say that they safeguarded the most significant social programs. That includes avoiding any major overhauls to Medicaid. Republicans can say they achieved a reasonable degree of deficit reduction. That includes making headway into areas like work requirements for food stamps. Fundamentally, this is a moderate bill, and I think that's a good thing. We hear that there's no middle in Washington anymore, but if this deal gets inked into law, it'll be because of the political center, and it's almost certainly going to come in spite of defections from both the far left and the far right. But it's good news. I mean, this is, as some of the previous segments were saying, not an optimal bill, but we can expect that from a big compromise like this.
And talk to us a little bit about specifically when it comes to the timing of this deal. Again, one of the big concerns here was that the X date was going to be as early as June 1st. Are we going to make it in time?
Well, I mean, that's been one of the big challenges, of course, because it's got to get through the House, it's got to get through the Senate, and then it has to be passed, of course, by the president. And there is some concern, particularly if this gets delayed any further, that it might bring us past the X date. Could even see a filibuster in the Senate, which I think would be worst case scenario. Still, I think the timing works, but it's going to be coming right up to the fiscal precipice.
Thomas, you mentioned that some people said this isn't an optimal bill. What makes it not an optimal bill in your opinion?
Well, I think we've seen obviously that the debt ceiling hasn't solved structural indebtedness, and that's a real problem. Washington is operating on short-term election cycles. Policymaking is myopic. These are really band-aids that don't address the root problem of fiscal sustainability. And if you think about the political incentives, it's entirely predictable. House members, they turn over their seats every 2 years. So there's really no incentive to take a long-run perspective. And for all the talk of polarization and all the posturing over the debt ceiling, that produces an underlying consensus, which is that the federal government is going to spend more than it takes in. And the biggest divisions are just over what money is going to be directed to and the rate of increases in the debt. And of course, these ballooning expenditures mean one of two things. They either mean deferred taxation onto the next generation or enormous cost on servicing the debt, which will eventually force the government to cut large social programs because of crowding out, if not now, then later. And that will have to include, some of these so-called third rail items like Social Security or Medicare. So I think for all those reasons, it's suboptimal. I mean, it's good news in the short term, but in the long run, all of these issues are still there. And we're going to do this all over again, probably in January of 2025.
Oh boy, I mean, it happens every couple years, doesn't it? And each time we're like, how are we here again? How are we talking about the debt limit, the debt ceiling again? Is there any hope, Thomas? Give us some optimism that someday that the debt limit could be abolished.
Well, when the debt ceiling in the U.S. originated in 1917, it was set so high that it was almost implausible that the federal government would reach it. But in recent years, it's been used ostensibly to stop the government from maxing out on spending. But I'm really not even sure that it makes sense in the current climate, because all it seems to be good at is creating political turmoil and eroding the economic reputation of the U.S. abroad. So nothing's actually being remedied. Because, again, before we know it, it's going to be 2025. The debt ceiling is going to come up again, and we're just going to be looking at the exact same thing. Everyone is or should be relieved if Washington manages to stave off this crisis. But, American government has enough drama as it is, I think, without injecting even more precarity into a system regarding whether America's full faith and credit is going to be compromised. If there's no, political will for fiscal restraint, then there's no political will for fiscal restraint. But I think a recurrent debt ceiling showdown just makes the balance sheet look a little less uneven. And no one can look at this bill and say it really accomplishes responsible budgeting. So I know you are looking for some good news. I don't see it. Republicans, of course, still think that this is a useful tool to kind of cut spending, a suboptimal one, but a useful one. But I just don't see any kind of consensus for abolishing it altogether.
The irony being that the, I believe, Debt Ceiling Act is actually called the Fiscal Responsibility Act in practice. Thomas, a final question to you. In the absence, despite there not being consensus, but in the absence of that debt ceiling limit, what would be an effective way in the future, in the long term, to rein in that kind of spending?
Well, I just don't think you're going to get it, because all the incentives are to spend more and more and more. And that's why I think maybe, for many legislatures, there's really no incentive to do anything but this. I think even it's the case that a lot of members of both parties kind of wanted this fight because, they inhabit gerrymandered districts. They're playing to the fringes of their bases where ideological purity is prized over everything else. Republicans really revel in this chance, I think, to smear Democrats as profligate spenders with no sense of fiscal restraint, and threatening a default is really nothing if they can score political points with their constituents. And Democrats perceive this as kind of an opportunity to depict Republicans as reckless, kind of blow up the system extremist, which is also a message that they can exploit for their political advantage. So, of course, this whole debacle really makes Washington look even more dysfunctional. But, absent real pressures from citizens, we're not going to see reductions in the deficit. And if you look at polling, I think more and more and more, we're seeing that Americans like these entitlement programs. They like big spending. They'll say in the abstract that they want a balanced budget, but whenever you go down the line on, item X, Y, and Z, ones that they actually receive, it's kind of, don't cut my spending, cut someone else's. Well, if everybody has that sort of philosophy, then you're never going to get any kind of compromise. So that's why I wish I could offer you some optimism this morning, but I just don't see it.
Thomas, the worst thing is we're out of time, and we're going to have to end it there on a very dour note. But hey, it's realistic. So thank you for joining us, Thomas. Really appreciate it. Thomas Gift there of UCO. All right, coming up, maybe this is a good story. NVIDIA continued its rally towards a $1 trillion market cap. Bad news, though, someone who it's not a good story for, Kathy Wood, who missed out on it. She called the chipmaker, quote, priced ahead of the curve. We're going to have more on that next. This is Bloomberg.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. Almost forgot your name there for a second, filling in for Anna Edwards. Let's look at some of the stocks we're watching in the pre-market trading in the U.S. Because look, there's a lot of green on the screen, and a lot of it, Danny, is coming from really just three major names. Microsoft at the top of that pack, higher by about 1.1%, getting some approval on that very controversial acquisition of Activision Blizzard. Now they have South Korea and China on their side.
Let me first say that you're lucky we are good friends, Kriti, or else I never would have forgiven you for slipping up on my name. Second of all, I got to say, like, it just becomes more embarrassing for the UK, who, of course, did not let this deal go through. Now you have South Korea, you had Europe, too.
Yeah, I mean, I wonder to what extent if the UK will ever reverse that deal, if they start to feel this international pressure. That's certainly something you'd have to watch. And speaking of international pressure, let's go to our other stock here. Tesla shares also moving quite a bit in the pre-market. To a tune of 2.8% higher. We're looking at a share price of almost $200 on that stock. This comes after Elon Musk is actually expected to land in Beijing this week alongside the likes of Jamie Dimon, for example. This seems to be a big week for execs landing there. Remember, he's visiting his Shanghai factory, Danny, the first time in 3 years for that stock or for that CEO.
Yeah, I was going to say, I know Beijing is literally just such a gigantic city, but imagine just walking down the streets and running into Elon Musk and Jamie Dimon. What fun that would be.
They are some lucky folks over there. But as we, of course, talk about this Asia tour, the NVIDIA CEO also getting a part of it, Danny. NVIDIA actually set to become the first chip maker to achieve a $1 trillion market capitalization as its blowout revenue forecast underline the enormous growth potential from AI. Shares higher by about 3.7% in the pre-market. It has, however, prompted some skepticism from the likes of Cathie Wood. Last week on Bloomberg, Wood defended her firm's decision to bail on NVIDIA in January.
NVIDIA has become a check-the-box stock. That's why the valuation is where it is. But we are looking for those plays that have not only the vision from management team point of view and broad distribution, but also proprietary data and AI expertise.
Well, look, Danny, her take has gotten quite a bit of backlash on social media and with the investor community, but it is fair to say that Cathie Wood did actually hold on to NVIDIA till I believe about $330 a share back when it wasn't even a major tech player. Should she get a little bit of credit for that?
I mean, I don't know. Probably not if you miss out on the bulk of the rally. It's that thing we say about, bears, for example. Sure, you're right, but if you're wrong on timing, it means you're wrong. Shuli Ren has a really fantastic opinion piece out, pretty basically saying she can't spot the next bull market. All of a sudden, she now cares about valuations.
Yeah, and at the core of Shuli's argument was simply that the macro matters, despite what Cathie Wood says.
Yeah, absolutely. It does. It matters for this whole market. We learned that last year, learning it again this year. All right, well, that's it for Early Edition. Surveillance, the normal one, it's ahead. Julie Norman will be a guest among many others. This is Bloomberg.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
and Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle. It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3.
As the economic picture does.
To be okay is getting ready to make a decision.
My problem is everything else. The average stock year to date is down.
The tech names that we're discussing are driving the gains.
The bear market is continuing, okay? This is what bear markets do.
I think that the Fed's got more work ahead of it.
I think this is kind of the calm before the storm, so to speak.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
You know the kind of people that take the long weekend and add an extra day on?
Yeah.
Those kind of people?
Bramo's stretching it out.
Bramo just kind of stretching out the long weekend. I'm told Lisa's going to be back with us.
The black flies are terrible. She's up
tomorrow.
in the Adirondacks.
Is that what she is?
It's at the back end of the season up there. It's not as bad as early May, late April, but up near, it's like Fourth Lake or Fifth Lake or the Racket River in Gunga Din, and
I'm not sure what that was. What's that? You fishing?
I'm canoeing.
Oh, you're canoeing.
Come on, John.
Okay,
John,
I had no idea. I've got
Bramo's
no idea.
up there.
It looked like you were fly fishing.
Bramo's
for a
up there. She's in the back though. She's
she?
so controlled. The brats are out front. She goes back and she holds it like this to keep, so you don't go in the rapids.
Stability.
Black flies. End of May.
I can tell you've done this before. I'm sure you have many times.
Much.
Yeah, sure. Okay, Bramo's going to be back for payrolls on Friday. We hope. From New York City this morning. Good morning. Good morning. Alongside Tom Keene, I'm Jonathan Ferro. Equity futures better than good right now, up by 0.6% on the S&P 500. We've got a debt deal. The hard work starts now. You've got to get that deal through Congress. Tom, before we get there, let's get to NVIDIA. Up by more than 3% in the pre-market and like this close to a $1 trillion market cap.
Yeah, the trillion thing, it's not a parlor game to me. To me, there's a legitimacy here to many billions, and LVMH at one point, popped a big number for the French stock market. But these are benchmarks that matter, and they matter on the how they did it. And Apple did it differently than Microsoft did it differently than NVIDIA at this scale. But again, I look at it, John, as the number of employees. You're looking at 200,000 plus employees, where NVIDIA is tiny. It's 70,000, 20,000, whatever. It's a smaller company.
Magic number this morning, 404.86. 404.86 for that $1 trillion line in the sand. Right now, that stock, where are we? 402.79. You took that away too early. There we go. 402.79 on NVIDIA right now. So, Tom, that's the story. Big gains in the equity market off the back of several names, a handful of names. NVIDIA close to being a $1 trillion market cap. Tom, looking at the NASDAQ 100 up 5% over 2 days.
Yeah.
5% in 2 days. Year to date, that index now is up more than 30% year to date. This was meant to be the year of small returns. The challenges of tech last year spinning through to the challenges of tech this year.
Yeah, I think that's right. And having looked at this recently here, you look at the WEI function, and I can look at the 1 year current return, and you got NASDAQ up 7% 1 year, S&P 500 up 1%, and Dow is barely red. But let's look at the Standard & Poor's 500. This is important. This is off the bear market low, John, of October, up 17%. The bears are still rationalizing that move. But, John, what people don't realize, we're up 24, 25% from the beginning of the pandemic. Not the pandemic low, but let's say you made all the wrong decisions and you bought the day of the pandemic before it went down. You're up a good amount of, you're up single-digit nice returns.
If you stuck with it.
If you stuck with it.
If you stuck with it.
Kind of bear market it is.
Equal weight S&P 500 year to date. Do you know where it is?
I'll say negative 2%.
It is negative by about a third of 1%.
Unbelievable.
That spread, that outperformance from the market cap weighted S&P 500 versus the equal weight. Jim Reed of Deutsche Bank doing some work on this going into the weekend. Widest outperformance there going back to the late 1990s.
Well, I would go back to the Nifty 50 of the 60s as well. The way you can look at it, John, is take whatever index, the NASDAQ 100, and you say, okay, 25% is made up of X number of names. We're up to where it's 45, 51% are made up of 7 names.
Do you want to talk politics?
Yeah, I think we've got to. It's there today. We've got some great guests coming up, folks, to try to sort out the process forward, not so much the pitch battle.
This is what President Biden had to say. No one got everything they wanted. Speaker McCarthy saying something similar. We know anytime we sit and negotiate with two parties that you've got to work with both sides of the aisle. It's not 100% of what everybody wants. You're going to get some pushback on Capitol Hill over the next couple of days. I'm told, Tom, perhaps we get a vote by Wednesday. They needed 72 hours to go through this. This is what the Speaker promised. And ultimately, we're going to read through this thing and see how much pushback we get.
What's interesting, in particular for our international audience, I really want to emphasize, so we're going to talk process with Anne-Marie Horton and others here today. I believe Greg Villiers booked moments ago. And what's important here, John, is there's an American process to legislation which isn't to get in front of cable TV cameras and say, this is what we believe. That's over right now. That sort of ended over the weekend.
You hope that's over.
And what we have now is like actual step-by-step process to get to a successful outcome.
We'll go through some of that this morning. Let's go through the price action for you right now on the S&P 500. Equity futures positive, up nicely by 0.6%. Yields on a 10-year coming back in, down 7 or 8 basis points to 372. On a 2-year, 11 days of higher yields through the close on Friday. 2-year yields coming back down by about 6 basis points. Still in and around 450 this morning.
10-year came in, and I would look at the vanilla spread 2s10s, the difference between that high 2-year yield and a lower 10-year yield. John, we're out way through 80 basis points. I'm sorry, this is not a small matter anymore. Will we test the great inversion we saw a number of weeks ago? 78 basis points now in the 2s10 spread.
Brian Levitt joins us now, global market strategist at Invesco. Some guests had the courage, the confidence to stick with it all the way up. Year to date, Brian Levitt, one of them. Brian, you say this: I would view any near-term challenges as a buying opportunity. Brian, why are you still so constructive this equity market?
Well, typically, if you look in U.S. history, anytime inflation has peaked or come down, or just about any time the Fed is done tightening, you've done well as an investor over the next couple of years. So, when I say near-term challenges, look, we know that we still have to see the lagged effects of all the policy tightening, and the economy is still going to moderate or even weaken from here. But history is on our side. If you can look beyond just a handful of weeks or a handful of months, markets tend to do very well in the aftermath of tightening cycles, and we're getting quite close to the end of the tightening cycle, if we're not already there.
You guys are the buy side. You've got all your internal analysts, and you're also, of course, speaking to people pitching equity and bond ideas. And, of course, Invesco is a legendary bond house. If we have sticky inflation, Brian Levitt, what does that do to revenues of companies? They do better, don't they?
They do better, although I don't think that when we say inflation, we don't mean that inflation is going to sit here at these levels. But to your point, they're going to come down, but likely be higher. Inflation's likely going to be higher than it was in the last cycle, which you're right. That is nominal growth, and that is supportive for corporate earnings. The challenge that we have, of course, though, is that how much tighter is the Fed going to get, and how much more inverted is this yield curve going to get, and what type of economic response are we going to have? So we still haven't seen all of that. So there's still challenges here, and we would still favor more quality investments rather than thinking about what the beginning of the new cycle looks like. But again, investors shouldn't. I'd caution them on being too defensive here. Even if you have some retracement in the next few weeks or the next few months, ask yourself, will things be better over the next couple of years? Will inflation be back to a more reasonable level? Will the Fed be on the other side of this? And will the economy be recovering? And I think the answer to all those questions are yes, which means we don't want to be too defensive now.
I've got to go to the allocation as global market strategist. It's too important. U.S. domestic quality versus international quality. Which way do you tilt?
I think we need to be increasing our exposure to international quality. I mean, the U.S. does well in these in the more challenging economic environments that could be ahead of us. But if you're thinking ahead to the next stage of this, the end of tightening, well, that means the interest rate differential between the U.S. and Europe and some of the rest of the world is going to narrow, and that tends to mean the end of a strong dollar environment, which we've had for quite some time. So most investors are light on international, building up positions, closer to 15-20% international equity exposure. I think makes a lot of sense here, particularly given the valuations and the catalyst of what could be finally peak dollar.
Brian, given what you just said then, are you anticipating a change in equity market leadership?
The equity market leadership will change when we get to the other side of the economic downturn, or at least in the middle point of the economic downturn. That's when you start to see more value, more cyclical, emerging markets, smaller caps participate. So in the near term here, it's quality, it's larger cap, it's growthier, and we're certainly seeing that in the market activity. The shift comes typically in the midpoint of the economic downturn and the market getting ahead of what will be the new cycle. So I don't think we're there yet, but we're on the path to that.
Brian, what do you say to people who have been in this market, who are hearing a lot of people complain about narrow breadth in the equity market, the outperformance of uber cap, mega cap tech names like Nvidia, Microsoft and others? Brian, what's your message to them this morning?
Well, the message is that this is playing out as we think market cycles tend to play out. If you remember in the beginning of the year, the market thought we were getting a soft landing. And so you saw value, small caps, emerging markets do very well. That was call it mid-October through probably the end of February. And when inflation remained sticky and the Fed kept raising rates and the concerns of a recession became more heightened, well, that's when we shifted back towards a more defensive posture, quality, larger cap, growthier. So I'd say that these markets are playing out as you would expect them to play out, given what the trajectory of the economy is likely to be. And you'll see broader participation in these markets on the other side of this. Again, we're not there yet, but at the midpoint of the downturn in economic activity, you'll see a shift towards investors favoring those names that are going to do well in a cyclical economic recovery.
Well, a handful of names doing well right now, and one of them is Nvidia. Brian, we've got to leave it there. Brian Levitt there of Invesco. I'm not sure how many people saw this coming. So far, year to date, Nvidia up more than 100%, blasting through those levels in the last couple of weeks. Nvidia in the pre-market up by 3.5%. Year to date, as we said at the start of the program, the Nasdaq 100 up 30% and some. Year to date, TK, just phenomenal run. Just looking at the number on the screen, 403.29, line in the sand for a $1 trillion market cap, 404.86. Just short of that, Tom, at the moment.
I mentioned this last week. If I could spell here, John, you got to help me with my typing today.
Well, what are you trying to type?
I'm trying to get into the FA screen.
I'm not a mind reader.
You got,
what are you trying
EBITDA.
to do?
Their EBITDA
Right.
margin modeled out as 50 cents on the dollar. The big difference here is these guys are profitable versus 2001.
The CEO with some hyperbolic language over the weekend. You see that? Feeding the frenzy.
He was.
Just feeding the frenzy. He's still trying to spell.
I'm trying to type.
This is going to be a good week, isn't it?
S-A-A-A.
Judy Norman of UCL on the debt ceiling. Coming up next.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. The White House and Republican congressional leaders are gearing up lobbying campaigns to win approval of a deal to avert a U.S. default. Both President Biden and Republican House Speaker Kevin McCarthy expressed confidence they would muster the necessary votes. The bill will suspend the debt ceiling until January 1st, 2025. In exchange for Republican votes for the suspension, Democrats agreed to cap federal spending for the next 2 years. In Spain, Prime Minister Pedro Sanchez is trying to hold on to power after a crushing defeat in Sunday's regional elections. Sanchez surprised his adversaries Monday by dissolving parliament and triggering a snap general election within hours of learning the full extent of his losses. Spanish parties will have less than 2 months to prepare for a campaign for the July 23rd election, which had been expected in December. When Jamie Dimon takes center stage at J.P. Morgan Chase's China Summit Wednesday, he'll face a business landscape that looks vastly different from his visit 4 years ago. In 2019, the last time the flagship event was held in person, the U.S. bank and its Wall Street peers were gearing up to cash in on China's opening of its $60 trillion financial sector. Today, U.S.-China tensions are high. The Chinese economy is sluggish, and Beijing is cracking down on foreign businesses. Elon Musk's private jet has landed in Beijing in the billionaire's first visit to China in 3 years. As sources tell Bloomberg that the Tesla chief is expected to meet with senior Chinese officials, including Premier Li Qiang, as well as a visit to Tesla's Shanghai factory. The EV maker is nearing the final stages before starting trial production of its revamped Model 3. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo, and this is Bloomberg.
covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
I think this agreement frames all of that from limit, save, grow. It doesn't get everything everybody wanted, but that's in divided government. That's where we end up. I think it's a very positive bill. I think at the end of the day, people can look together to be able to pass this in the House and the Senate together.
The agreement prevents the worst possible crisis, a default, for the first time in our nation's history. I strongly urge both chambers to pass that agreement. Let's keep moving forward on meeting our obligations and building the strongest economy in the history of the world.
The President of the United States and Speaker McCarthy, the hard work starts now, getting this bill, this agreement through Congress. Speaker McCarthy claiming 95% of his party were excited by the deal. I can tell you Wall Street, not so much excited, just looking forward to not talking about this anymore. Your equity market on the S&P 500 positive by 0.6%. Equity futures positive, a lift off the back of further gains for NVIDIA. That stock is just on fire year to date. It's up another 3% and some, adding some more weight to the rally in early trading. In the bond market, there is a bit of rally for treasuries. Yields are lower on a 10-year right now. We are down by about 7 basis points, 372. On a 2-year, we're down about 5 basis points to 450. This from Citi's Andrew Hollenhorst. 200,000 new jobs on payrolls Friday. Another 0.4% month-on-month core CPI reading on June 13th would cement a hike on June 14th. That's the Citi view, long-held view, hikes in June, hikes in July.
Yeah, and Jerome Powell's not going to declare victory, as is the governor of the Bank of England, because they're looking over his shoulder. Jerome Powell's looking across the Atlantic at 9% retail store inflation in the UK. The stickiness is out there, John. Countries, maybe Spain did a little better, but the stickiness is out there. And, you know, they're just going to move forward with their strategy. It's all there is to it.
And more recently, the dollar strength is out there too. Just on the currency pair, the euro against the dollar, a break of 107 a little bit early this morning. So 106.73 is the lower of the session at the moment, about 107.32, Tom, going into payrolls in a couple of days' time.
And very quickly, you look at euro yen there, take out the dollar with a 150, really hasn't moved yet. It is weaker euro, weaker yen. We're going to give you a lot of different takes on what's going on in Washington today. Of course, Anne-Marie Horton with Balance of Power is scheduled to be with us. Greg Valliere will be with us much more on the politics and the process. But right now, I thought we'd look at the debt process away from people standing in front of TV cameras talking their book. Julie Norman's book is To Root for the Baltimore Orioles. She's co-director of UCL's Center on U.S. Politics and joins us with the Orioles well over 600 ball. Professor Norman, explain particularly for our international audience this unusual civics process in America. This debate is not over, is it?
Oh, it definitely is not, Tom. If anything, it's really just getting to the hard part now. We have this framework deal between Biden and McCarthy, but now it needs to get through 2 houses of Congress, both of which are very closely divided. So we have McCarthy in the House saying over 95% of his caucus is supporting this. I think that's pretty aspirational at the moment. It's going to be tough to get this through the House, and then again have to get through the Senate as well before it finally gets to Biden for signature. So still a long way to go and still a lot of politicking in between.
I actually went back and looked today at Thaddeus Stevens in the Daniel Day-Lewis, Sally Field movie Lincoln, jawboning one of his fellow colleagues about changing his vote on the Emancipation Proclamation. Are the Republicans in the House going to be jawboning like Thaddeus Stevens in the movie Lincoln?
It's possible, Tom. I think we might see all kinds of theatrics in these next couple of days. I mean, I think we know for sure that many in the Freedom Caucus are not going to support this bill. We've seen that very vocally already. I think we'll see a test already this afternoon with the Rules Committee needing to decide what kind of shape even any kind of voter discussion this bill would look like. But there are many Republicans who are open at least to supporting this or haven't been a firm no. Democrats, I would say, are also probably split down the middle. Many in the Progressive Caucus are not going to go along with this, but many in the New Democrat Caucus and the more pragmatic, moderate kind of side of the Democrats might be able to get this over the line.
Should we expect amendments in the House and then it goes to the Senate? Can there be amendments in the Senate as well?
So we have heard threats of amendments from both, and that is one thing that could not only, stymie the process, but also just slow it down so that we kind of get to the X date, just this amendment process. So that is part of it. I think Schumer will try and get it through quickly. McConnell so far has been pretty much leaning his weight into it, but we've heard Lindsey Graham, other senators say they're not going for this, and others who might use it as a sticking point to try and get through some of their own pieces as well.
Julie, can we talk about substance? What is the source of deep unhappiness at the fringe of either party?
Yeah, well, it's interesting, John. I mean, this bill, it's such a test for the center, really. And so it's a pretty straightforward bill, I would say. But what it does do is just not go far enough for Republicans who really wanted to see much deeper cuts for a much longer period of time. And it goes a little too far for progressive Democrats who didn't want to see any kind of change for work requirements, for aid, for food stamps, for these kinds of things, and didn't want to have to see any kind of clawing back from some of the other budgetary decisions Biden had already made. But in the big scheme of things, it doesn't change things massively in terms of what we'd expect for a spending bill later this year anyway. So I think Biden thinks this is pretty much a good deal for Democrats in the long term, and for McCarthy, probably what he was going to be able to get through this as well. So for a centrist moderate, it works, but for the wings of the party that are quite strong right now, it either goes too far or not far enough.
With that in mind, where does that leave Speaker McCarthy's future? Is there a big question mark over that?
There is to a point, but honestly, we haven't heard strong threats to McCarthy yet from the GOP. I think there are some Democrats even who would be somewhat sympathetic to him through this process, but that hasn't come up as much as one might think it would. My guess is behind closed doors, there's some of those murmurings, but it doesn't seem like they're really looking to push that button just yet. What I do think more is McCarthy is obviously going to be under scrutiny this week with to what extent he can whip these votes.
Julie, you are world acclaimed on the measurement, the politics, the process of terrorism. If we flatline the Pentagon or even keep it low single digits, real spending growth, can they project worldwide to defend us from terrorism?
Well, Tom, I think one of the key things in the bill is that military spending is supposed to continue to increase slightly, which is something that Biden agreed with and that Republicans do. And I do think that's one thing that'll keep a lot of members of both parties on board, because you don't want to see a gap in security preparedness for terrorism or for anything else that's going on right now. So I do think that's key. And another thing to underscore here is the closer we get to the X date, God forbid, if there's going over the cliff, that is a risk to national security. It cuts the ability to pay service members, to fund the military, and just makes the U.S. much more vulnerable.
Treasury cash balance, $39 billion.
Thank you. Did not know that.
I mean, we were getting close.
Coming down.
No surprise we got a deal over the weekend. Julie, thank you. Julie Norman there, co-director of the UCL Centre on US Politics. That was my last read of the data. Wall Street's moving on. This is what Goldman's got to say. Goldman Sachs and a team led by Jan Hatzius, calling it a major reduction in uncertainty, a minor reduction in spending. A lot of economists on Wall Street putting out some estimates about what it will mean for growth. They said a spending deal looks likely to reduce spending by 0.1 to 0.2% of GDP year over year in 24 and 25. Pretty lightweight stuff based on what Goldman's got to say.
Yeah, we're going to have a lot more comments on this. I think Greg Valliere talks about, it's a headwind and well, maybe it's a light breeze here is what we've got going on. This will be good analysis. And John, I'm going to be honest, I'm going to wait for the Congressional Budget Office. Again, for those of you international, this is the analyst of our fiscal policy. It is bipartisan. It's not politically tinged. They're going to walk through this thing at some point.
And then maybe we can walk on, move on, and Tom talk less about debt ceiling drama, barely talked about the banking situation over the last couple of weeks. And then we can focus on the data again.
Yeah.
Payrolls on Friday. We're looking for something again in and around 200K. I'll give you a sneak peek of our survey so far. The median estimate is 190,000, looking for unemployment to tick just a little bit higher from 3.4 to 3.5. But given where Federal Reserve projections are for year-end, which is 1 full percentage point above that level, Tom, there is a belief from some, including from Citi, that this Federal Reserve is going to do more when they convene, when they meet in the middle of next month.
But wait, the simplistic view here, folks, is if the Fed, quote unquote, does more, that's bad for the market. And there's a lot of people pushing back against that certitude.
Well, before we get to policy, you've got to start with the data. Is bad news, and good news, good news. We've got to do that ballet, that dance that you love.
Yeah, I can't stand it.
Good data now, I think, is good news, isn't it?
I'm looking for a recession. Is it out there? Did you see it this weekend in New York? I didn't see it.
Is NVIDIA looking for a recession?
You know, you're on the Hamptons, my God.
yeah, right. From New York, this is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There is only one stock to watch right now, and here it is. NVIDIA, absolutely flying year to date. Flying at the pre-market too, up another 3 or 4%. 403.82, just short of the $1 trillion line in the sand. 404.86 is the number we're looking for. Now, typically, I don't care about this stuff. I don't pay much attention to it. $1 trillion market caps, round numbers, TK, not really my thing. But this is phenomenal because we've added so much weight to this name in such a short period of time. We're talking about hundreds and hundreds of billions of dollars of market cap, TK, in weeks.
And this is not Apple, not Amazon, not the rest of them. 26,196 employees. This is a tiny company with a ginormous valuation, 55.5. It's like LVMH. Let me get that up right now, John, just to give you. It's apples and oranges. I get that.
Sure.
French luxury company, but LVMH is 30 times earnings, and NVIDIA is at 55 times earnings. Apple, if I do the same study, somewhat closer to Apple's 30 times earnings. That's at premium price for NVIDIA.
It's just amazing. 403.75. Heard a lot of people describe it as follows. A gold rush and NVIDIA are providing the shovels. That seems to be the takeaway. Dan Ives sat with us of Wedbush on Friday.
Dan was great.
Said something similar. The CEO was speaking over the weekend, TK, and I think this is the difficulty for a lot of people who aren't in the name. What's real and what's just feeding the frenzy? The NVIDIA chief saying that tech was at a tipping point, said things like this could be a new age of computing. All of those things, it's just pile on, pile on, pile on.
It's pile on there, but I'm waiting to hear comments from the bigger companies that have to buy these expensive chips from NVIDIA. And what I'm hearing in interview to interview, and I think Neuberger Berman said it best, they're looking at margins coming on here where you get some significant increase in margins out 3 years, out 5 years. Are we modeling in that now? Maybe.
We take it from that single name to the index level, a lift in the equity market, S&P 500 futures, NASDAQ futures, all up quite nicely this morning to kick off the trading week. We're up by 0.6% on the S&P. And there it is again, just monster outperformance on the NASDAQ 100. That index is up by more than 1% this morning. Year to date, it's up by more than 30. It looks like in about 3 hours' time, we'll add some more weight to that rally. In the bond market, helping things out maybe, yields lower, but yields higher didn't stop things, did it? We were down about 5 basis points on the front end on a 2-year to 451. We're down 7 basis points on a 10-year to about 372. So you get more inversion, TK, which is what you've been looking at over the last several weeks or so.
Now. We're not up to 109 basis points, a full percentage point difference in yield between the 2-year and the 10-year. We're not there yet, but, it's something worth watching today. Right now, we're going to pause, and John's going to weigh in here because I think the first time I ever saw Jonathan Farrell was on the front lawn in Frankfurt, freezing, getting his 30 seconds of fame in front of the ECB building. So I'm going to set this up, and then John's going to wax philosophical because he lived the 25 years of the ECB. Eric Nielsen is the chief economic advisor at UniCredit, and Christine Lagarde knows he is the optimist on Europe. He joins us now with his important note on the 25 years of the ECB from Duisenberg to Lagarde. Eric, what has been the biggest surprise for you in this nascent institution getting out to 25 years? What's the thing from Duisenberg to Lagarde that surprised you?
That's a very good question, John. Sorry, Tom. I think it is the combined picture of agility. You never know what comes your way, and as we know, when I wrote, the ECB was not a perfect institution set up, or let me put it this, or better put, the economic pillars that should underpin a central bank were not perfect, so they had to adjust with policies and operations, and they did very well indeed.
One of the great questions we have coming out of our coverage of the International Monetary Fund meetings is the new Europe. Is it a more vital Europe, somewhat like Nielsen optimism, or is there still a Eurosclerosis out there?
No, I don't think that would be my description of it. Europe has done very well in growth numbers. We have had our hiccups here and there. The key point to take away from the present situation is that compared to America, Europe was hit by a massive terms of trade loss with the commodity price increases, while the US at the same time gained a little bit in terms of gains in terms of trade, and then gained, of course, from a much more powerful fiscal stimulus during the COVID and that has been going on. So the underlying or the shocks that comes into Europe right now and that the ECB has to deal with is very, very different. So if I have a concern right now, it is that the ECB is reacting in policy terms so similar to the Fed, even though the shocks are so different.
Eric, what do you think the optimal policy response looks like then?
Oh, I mean, it's a tough one, and it's easier to sit here and talk about it than actually do it. The key issue, of course, is that it is a supply shock in Europe, and therefore you should do as little as possible. In an ideal way, as you originally saw it, should do nothing. You sit through a supply shock as a central bank. But it was so big and oncoming, and so many uncertainties were at play, including the relative price changes between services and manufacturing and all the rest of it, so that they had to move. And I think that's right. Maybe I would have moved less, and they're right to have moved faster or moved when they moved. But I think they should have stopped a little bit earlier and then use their great standing and great communication skills to explain that they would not let inflation expectations run away from us, which never happened, right? So I think the risk is that we are paying a price down the line for too tight policies.
Eric, when you say great communication skills, is there a little bit of sarcasm laced in that statement?
No, I didn't mean it that way. No, I didn't mean it that way. The issue here is that there are so many people speaking at the ECB, and that's natural when there are so many people involved in policymaking. I meant it sort of across, and I meant it actually positively. And if you look across the clear the statements at the press conferences, and I, for one, would like a more intellectual conversation with journalists at the press conferences, for sure. There's no doubt about that. But the agreed message is there. But we then add what particularly Isabel Schnabel and Philip Lane, for example, communicate continuously. I think this is a very good communication in terms of how their reaction function is and how they think about the data. I don't agree with all of these details, but I understand them, and that's what the communication is about now.
I'd love to get your view on growth as well. There seems to be a takeaway from a lot of people at the moment, Eric, that China is slowing down. It's not picking up relative to expectations in a way that some people had imagined. And for that reason, Europe's going to face some headwinds. You've seen the weakness come through at the euro. Euro broke to about 106 briefly a little bit early this morning. Eric, what's your assessment at the moment of the European economy? Is there weakness emerging from your perspective?
Yeah, for sure. For sure. So I think I am amazed how similar all the forecasts are, from commercial forecasters to the IMF and ECB and everybody else, given all the uncertainties. But when you talk to the forecasters who are actively making these forecasts now and ask them how the risk profile is, it's stunning how easy it is for everybody to agree on the downside risks and have a hard time thinking about the upside risks. So I think the downside risk is clear, and if I were a forecaster still, I am pretty sure I would put in a small recession later this year. There's some fiscal tightening that's partly made up by EU money. There is a huge monetary tightening, and we are just seeing the beginning in the first quarter. You saw from the bank lending survey the effect of this, and it's coming now big steam. And then the little we have from the export side, that usually come rescued us. As you said, you see it with China now, and we saw Germany actually being in recession now, hitting us quite hard. So I think it's difficult to imagine that we don't kind of skirt a little bit below zero.
Eric, what is the elasticity or responsiveness of the financial system of Europe to higher interest rates? The banners are so different on the Bloomberg. I mean, Europe's got a real authority to it. John, help me here. They're raising rates. We're going up 25. We're going up 50. And we're setting dates and all that. But as Trichet would say, to diffuse that monetary policy through 17 or whatever nations, how responsive is the system to higher rates? Is it like America, or is it unique?
No, it's not unique, Tom. And I agree. This is the question. I've been out seeing clients in Europe for the last couple of weeks, and that's the number one question you have now. Given what we've seen with Credit Suisse and in America, what's the outlook for the financial system in Europe? And I'll say the following. If you had told me at any time in the last few years that we are going to get the biggest real income shock to the economy I've seen in decades and the biggest tightening of monetary conditions at the same time, what would you think happened to the financial system? It would be foolish not to think there will be problems here and there. It's inevitable. I mean, but so that's the first statement I will make. The other statement is that it is impressive how strong the bigger part of the financial system is, particularly the banks supervised by the ECB, have been and still are. And I certainly see no reason to doubt what virtually all the bank analysts out there and the ECB say, that those big banks are solid, are good, and can sustain the shock to the system. So I'm not worried about systemic issues, but I would be very surprised if you don't see something in the fringes over the next year.
Eric, wonderful to get your view on things, as always. Eric Nielsen there of UniCredit, looking for potentially a small recession by the end of this year. And I have to agree with Eric on those points, Tom. This idea that we got this aggressive tightening from the ECB and the lack of damage we've seen relative to expectations has been absolutely phenomenal. You started the conversation by reflecting on the late Wim Duesenberg, who was the first ECB president. What are you most surprised about? I think with the exception of maybe Eric, who's been very constructive on the experiment, even at its darkest days.
Yes.
I think a lot of people would be most surprised that it's still going. That it's still going, Tom, at the moment. It's pretty impressive.
Yeah, I think Martin Feldstein, the late wonderful Martin Feldstein of Harvard, was very articulate about this, about the core of Europe and their dominance. And of course, a test with Greece and Italy here a decade ago, but it's not as homogenous as America. I just think is the simple lesson, and that's still true today.
You talked about the diffusement, the channel for monetary policy to go through as well. Tom, big public market here in the United States, huge debt market. In Europe, all about the banking channel.
I'm sorry.
All about the banking channel.
The conversation at the IMF with Gentilini, the former prime minister of Italy, he was appalled at the play of AC Milan.
We won on the weekend. Qualified for the Champions League, I'll have you know. He was a Juve fan. He's a Juve fan. Okay, next hour, we have a debt deal down in Washington, D.C. And if it passes, you could get $1 trillion of T-bill issuance before year end, so that might be fun. Talking about that, Ed Husseini, the Columbia Threadneedle man himself, just around the corner from New York City. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia said it downed 8 drones aimed at Moscow early today, the biggest attack on the capital since the start of the war with Ukraine. The Kremlin has intensified its bombing campaign ahead of a long-awaited Ukrainian counteroffensive to retake occupied territory in the country's south and east. Ukraine has accumulated billions of dollars of weapons from its U.S. and European allies for the military assault. Turkish President Recep Erdogan is promising a team with, quote, international credibility to manage the nation's finances. A new cabinet is expected to be named this week after Turkey's longest-serving leader extended his rule by another 5 years. Bloomberg has learned the most significant potential appointment would be Mehmet Şimşek, a market-friendly former finance minister. The lira weakened toward a record low after Sunday's runoff vote. Deutsche Bank says its hiring spree in mergers and acquisitions will help it boost ranks and take back some market share from its Wall Street rivals. The German giant has signed on M&A veterans from peers including Bank of America, Credit Suisse, Lazard, and Citigroup over the past couple of months and plans to hire more. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. Moment news breaks. No one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
This is the new computer industry. Software is no longer programmed just by computer engineers. Software is programmed by computer engineers working with AI supercomputers. These AI supercomputers are a new type of factory. 15,000 startup companies in the world built on NVIDIA today, building on NVIDIA today, and 40,000 large companies, enterprises around the world are using accelerated computing. We have now reached the tipping point of a new computing era.
Feeding the AI frenzy. Jensen Huang there, the CEO and co-founder of NVIDIA. That stock is just lighting it up big time year-to-date on the S&P 500. Biggest gainer year-to-date so far. I think we imagine it finishes there, but it is only May and we've got gains of more than 100%. So let's see what happens in the second half of 2023. We're adding more than 3% to the rally on NVIDIA, 402.37 and just short of a $1 trillion market cap. The moves right there helping out the S&P 500 and the NASDAQ in a much bigger way. The NASDAQ up by more than 1% once again. The S&P 500 this morning positive by 0.6%. A debt deal in Washington, D.C. means yields are lower this morning at the front end by, let's call it 5 basis points to 450 on a 2-year going into payrolls on Friday. And this is your number, your estimate in our survey so far. 190,000 is the estimate. Tom, going all the way back to spring last year, on the day of the release of payrolls has beaten expectations every single time. So let's see what happens this Friday.
You've done this twice correctly, which is payrolls is early this month. I believe it's a June 2 date, John. And geez, that's important. You know, if we sustain over 200,000, I believe you said Hollandhorst is looking for that.
25 in June.
Yeah.
25 in July.
200,000 jobs.
He thinks 200,000 jobs gets it done. And maybe you get a print of 0.4% on CPI on June 13th.
It's going to be an eventful 4-day week here, and we're going to be part of that with the market moving up. Futures up 24 right now. We thought we'd dive into this a little deeper than the back and forth of OMG, NVDA. Mandeep Singh knows that when you do double E electrical engineering, it starts out with the Wheatstone Bridge, and then you cross a bridge over to differential equations, and heaven forbid we get Maxwell and magnetism right. Mandeep Singh owns the high ground at Bloomberg Intelligence. Mandeep, this is a kid out of Taiwan off the boat, Oneida, Kentucky, population 410. He is a textbook immigrant. He parachutes into Corvallis in Oregon State, and magic happens. When did the magic at NVIDIA happen?
I mean, this has been going on, I think, for the last almost 25 years, and he has built that, in terms of focusing on a niche segment and then really expanding the scope of computing, and in a way that it's so innovative in terms of disrupting the existing framework around leveraging CPUs to really a new style of computing. And I think that is where everyone has been caught off guard with the pace of the change that it can bring. But clearly, the innovation is there, and that's why everyone is so excited.
Take us not to the hopes and dreams of AI 3 years, 5 years, 10 years out, but the here and present, not danger, but the here and present reality for NVIDIA. Can they sustain the growth now of a 55 multiple stock?
Well, so I think it's a little hard in terms of looking at it, beyond 2023, simply because right now we have easier comps and we are just past this, cloud digestion phase. So this happened to be a much shallow inventory correction. And what everyone is expecting is for the market to really do well in terms of the demand side on the data center side to hold up for the next 6 to 8 quarters. I don't know if that will be the case given how much uncertainty we have. But one thing we know is there is this secular shift from CPUs to GPUs. And, really what they're selling is almost 200,000 for a server box that used to cost 10,000. So look at the ASP increase that they have been able to generate from this new device that they have created. And that is quite powerful. When you see a company, kind of raising ASPs like this, that is very positive for the gross margin. And I think that's what you're seeing in their results right now.
Mandeep, the cheat guide to the market action this morning is just to say, well, NVIDIA's up because they unveiled some new products. I wonder how many people actually know what those new products do. Mandeep, you're someone who probably does. Can you tell us what this new product lineup is?
Yeah, so the biggest use case is around training these large language models. And what you need for this is a lot of computational power, and a GPU can do it in a very short period of time compared to the traditional CPUs. Even if you stack a lot of CPUs, you can train these large language models. So one thing they have proven is not only is it an innovative way, it's the only way you can train a large language model. And think of, our computational requirement across the board, across industries. You need this type of technology to enhance the productivity. And that's something that's not it's going to drive a massive refresh cycle. And that's why everyone is so excited, because the existing market needs to refresh to the new way of computing. And that's a pretty large market when you think of semiconductor as a $600 billion market.
Who is their competition?
Competition would be, AMD, Intel to an extent. The problem is they're so far behind, especially Intel, in terms of focusing on GPUs. And that's where, they missed the boat for at least 5 years, where they just didn't think this market was big enough. And they can still catch up. I mean, there was some rumors about NVIDIA partnering with Intel so that Intel can make their GPUs, but that's a foundry play. I'm talking about that 200,000 ASP component that NVIDIA is selling. Who can compete with that? And I think AMD is the closest right now for that.
Okay,
along with the hyperscalers.
And the simplistic view of a fool like me is it's about gaming. Forget about that. What does NVIDIA mean, Mandeep, for Procter & Gamble? For Minnesota Mining and Manufacturing, for Ford Motor?
Yeah, so, these companies spend billions of dollars on their IT, over time. And when you think about their data center footprint, that will completely go away. It will be on cloud. And what large language models do is not only you need to rent the basic cloud capacity, you will run your AI on cloud. And that's where NVIDIA has positioned itself really well. It has partnered with the likes of Microsoft. I don't think all the hyperscalers are on board with NVIDIA, but for a traditional enterprise, they don't need to spend on IT anymore, especially on the infrastructure side. They will outsource everything to these hyperscalers, and NVIDIA is trying to becoming one of them.
Mandeep, when he talked over the weekend, I think everyone's BS star is up. You can translate what that means. Mandeep, when he talks over the weekend and uses the hyperbolic language like tipping point, the dawn of a new computing age and all those things, Mandeep, there are some people out there who just don't have the specialized knowledge to really understand where this is going. And it's a market of faith for many people in the stock market who just see the momentum and just think, I need to be a part of this. Mandeep, do you have any kind of cheat guide whatsoever to draw a distinction between what is real and what might be BS?
Well, so I look at, who are the key players who will determine the fate of this market. And they are quite concentrated. I mentioned about hyperscalers. Then you have got Apple on the smartphone side. What will Apple end up doing in terms of large language models? That will have a big influence in terms of the size of the opportunity for someone like NVIDIA. If they do everything in-house, then they're going directly to TSMC. Right now, NVIDIA has the technology, it has a monopoly, but it's going to TSMC to make its chips. if Apple does the same, and granted, they may not have that technology that NVIDIA has, but clearly you've got, 8 or 10 players that will determine the size of the opportunity and how this shakes out. And that's where I think you have to watch out for what they do, not what they say. And only time will tell what the hyperscalers will do. I can't imagine them paying $2 billion to NVIDIA every year to upgrade their GPUs. It's just too much CapEx. And that's what we're talking about here in terms of the annual CapEx spend on something like this.
Mandeep, excited for your coverage on this story for the years to come, never mind the weeks. Mandeep Singh there of Bloomberg Intelligence. NVIDIA in the pre-market, Tom, up by more than 3%.
I don't know what to make of it. I pretended this, but trust me, John, in electrical engineering, I went down in flames. They sort of stood the door here,
At least you took the class.
I took it was a quality C on its way to a D. But these guys are smart, and I can't parse success 3 years out with a story you talked about this weekend.
Sure.
That's why we need to talk to these experts.
Agreed. Coming up, someone also really smart, Katie Kaminsky of Alpha Simplex.
Yes.
Her views on this bond market was leaning the other way in treasuries recently after the moves we've seen over the last couple of weeks. Let's see if that paid off in a big way. From New York City this morning, good morning and welcome back.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Forget a degree in finance. Go for a career in tech instead. That's the advice from the latest Bloomberg survey of professional and retail investors. Only 1 in 5 Wall Street professionals say high school seniors graduating this year should follow their footsteps and go into finance. About half say that Gen Z's best bet actually lies in the tech sector, and that's despite all those recent layoffs at companies like Meta, Amazon, and Google. Still, hiring trends paint a rosy picture for those with a background in tech. Industries ranging from auto to the federal government have jumped at the chance to recruit any laid-off tech workers. A degree in tech could set you up for a lot of potential jobs and a safety net if any of those jobs don't quite pan out the way that you'd hoped. Survey respondents also expressed concern about the long-term threat of AI. Think ChatGPT taking all of our jobs. For kids graduating from kindergarten this year, about 40% of investors said to go into healthcare. That way, when they come of age, they may be able to hedge against any potential AI-related job takeovers. Roughly 12% said Wall Street would be the right career given that pending AI threat. The AI concerns come despite traders themselves finding that current iterations of ChatGPT struggle with things like math and corporate earnings. But the idea here is that there's still plenty of time for AI to improve and to potentially threaten our jobs along the way.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
My problem is everything else. The average stock year to date is down.
The tech names that we're discussing are driving the gains.
The bear market is continuing, okay? This is what bear markets do.
I think that the Fed's got more work ahead of it.
I think this is kind of the calm before the storm, so to speak.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
A special thank you to Luke's Lobster of New York for sponsoring the program over the weekend. That was
what
very
a
cool.
response that we had to the Friday show. We should do that more often. Not today.
Let's not.
But it was thank you, folks. I got people out on Saturday going back and forth with me.
Likewise.
On the 422 places on Long Island where you get a decent lobster roll.
Did you order any?
Yeah, I ordered some. Yes.
Nice.
Yeah, didn't have any afterthought. Ate it all. But,
the whole family ate the rest.
Oh, it was a fam effort.
Nice.
Fam effort. Yeah, to do a remortgage in the house. It's great.
Well, welcome back from New York City. Welcome back to you all.
I'm tanned and rested.
Good morning. Good morning.
You're not going to ask me why I'm tanned and rested?
I'm Jonathan Ferro, because you lay out on the terrace and didn't do anything. Why?
No, Yankees-Padres.
Oh, you went to the game?
Went to the game Sunday. Thank you, Steve Lanzone. Great seats in the sun.
Judge dominated them?
Judge, I've never seen a guy hit a baseball bat like a golf club. And Garrett Cole showed up for the Yankees, and Yu Darvish for the Padres had a lobster roll.
If you want to do a bit of baseball, let's do it. You have to go in person. You just have to.
Yeah.
You do not appreciate the power of some of these players. I think that's the thing that I missed. And when you see Aaron Judge in person, this towering figure just stand there, TK, it is pretty impressive.
I did a charity thing years and years ago with one of the second stringers for the Boston Red Sox. He was one of the littlest guys in the team. Johnny was ginormous.
It's amazing.
He was huge.
I tell you what, the thing that stood out for me, Tom, and we've talked about this before, when you see that throw go into third base from the far corner of the field.
From the right field.
It is.
Yeah.
It's amazing.
Dwight
like
Evans,
a bullet.
like ballet, they can do it like a bullet. The shoulders they have, the ability to do that deep in right field, 2 outs late in the game, and you got to throw it to third base.
So Yankees and not Red Sox. We're not talking about the Red Sox?
No, we're talking about the Red Sox. It's painful, but, you know, they're coming back. They're in a tough division. You know, like we talked to Julie Norman earlier about the Baltimore Orioles, surprise of the year. And the Red Sox, after a very quiet winter, are you know, come on, it's May. You know, usually by now the Red Sox, it's wrapped up, gone home, that's it, it's over.
Yeah.
And they're in the game, sort of. Padres are challenged.
We'll try and do some Formula One a little bit later. Let's hit the price section.
Welcome to our economics, finance, investment.
Let's get to NVIDIA. It's up by close to 4% in the pre-market. Big lift there. Lift in the equity market on the S&P 500 by, let's call it, 0.6%. We've talked about this narrow dominance of a handful of names in the equity market, lifting everything year to date. Tell me it continues. It continues.
It does. There's no question about that. And, you know, futures up 23. But again, I'm going to look at the spread market, which is showing me some real tension here. And this is the dynamics into the politics. 79 basis points of inversion. This is a substantial change in the inversion of the curve in the last 5 days.
Let's talk a little bit more about the Treasury market, Tom, because what we've seen over the previous 11 days before today, of course, closed yesterday, is yields higher, yields higher, yields higher at the front end. This morning, we come back down by about 5 or 6 basis points to 450. But we've priced out a lot of cuts and started to price in some hikes again. Citi's Andrew Hollenhorst, I think, has felt lonely over the last few weeks, still committed to that call that you get a hike in June, a hike in July.
Yeah.
Bank of America, Mike Gapin expects to hold Tom in June, but ultimately he calls this a close call. He says inflation is too sticky for the Fed to commit to an extended pause. This makes communication, I think, at the Federal Reserve meeting on June 14th a little bit complicated.
At the meeting, complicated and important versus all the, you know, blah, blah, blah here. And this goes to something we've avoided so far this morning, which is the pause and the skip. I mean, I don't care if it's a pause or a skip. It's where are we? And the answers were sticky. That London inflation on food was frightening, just frightening. There's no other way to...
2 stops before that Fed meeting. We've got payrolls on Friday. Then you've got CPI data on June 13th. If you could be long one thing right now, it would probably be NVIDIA. If you could have been short over the last 2 weeks, something, it probably would have been the Treasury market. Katie Kaminsky was short that Treasury market. The chief research strategist at Alpha Simplex joins us right now. Katie, walk us through the thinking and whether that trade is still very much on.
Well, let's just think about where we are in the cycle, and let's think about what's happening in terms of long-term cash flows. I think people may be underestimating the effect of higher rates on long-term cash flows because they're just so used to things going back to normal. And so what we've seen is that the momentum in fixed income markets is short. And in some sense, the equity markets are saying that things are okay. And if that's the case, then the curve, and we're going to tolerate the inflation, then the curve is going to have to steepen. And particularly the long end of the curve is what I'm looking at.
How do you link the equity market on a trend-based basis with the bond market? How do you take trend-based analysis of the 10-year yield and fold it over to trend-based analysis of the NASDAQ?
Well, this is a good question, because I think what's happened to us, as those of us who are on the mathematical, more technical side, is that we've seen some very strong themes. We've seen strong equity momentum this year. We've also seen continued support of the short trade and fixed income, but we've been somewhat alone because most people have gone back to being bullish on bonds this year. And what's happening is you've seen correlations shift in March, and you're seeing new themes emerging, but the correlation between stocks and bonds, should we go back to an inflation, rising rates, or even a pause narrative, is actually positive on being short bonds and more neutral on equities. So you got to think about the correlations and how they're moving, as well as the signals.
With the correlations and also with trend following, can you call a bear market low in October? We're now up X% on SPX. And I mean, I get the correlation study, but actual trend-based analysis, Wells Wilder 101, did we establish a bull market in October?
Well, I always say that we don't pick the bottoms and we don't pick the tops. What we do is we look for confirmation. And I can definitely say that we've seen a massive turnaround starting in October. That has happened across multiple asset classes. It was sort of peaked in March when we saw sort of some weakness related to the banking sector. But we have really seen a pretty strong consolidation period since October. So I'm waiting for that to shift, and the new trend may be long equity, short bonds again.
Katie, this is a wheelhouse, and I know you're looking at this in the Andrew Lowe box just to the left of the third base dugout at Fenway. But the bottom line is the great Luis Yamato would say, okay, you've got consolidation and distribution, and then what? What is the then what for you in the equity market? What is the signal to buy more NVIDIA?
Well, I'd say I am a little more concerned about the equity market because it has had such a strong run. Could it keep going? If we possibly, I think I'm more interested in seeing a breakout in fixed income, which is going the other direction, because we're seeing that stocks have come up so much. That suggests the equity market is very optimistic and thinks that sticky inflation is going to be tolerated, which means that long-term cash flows are more at risk. So for equities, it's actually looking pretty positive. People in general are thinking that we're just going to tolerate some moderate inflation. The problem's going to be is when people realize, wait a minute, look at these inflation numbers, they're coming back up instead of going down more. I think what you were talking about, the UK, is a perfect example.
So, Katie, I think what we're trying to figure out is whether the high yields that you predict are going to be a challenge or not to the narrow leadership so far in the equity market, which has been dominated from big cap growth. Is that a challenge or not?
Definitely. If you think about growth, I mean, growth has struggled a lot, and it was the most impacted sector during last year. And now that we've had a little bit of a slowing in interest rates, they've seemed to have really raged back. So you're right. If we do see longer term cash flows go up, that is the sector that could be the most vulnerable because it has the most duration risk.
Well, that would be a big challenge, Tom, to the index level gains of the year so far for the NASDAQ, which is up more than 30. Katie, how would you explain then how resilient the index level story has been? Let's take the NASDAQ, which had, I think, one of its biggest weekly gains of the year so far, just last week on the NASDAQ 100, despite this move that we've seen in the Treasury market. What explains that?
Well, I personally think we're only reverting back to recent highs in yields. I'm looking for a breakout. I'd say that we've just seen a little bit of movement in fixed income relative to where we were earlier this year. And that's why we've seen a resurgence. So I'm much more thinking about the more extreme scenario as opposed to a small adjustment back towards the high. Remember, the 10-year went to 4% earlier this year. We're not back at that level yet. So I'm kind of watching for that more than sort of the tech resurgence after a period of really, really strong tightening of rates, which we saw last year.
Katie, let's go all CTA. Commodities. Help me here. The commodity trend is lower. Copper's off a cliff. It's a China play. I get all the fundamental chat. What does the trend following look like in long trending, persistently trending commodities?
Well, this is a good question because commodities have also been decoupled somewhat from equity markets. We've seen downward pressure in commodities, particularly the base metals, also energy. One thing I've been watching quite a bit is the energy trade. I mean, we've seen a massive downward trend, and there's all sorts of questions all the time from investors. Well, when are we going to see that move up again? So for right now, it doesn't look like that's going to happen soon, but it is something that has been in a downward trend for a very long time, which could, if we see some sort of movement, there could be something there. But you're correct. Commodities have been trading recessionary, equities have trading optimistic, and treasuries also somewhat optimistic in terms of where yields are.
Katie, this was great. Just to clarify your thoughts on some things. Katie Simplex, Kathy Kaminsky there of
Katie
Alpha Simplex. It's going to be a new name. Short treasuries.
I like it.
That would work, wouldn't it? Short treasuries. Right now, TK, it's the trade for Katie Kaminsky of Alpha Simplex.
I made a Red Sox allusion there. This is where Alpha Simplex comes from is trend following. And this is John Henry of the Boston Red Sox and others, Monroe Trout down in Bermuda, ages ago, trying to figure out setups to get on trend, John. When do you get on trend? When do you go long or short, whatever the trend is? And just as importantly, when do you get out? And if you go to cash, what do you do next? And it's a real study. It's literally a cottage industry within the investment field. It's not something the CFA program that I'm part of follows closely. But for all of us, John Henry pounded out spark stations, Sun spark stations was done on. And then one day it showed up on the Bloomberg, and I'm like, oh, ADX DMI in the Bloomberg. Oh, parabolic SAR. And there I was doing my own Katie Simplex ballet.
Just quickly on cash. If you've been enticed into cash with 5% returns, TK, you know the tough thing about cash, it's...
Got to get back in.
How do you get back out of it?
It's
or do you just stick
wildly
with it?
Asymmetric. Getting out of an investment into cash is easy compared to I'm in cash. What do I do next?
It's attractive at 5%, and then you start seeing these gains in the equity market, and
there
all of a
go.
sudden 5%'s not looking as good as it maybe it did at the start of the year. Lee Ferridge of State Street joins us in the next hour. Looking forward to that conversation. The latest from Washington, D.C. with AMH down in the nation's capital. Up next.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The White House and Republican congressional leaders are gearing up lobbying campaigns to win approval of a deal to avert a U.S. default. Both President Biden and Republican House Speaker Kevin McCarthy expressed confidence they would muster the necessary votes. The bill will suspend the debt ceiling until January 1st, 2025. Now, in exchange for Republican votes for the suspension, Democrats agreed to cap federal spending for the next 2 years. Elon Musk's private jet has landed in Beijing in the billionaire's first visit to China in 3 years. Sources tell Bloomberg that the Tesla chief is expected to meet with senior Chinese officials, including Premier Li Qiang, as well as visit Tesla's Shanghai factory. But the EV maker is nearing the final stages before starting trial production of its revamped Model 3. More than 30 NATO soldiers have been injured, along with at least 50 locals in northern Kosovo, as Serb protesters clashed with police and then with NATO peacekeepers. The demonstrators were seeking to block newly elected ethnic Albanian mayors from reaching their offices. The worst flare-up in violence in years threatens an EU-brokered plan to normalize ties between Kosovo and Serbia. NVIDIA is set to become the first chip maker to achieve a $1 trillion market capitalization. The company's blowout revenue forecasts underline the enormous growth potential from artificial intelligence. NVIDIA is poised to be one of the 5 U.S. companies with such a capitalization, joining Alphabet, Amazon, Apple, and Microsoft. Only 9 companies globally have ever achieved this level. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
So I think the main thing we did, which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think this agreement frames all that from limit, save, grow. It doesn't get everything everybody wanted, but that's in divided government. That's where we end up. I think it's a very positive bill. I think at the end of the day, people can look together to be able to pass this in the House and the Senate together.
The agreement prevents the worst possible crisis, a default, for the first time in our nation's history. I strongly urge both chambers to pass that agreement. Let's keep moving forward on meeting our obligations and building the strongest economy in the history of the world.
The big push begins right now down in the nation's capital to get this bill, this agreement passed. An agreement between the House Speaker Kevin McCarthy there and the President of the United States speaking over the weekend. I think on Wall Street, just moving on, at least trying to anyway, and leaving this one behind. Goldman Sachs reflected on their note from over the weekend a couple of times this morning. We can do that again. Called it a major reduction in uncertainty, a minor reduction in spending. And that's the takeaway, Tom. The spending deal looks likely to reduce spending by something like 0.1 to 0.2% of GDP year on year in 2024, 2025.
You notice when Speaker McCarthy was talking there late at night, there was the congressman from the Carolinas, Patrick McHenry, without his bow tie on. I thought that was just bad form. I mean, you're in the exhaustive move of a debt bill. You got to be tonsorial and resplendent.
That's what you were focused on over the weekend.
It was bow tie on. It's like, it's tough sledding.
What's the signal from that? They've been working really hard.
They're exhausted.
They're
working very hard.
Okay, great.
We can take our ties off now. Hotzies wouldn't let us do that. Let's move on right now and get some important perspective here. Anne-Marie Horton is a Bloomberg civics lesson correspondent in Washington. Anne-Marie, best paragraph I saw on how silly the power game is was in the Washington Post. I'm going to steal this from Jim Garrity, writing it up. I believe it was yesterday. It maybe been the day before. And Mr. Garrity says, in the end, neither side had the leverage it wanted others to believe it did. Republicans still control only one chamber by a narrow majority. If they want deeper cuts to federal spending, they need to win a Senate majority in the presidency. Emery, can you take this out to the election of 2024? That's really where this is going to get decided?
Well, I think Speaker McCarthy is trying to make that point, right? We're in a divided government. We only hold the power in the House. And if members of his, like the conservative group, especially on the hard right, who some are even threatening to vote no against this agreement he struck with the president over the weekend, what they're going to say is, look, we have a divided government. The Democrats hold the Senate, the Democrats hold the White House, and yet we still were able to enact some spending cuts. And if we want more, we need to win more seats. And I think that goes for the Democratic side as well. The reason why Speaker McCarthy and President Biden both keep coming out and saying not everyone is going to be happy, because they obviously have issues on the fringes of both their parties when it comes to this agreement.
Emery, I know you've seen Lincoln, Daniel Day-Lewis. I think you've seen the movie 14 times. And Tommy Lee Jones is in there doing his Thaddeus Stevens imitation. And in the 19th century, it's about amendments. Is that what we're going to see here, an amendments frenzy over the next 72 hours?
Potentially. I mean, it's going to be striking the deal and then passing it are two very different processes. So striking the deal was a small group of people. And in the end, it came down to a 90-minute phone call when it was finally done between the president and Speaker McCarthy. Now, getting it through the House and the Senate is going to be very challenging in some parts of the process. So today already, one potential challenge is the Rules Committee, where you have some Republicans that are very conservative that may vote no to even get the bill on the floor. That could be the first hiccup. But by and large, many do see this passing through the House. Then potentially the Senate is where you can have amendments thrown at it, and it could just make the process so much longer. And the risk only there is that this really comes up against the June 5th deadline, which the Treasury Secretary says is not as soon as the U.S. could default. She has really said that this is a hard stop deadline. And that's where the concern is, because you heard the likes of Senator Lindsey Graham over the weekend. He was speaking to Shannon Bream on Fox News Sunday, and he was very upset about the defense spending. Now, defense spending looks like it'll increase about 3%. But what he says is that's nothing when you look at where we are with inflation numbers. And he doesn't think it's enough for the U.S. military. So you're going to have individuals want to come out. In the Senate, of course, you can have them filibuster. So this is where potentially you can see a very long, drawn-out, cumbersome process. But by and large, everyone I'm speaking to, the analyst notes that we're all reading, it does look like this is going to pass.
AMH, you mentioned one name there. Who are the other names you're looking for through this week?
Well, this week, I think first we have to start with the House, right? So I'm looking at the likes of Chip Roy, a Texas Republican, when it comes to what happens this evening. So today at 3 o'clock, you're going to have the Rules Committee. Do they give the go-ahead for this to even get on the floor? And then Speaker McCarthy is holding an in-person meeting with the entire conference. And that is where he's going to really hear those that are begrudgingly going to have to potentially vote for this and try to convince others to get this over the finish line. Then, of course, on the progressive side, it's the Progressive Caucus, like Pramila Jayapal, the House chair of that caucus. Where does she take her Progressive Party? Are they a hard no or could potentially get on board? We do know that the president and his main surrogates are calling these individuals. I think by yesterday morning, at least 60 House lawmakers the White House had already called. So both sides are really trying to back channel into the House. And then on the Senate side, I would say Lindsey Graham is one to look out for. Mike Lee had said early on that he would make the process very difficult if there wasn't steep spending cuts. So these are really the individuals to keep an eye out for.
Anne-Marie, let's finish where we started on the presidency, the race to be the president in next year's election. Bipartisan deals are probably good for the sitting president going into that campaign. They're arguably bad for the Speaker's future in the House. What do the Republican candidates for the presidency think about this deal announced over the weekend?
Well, it's very clear Governor Ron DeSantis thinks of it. He says that we're nearing towards bankruptcy and this deal doesn't help that. And he was on Fox and Friends in the morning, kind of bashing this agreement. We have yet to hear from the former President Trump, who, of course, made that statement, who said that the Republicans should get deep, deep spending cuts or default. But we do know that he has been speaking with Speaker McCarthy because there was a New York Times article that said that the president ran over or saw a New York Times reporter while he was golfing and was brandishing that he had Speaker McCarthy on his phone and had a chat with him. We haven't heard from him yet, so potentially the former president thinks this is useful for them. The one thing the Speaker does have, Jonathan, though, and I know there's a lot of talk of whether or not, because this isn't the deep spending cuts many on his far right flank wanted, does this mean that he could be ousted? He was able to get the president to the negotiating table. The White House thought they can just have a clean debt ceiling increase. And what McCarthy was able to do was keep his party together. The Wall Street Journal editorial talks about this unity that he was able to have was the leverage he was able to use to bring Biden to the table. So even though many don't like the bill, I think they do see that he was a successful speaker in this arena.
AMH, with the update, the recap down in Washington and the push forward as well. Anne-Marie, thank you. On the latest, TK, and the politics we're all excited for the next couple of days. Wall Street just wants to move on with this. Let's get it done. Let's just move on.
And with respect to this, John, we are so in the modern age driven by cable TV, this show, that show. I don't want to get into a political debate about it. Anne-Marie's living it every moment down in Washington with her team. But the answer is, heaven forbid, there's now a civics process. And it's not like they can tell a committee, oh, go away. There's like actually a process, particularly for our international audience. There's a ballet here that is in place and we have to go through. And what's interesting down the road is the Senate after the House and the potential of a filibuster, which is its own conversation.
And they've got to get moving, Tom. We talked about the Treasury cash balance just south of $40 billion. at last look. That number's come all the way in from north of 140 only a few weeks back.
I mean, I'm getting ready for a sell in May and go away equity market banner. That's going to look great, but I mean, May's almost over. I mean, June is busting out all over with a jobs report as well. So
where's May gone?
It was cold spring, and it has been beautiful in New York the last number of days.
You seen the pollen count?
It's been a lovely May.
Everyone just walking around sneezing.
I don't get the pollen thing, and I'm sneezing.
Everyone's just walking around sneezing.
Yeah.
Wiping their noses.
Yeah. That bill has it, it's terrible.
Oh, the dogs have got it too?
The dogs get it too.
The dogs have got hay fever?
Oh, yeah, the dogs.
Okay.
Absolutely.
Ed Al-Husseini of Columbia Threadneedle. I never know if you're telling the truth or not.
It's true.
The dogs are sneezing.
Yeah, dogs are sneezing.
All right, we'll catch up with Ed next on this bond market and the T-bill issuance we may get in the next few months.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Equities on the S&P 500 positive by 0.5%, a lift in this equity market with one name in mind, NVIDIA. Let's take a look at that name right now, up by close to 4% and really, really close to this $1 trillion line in the sand. TK, look how close we're getting. 404.86 is the magic number, 404.18 right now. TK, we're basically there. $1 trillion market cap for this name.
Sell side, 9 months, 12 months hold. Can you buy it here? an institutional approach. Can you hold it or buy it here with a 3 or 5 year hold? I have no opinion. I'm not qualified on this. But yeah, I get the fixation of $1 trillion, but what do we do with it now other than listen to the CEO who's quite articulate about the dream?
I was asking the same question 2 weeks ago,
yeah,
a month ago.
Where do you think I get all my ideas?
When it was up 80, 90%. And now it's up more than 100.
Help me, Ed, please.
Let's keep going. In the equity market, this is what futures look like. The S&P, the Nasdaq, a lift. The Nasdaq up by more than 1%. Year to date, the Nasdaq 100 up more than 30%. We're going to add some more weight to the rally this morning, potentially on the S&P 500 as well, up by 0.5%. In the bond market, the move higher. Got to keep going back to this. The shift higher we've seen in yields hasn't hurt this equity market. The 2-year, retracing some of the move higher we've seen over the previous 11 days. We're down by about 4 or 5 basis points on a 2-year to 451.63. On 10s, down about 8 basis points to 372. It's like debt deal, move on, and quickly. The cuts to spending, not that big. The hit to growth,
well, like
not
Goldman
that
Sachs
large.
said, we're clearing out, the rumors and the speculation, the worry, the angst.
Yeah, we're talking about basis points type stuff, Tom, for cuts to spending. I want to finish on foreign exchange. We did break 107 earlier today on the euro, 106.73 on that currency pair, the lower of the session, 107.31. Story of the moment, I think, over the last several weeks. High yields, dollar strength kicking back in, but as you were in the US equity market, just exceptional performance from a handful of names. AI, the theme to cling on to.
I'm watching Argentina and into the news here. I believe Damien Sassower darkens the door at some point. After Erdogan, lira goes out weaker, 20.39. Mehmet Simsek is rumored to be in the new administration, the new government of Erdogan. That would be, for the West, that would be a good thing.
That's good.
Ex-Merrill Lynch. He's really competent. I've spent a lot of time with him. And clearly he's someone where the Western banks would be very happy.
Does that matter when we all know there's one man essentially in charge?
I don't know.
Of policy,
I don't know.
of the central bank,
I think
of all of the above?
Take the show to Istanbul,
That would be fun.
Ought to do after this important election. Right now, we're going to take the show to Smart. Ed Helsani joins us, senior interest rate strategist at Columbia Threadneedle, Colgate Cricket from a long time ago. Ed, what's the biggest stereotype of bond market equity linkage that's wrong? What's the thing that everybody talks about, correlations, linkages, blah, 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 but it's just flat out wrong?
Yeah, I think if you look at the last 18 months or so, the big shift has been equities and bonds becoming positively correlated. That makes portfolio construction very difficult. It makes it very difficult to hedge drawdown risk with treasuries on high-quality bonds. That relationship is starting to break down, and we're starting to return to sort of a pre-COVID environment where bonds were, in fact, excellent hedges against risk drawdowns. And that's the change we're going through at the moment.
What is a likelihood? We just had on Katie Simplex, and she made it very clear that her likelihood, her trend, her bet is lower bond prices, higher yields, because no one's looking for that. How do you look at an outlier thought like that that's clearly away from consensus?
Look, I think there's room for inflation to surprise to the upside. I think that would be the catalyst for something like that. In my mind, I think pricing is pretty decent. We've repriced terminal rates for the Fed a little bit. We've given them a little bit more room to stay on hold in the second half of the year. I think that's the right place for us to be. And I think more importantly, if you look at real rates, things like 5-year real yields now close to 180, that's pretty restrictive policy. And I think that buys the Fed a lot of room to now transition to a pause.
Let's fold in the agreement over the weekend. Does that change the character of growth in any way, shape or form, the marginal cuts to spending that have been announced?
I think it's quite limited. And, particularly when we look at this setup versus 2011, when the economy was depressed and the fiscal shock was much more negative and had much higher multipliers into the growth story, that was close to 0.7, 0.8% of GDP for several years. We're looking at something like 0.1% of GDP now. It's a rounding error in this environment.
It's going to lead to more T-bill supply if we pass this. I'm sure you've already seen some of the takeaways. Hundreds of billions of T-bill supply coming to a market near you. It's going to cause chaos in markets. Let's go through things point by point. How does this work? From Treasury issuing T-bills to it bleeding through the whole system, what happens?
I think there'll be a fair amount of demand, particularly from money market funds. money market funds have been on the sidelines here. There might be some drawdown in repo and reserves on the Fed's balance sheet. That, in essence, is the process that we've been in since quantitative tightening started. That might accelerate the process slightly. But by and large, I mean, this is really a matter for the front end, the cash management part of the Treasury market. When you look further out, for the vast majority of investors who are trading credit or Treasuries, this should not be a significant event.
It comes at a tense time, or at least the hangover from a tense time in the banking system. Does it compete with bank deposits? Does it exacerbate any of that tension at all?
I mean, I think the correct answer is it could. But by and large, look, bank deposits have been bleeding out of the system for some time. That process is going to accelerate. They've been in competition with money market funds. You will hear people talk about things like the deposit beta, which is, in essence, banks are now under pressure to raise the interest rate on deposits faster than they've been pre the SVB shock. Does this change that equation? No, not really.
Surveillance correction. I had Cesar with us. He's out at Marlins Yankees in Seattle and didn't want to get out of bed too early, so I guess Damien's not going to be with us. So we're thrilled you're here to talk of the opportunities in EM. Long ago and far away, Ed El Husseini spent February in the Bahamas with Moody's. It was a really tough gig. It was amazing how you made the trip. In February, you did Latin America, Chile. Nobody's talking about the Argentinian mess, the IMF workout, what they're doing in a swap agreement with China. You're the adult in the room here. Is there an opportunity in Turkey, Argentina, and the other idiosyncratic stories of the moment?
I think there's a long tail of idiosyncratic stories in EM that are currently going through a restructuring process or are priced for a restructuring. And I think particularly in hard currency EM debt, that's a really interesting story. I mean, we have bonds in, Pakistan, Sri Lanka, Ghana, and so on, Egypt, that are priced, 20, 30, 40 cents on the dollar. They've now priced in a very aggressive restructuring. And so looking forward on a 2, 3, 4 year horizon,
right.
Outcomes there look quite attractive. Argentina and Turkey, boy, the policy mix in those economies is so difficult to solve. And they've been struggling with it really for decades at this point. It's difficult to be super optimistic. It's difficult to see an exit, a way out, the way you have with some other EMs.
What does the dollar do here? Does the dollar fold into bond analysis here? Like if you get a weak dollar like in equities, does that help you?
I mean, a weak dollar would really, in my mind, start to coincide with the Fed starting to be priced for an easing cycle, for the economy starting to roll over, particularly with labor market weakness starting to lead that story. Is that on the horizon at the moment? Not really. If I think about the next 3 to 6 months, if we think about the end of the year, beginning of next year, potentially. In my mind, the dollar is largely range bound. I'm not super excited for the dollar in either direction at this point.
Can we get the fixed income guy to comment on what's happening in the equity market right now, just quickly? Nvidia at the moment at 404.70, briefly through that line in the sand of a $1 trillion market cap. Ed, for most of this year, we've talked about cash no longer being trash. It yields 5%. Are we getting to a moment where the gains are so large in the equity market in some places that some people are coming to you and saying, yeah, about that, I'd like to go somewhere else?
Look, I think greed is a very powerful operator when it comes to risk. It doesn't really matter if it's equity or credit risk, and it's in play. And the one thing I'll point to is, to a large extent, real rates and interest rate volatility was a very negative drag factor for both equities and credit risk last year. Right. That's starting to go into the background. So you're starting to see, we're starting the conversation about correlations. This year, that increase in real rates really hasn't damaged things like equities, particularly tech stocks, that much. That, to me, signals a regime shift here and is very consistent with the Fed nearing the end of the hiking cycle.
Let's sum this up. 12 months forward, do you have the scissors out clipping coupons, or can you actually manage for total return?
I think you can manage for total return. I think bond prices, starting where they are today, plus the carry, the yield, the starting yield here, very attractive, both in real and nominal terms.
How much total return are you going to slap in a coupon? 100 beeps, or can you do better than that?
I mean, if we're talking about...
No one's watching. It's Tuesday after Memorial Day. Come on, stay with me here.
Look, I think we're finding very attractive value in short duration investment grade debt, even in higher quality, high yield debt and EM. Can you manage for total return well in excess of coupon? Absolutely.
John, February 8th, this is the old Ed, the Internal Medicine for Primary Care Convention in the Bahamas.
Was that where Ed was?
That's where Ed was. He used to go down for Moody's and say, he'd go down and analyze the Bahamas in February.
We're doing it all wrong, aren't we?
You got that right. He's, it's just, what can you say?
Ed, this was great. Thank you, sir.
Fantastic.
Good to see you.
Thanks,
Ed
guys.
Al-Husseini there of Columbia Threadneedle. On the competition between bonds and equity right now, there's one winner at the moment. NVIDIA up by 3.8% in the pre-market. TK, watching this one over the last few weeks, just tick for tick. It's been phenomenal.
And dragging the NASDAQ with it, up 1.3% on the NASDAQ as well. I want to make this clear. Why is Ed so valuable? Because we do economics, finance, investment, and he blends the two in, international economics and the macro babble into what's actually going on with money. And there's not that many that can do that. Michael Darter would be another example.
On the equity side, I'm thinking of Andrew Slivin right now.
Yes.
Portfolio manager at Morgan Stanley. Conducted a really nice interview with the team here at Bloomberg going into the weekend. What happens if you get to September, October, going into the fall, and you've got these kind of gains on the screen and you didn't anticipate?
He is
That's what Andrew's getting
dead
at.
on. We call it window dressing.
It's only
CFA
May.
level
I will
2.
say it's still only May. Let's see how this goes. Coming up for the next hour, looking forward to getting Greg Valier's view over at AGF on the debt ceiling deal down in Washington,
You been to
D.C.
the Bahamas? I've never been.
I've never been.
Never been?
Never been.
Road trip.
Do you want to go?
Yeah, absolutely.
Okay.
Take the Brammo. Take
All
the
right.
Brammo cam.
Take the Brammo.
Take Brammo. Take Brammo cam.
Brammo. If Brammo comes back, is she back tomorrow? I heard a rumor. She
haven't
might
talked
turn
to
up
her
for
yet.
payrolls. We'll see. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia set it down to 8 drones aimed at Moscow early today, the biggest attack on the capital since the start of the war with Ukraine. The Kremlin has intensified its bombing campaign ahead of a long-awaited Ukrainian counteroffensive to retake occupied territory in the country's south and east. Now, Ukraine has accumulated billions of dollars of weapons from its U.S. and European allies for the military assault. In Spain, Prime Minister Pedro Sanchez is trying to hold on to power after a crushing defeat in Sunday's regional elections. Sanchez supervised his adversaries Monday by dissolving parliament and triggering a snap general election within hours of learning the full extent of his losses. Spanish parties will have less than 2 months to prepare for the campaign and the July 23rd election, which has been expected in December. When Jamie Dimon takes center stage at J.P. Morgan Chase's China Summit Wednesday, he'll face a business landscape that looks vastly different from a visit 4 years ago. In 2019, the last time the flagship event was held in person, the U.S. bank and its Wall Street peers were gearing up to cash in on China's opening of its $60 trillion financial sector. Today, U.S.-China tensions are high. The Chinese economy is sluggish, and Beijing is cracking down on foreign businesses. Deutsche Bank says its hiring spree in mergers and acquisitions will help it boost ranks and take back some market share from its Wall Street rivals. The German giant has signed on M&A veterans from peers including Bank of America, Credit Suisse, Lazard, and Citigroup over the past couple of months, and plans to hire more. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo. This is Bloomberg.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. And the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Business Week Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
The best question I get all night.
Bloomberg, top experts, great questions.
This is the new computer industry. Software is no longer programmed just by computer engineers. Software is programmed by computer engineers working with AI supercomputers. These AI supercomputers are a new type of factory. 15,000 startup companies in the world built on NVIDIA today, building on NVIDIA today, and 40,000 large companies, enterprises around the world are using accelerated computing. We have now reached the tipping point of a new computing era.
Every time this guy speaks, we add tens of billions of dollars to the market cap of NVIDIA. That was Jensen Huang, the CEO and co-founder. NVIDIA is the winner of the S&P 500 year-to-date so far, up more than 100%. It's up 3.8% this morning, 404.30 in the pre-market. I've said this a few times this morning. I'll say it again. If you are just tuning in, welcome to the program. 404.86 is the line in the sand. That would bring about a $1 trillion market cap. TK, this stock just breaking records all along the way.
For Global Wall Street right now, we're going to dive right into this. Alec Webb blew me away last week. Alex Webb blew me away with Bloomberg Opinion, with actual discussion of NVIDIA in English. We demanded he show up Tuesday to get us started here in the morning. Alex Webb joins us from London right now. Alex, you have the single best story on this phenomenon I've seen. You got 5 charts, and without question, the chart that matters is the place of NVIDIA and Novanta and monolithic power system as having expensive major semiconductor chips or whatever. I mean, they're outrageously, the PE ratio is absolutely insane. What's the risk that they lose their premium pricing, their premium margin, their premium unit growth?
It's whether the others can catch up, and that was what was super interesting about the Jensen Huang presentation at Computex in Taiwan, is that he was making a very compelling case for this having a hugely lucrative long tail. At the moment, what we're seeing is the cloud operators saying, we need your gear in order to run the processes in the cloud that ultimately are going to be running the processes that fuel the AI revolution. What he's saying is that the applications for this are massive, and we are the first. We have had the first bite of the apple. We have the best stuff, essentially, is the case he's making. There are a few others in and around there. NVIDIA has been the first mover. They also have their teeth in pretty deeply with those cloud operators, which means, essentially, our gear plays best with our gear. So therefore, you need to keep buying from us. And that's one of the reasons we're seeing the stocks bought so highly at the moment. I think it's trading at something like 52 times its forward earnings. That's actually come down as people have revised their earnings expectations upwards. The SOX Semiconductor Index, Philadelphia Semiconductor Index, the average is about 25 times its forward earnings. So it's a massive premium on the rest of the market.
I mean, I look at this, Alex, and I go 4 people down, and it's Advanced Micro Devices, which I get as a competition. Do you look at NVIDIA as a duopoly or triopoly, or are they like, say, electric vehicles where there can be 7 or 8 players 2 years out?
The thing that's actually going to be super interesting is a little bit more complex even than that. We're seeing a lot of the big tech companies, the Googles, the Apples, the Amazons, developing their own custom silicon, their own custom chips, ultimately that are manufactured in the same fabs as NVIDIA's are. They're made by TSMC, largely in Taiwan. Now, those are the guys who look most likely to catch up with NVIDIA when it comes to the AI stuff, right? They're having this sort of parallel processing, the clever whiz-bang tech that will fuel everything that AI is able to do. So it's almost like an internal threat because these are also the customers. Microsoft, Google, Amazon, they're the people who are buying from NVIDIA right now. The question is whether they can do something that does this sort of stuff as well as NVIDIA can. They're probably a few years out, but that looks like the big internal threat.
The timeline, that's where I wanted to go. Alex, you're better positioned to answer this question than I ever will be. How quickly can you be knocked off the top of the pile? How quickly is this thing moving?
I mean, ask Intel. It was 3 years ago that NVIDIA knocked Intel off as being the world's biggest chip maker. It's a slightly broader way of defining it. Now, NVIDIA is about 8 times bigger by market capitalization than Intel is. Now, the innovation cycles in semiconductors, 3, 4, 5 years, it isn't something you can turn on a dime. NVIDIA was clearly coming after Intel for quite a long time, and Intel doesn't compete in the same space. The bigger question actually is whether, even if somebody is able to catch up with NVIDIA, can they get the manufacturing capacity from TSMC? NVIDIA is there, they're the first mover. They are saying we need this many wafers this year. TSMC, please do that for us. If you're a smaller player coming in there, does TSMC have the space for you? The answer may be yes. There's a lot of new capacity coming online, particularly at the bleeding edge of this stuff. We also have Intel coming in as a foundry. These are the companies that make semiconductors for other people. So maybe this capacity is getting there. Right now, it certainly looks like NVIDIA has a little bit of a lock on it.
So this is still all down to the capacity, Alex, of Taiwan Semi.
It certainly looks like that in the near term. The thing that we saw, right, is that there's one company in the world in Europe that makes the machines that can make these semiconductors, ASML. TSMC got so much of the early supply of those machines. So they are the ones who can make this stuff for now. The other 2 companies in the space, Samsung and now increasingly Intel, are coming in and getting more of those machines. That means that in a few years' time, there will be a lot more capacity out there. The question is, who is going to be hoovering it up? Who's going to be saying, we want to use it, we want to make our stuff? They have to run these foundries, these chip-making factories at really high capacity in order to justify the spend. These machines are insanely expensive. So there's a lot of capacity coming online. Is NVIDIA going to be one that's using it all? In the short term, maybe. In a year or 2, it'll look a little bit different.
And look at the names in your wonderful article, Alex. And I guess I'm looking for the mini NVIDIA. That's a mouthful. A mini NVIDIA. I don't mean buy, hold, sell. And I'm not asking you to tell me they're going to make a ton of money. But if I look at Entegris or IPG Photonics or Qorvo, if I'm pronouncing that right, is there a mini NVIDIA in your head?
Do you know what? There's a great piece I'll point people towards from our colleague in Bloomberg Intelligence, Woo Jin Ho, and he really highlights a few of the network players, actually. And if I'm going to be honest, I can't remember the exact names.
Well, that's okay, fine.
I'll point people towards it.
Yeah.
But it's not necessarily obvious players. The one thing is actually a shame looking from a British perspective. There was a company called Graphcore, which had raised a lot of venture capital, and including from big names like Sequoia. They were specializing in AI chips. They wrote that stake down in November, and it's looking like Graphcore is nowhere. That was increasingly looking like a player that would be able to come in and challenge the likes of NVIDIA. Maybe their IP gets bought up by someone, and they create a viable challenger to NVIDIA and, of course, AMD.
Let me segue, Alex. You can do it. Apple Computer really buttressed up against a 175, 180. What's the view forward on Apple Q2 calendar, Q3 calendar, and into the holiday back-to-school season?
I think the thing we've seen, there's going to be a lot of chat in the next 2-3 weeks about what Apple does in augmented reality. That's going to get a lot of the headlines. It isn't going to drive any meaningful sales, at least not anytime soon. The reporting from our colleague Mark Gurman suggests that this is going to be a ramp-up comparable to the Apple Watch. Apple Watch now quite a big, compelling product category. Took almost a decade to get there. It's really the stickiness with Apple. They built so many products and services on top of the iPhone, which in and of themselves make money at a good, healthy margin. Most crucially, they tie people to their iPhone. So irrespective of whether it's a particularly compelling upgrade for the handset come September, October, November, people still upgrade. That is why the stock is so, bid up there is a massive amount of conviction behind their ability to convince people to refresh.
I haven't upgraded, but I have noticed recently, TK, the battery life
Big
just
difference.
started to aggressively
Huge.
come down. You seen that?
No, I have wonderful battery life in my iPhone.
Oh, mine's
it's changed
terrible,
my
but
life.
I didn't upgrade it.
The number one reason to upgrade is a battery life changes your day-to-day use of the phone.
Because Tim's in there manipulating the battery levels.
I am old. I mean, Alex Webb knows this. I'm old school on this, in that it's all about the chip, and the chips just keep getting better and better.
It's impressive, eh? This was great, Alex Webb. Thank you, sir.
Yeah.
Alex Webb of Bloomberg. Quick take on NVIDIA. What a run in that name. It's up by more than 4% in the pre-market and heading towards a $1 trillion market cap as things stand right now. 405. Lee Ferridge of State Street coming up.
Welcome back to a special Roland Garros update for Bloomberg TV and radio from Tennis Channel. I'm Andrew Guy. World number one Iga Świątek opens up her campaign in Paris Tuesday when she takes on Spain's Cristina Bushka. The defending champion is looking for her third crown at the clay court slam. And American superstar Coco Gauff is also in action. Last year's finalist is hoping to claim her maiden Grand Slam title in the French capital.
And you're one of the most fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5?
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably couldn't spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel. And I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, so the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring, I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000, 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
News breaks. No one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength
on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
We think where we are is the index is telling you things are rosy, things are fine, and the breadth is telling you otherwise.
Looking at the headline index in general belies some beneath the headline developments.
I wouldn't go chasing a whole lot here. I still think economic weakness, mild recession is in front of us.
Recessions aren't bad things. They reorder capital.
We might get a pause in June, but I wouldn't take a pause to mean that the Fed is done.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Abramo off today, stretching it out over the Memorial Day weekend. John and I are looking at really exciting markets. And, John, I think you've been right. I was going to underplay it, but I think you've been right to overplay it. NVIDIA at a pre-market of $1 trillion. It's got to get your attention.
Amazing to see. Session highs,
26,000 employees.
Oh, just amazing. Phenomenal. Gains of more than 100% year to date on that particular stock. It's contributed to some decent gains at the headline level. On the index level, on the NASDAQ 100, up by more than 30% this year to date. This morning, we're up by more than 1. Tom, the rally continues.
Well, the rally continues in the bear market. I was sort of surprised over the weekend. The bear market gloom wasn't as reaffirming or capitulation, whatever you want to call it. But futures up 25. Let's fold the data check right into this. I'm sorry. NASDAQ 100 with the NVIDIA trail up 1.4%.
Futures up. We've got a debt deal. Treasuries are rallying. Yields are lower. A debt deal that most people just assume doesn't really cut spending by very much, if at all, in certain places. And Tom, here we go. We're down 9 basis points on a 10-year 370. Yeah. On a 2-year, we've had a big move higher over the last couple of weeks. We're back to about 450. Yields lower at the front end by 6 basis points. And it's back to the data. You can refocus the mind.
Yes.
Get back to payrolls on Friday. Get back to CPI on June 13th. And get to the Fed on June 14th. June is just around the corner.
Curve inversion here, early unemployment report this Friday, June 2nd. But, John, what I would get back to in terms of yield is what do banks do with CDs? If we do get, some form of yield adjustment, yield stasis, sticky inflation, the 30-year mortgage rate we haven't talked about yet today, the first thing I looked at this morning, 7.17%. It's up, it's up nicely here.
Let's put all these different issues together.
Yeah.
We've got a debt ceiling deal, potentially passes Congress this week. Let's see what happens. If it does, you get hundreds of $billions of T-bill issuance coming to the market. Does that compete with what the banks are trying to achieve, Tom, which is attract and retain deposits? We'll see how that plays out. Ed Al-Husseini sat in that chair just to Tom's left over at Threadneedle, Columbia Threadneedle, and essentially said that he doesn't think it's going to be a big deal. We'll see how it plays out in the coming months.
Currency market today. Let's do that briefly here before we get to Kenilworth Road. And that is Eurodollar 107.44. You and I both saw breaking down through 107. And I'm sorry, it's a free fall to 105. We hit it at a 106 handle.
Briefly.
Weaker euro.
106.73, the lower of the session. 107.44 is where we are at the moment. Touch of dollar weakness against a bit of euro strength, reversing the trend of the last couple of weeks with yields not up but down this morning. But you took us to Kenilworth Road.
Good morning,
so
in the
let's
United
talk about
Kingdom.
it.
Yeah, this is something, folks. When you're, I love in England how you get relegated and you go down, and just as much you go up. And they're kicking penalty kicks at Wembley here in the weekend, and John saying, shut up and watch this. And one of the announcers goes, this penalty kick's for $170 million. I'm
serious
like, whoa.
money, serious TV money, serious money for getting promoted from the Championship to the Premier League. And what we're looking at, Tom, is Luton Town. And congratulations, first of all, to them. Utterly unprepared to host Premier League football with a stadium that seats about 10,000 and an entrance to the Oak Stand that looks like walking into somebody's house.
So translate this for mere mortals in America like me. The Hatters of Luton Town are going to have Liverpool show up.
Liverpool. Mo Salah is going to walk through there.
On radio, it's a simple brick building with a blue stand and a bicycle in front. I mean, this is more basic than Richmond. You know, where
how
Ted
cool
Lasso's
is this, though? I
coaching.
mean, come on, how cool is this?
This is so much better than America.
This is so cool.
I mean, I'm sorry. I really love it. And one more comment on this before we get to our football expert, Lee Farage. But the basic idea, John, is all the people that went up last year, is it 3, right?
They all stayed up.
They all stayed up.
They all stayed
and that's
up.
rare.
Southampton, Leeds, and then Tom Leicester, which is just shocking considering they won the league back in 2016. All relegated to the championship.
Baseball would be so much better for this. There's just no question about it. We need to speak to someone expert on this, also on macro strategy of North America at State Street. Lee Farage joins us this morning. Lee, are you going to go to see Luton, whatever it is, the Hatters when Liverpool stops by?
I would love to, yeah. It'd be fantastic to go and watch a Premier League game at Kenilworth Road. Whether I'll be able to get a ticket, I'm not sure, because, as Jonathan said, there's not many tickets available, so I think it'd be pretty tough to get one of those.
We're going to see the ticket with inflation. Let's just go to this, because I think it's something, John, and you are living with your families and all. The inflation in the United Kingdom is of an absolutely different character. We're talking about sticky inflation in America. How sticky is 9% food inflation in the United Kingdom?
Well, I think the food inflation is actually higher than that, Tom. It's 19% food inflation. You know, overall inflation is coming down, but still in the 8s. It's remarkable given how the consumer in the UK is struggling, how real incomes are falling, how mortgage rates have gone through the roof, which is very different from what we're seeing here. New mortgages here are higher, but not existing because we're all 30-year fixed. In the UK, people's existing mortgage payments in some cases have trebled. And yet inflation is proving remarkably sticky, and this is such a difficult position for the Bank of England. And it was interesting last week, we got the very strong inflation. We're pricing 4 hikes by the Bank of England, but sterling didn't go up. Sterling went down last week on the back of that, because now the market is focused on, okay, you're going to have to hike a number of times to cure inflation, but what is that going to do to the economy over the sort of, you know, the medium term? And the answer is it's not going to be pretty.
It felt a bit like September, a replay of some of that, Lee. What's been amazing just sitting here, Lee, over the last couple of weeks, speaking to people like you, people we admire in the market, is just feeling the tide start to turn. All this enthusiasm for the rest of the world, for Europe, breaking down with a couple of data points out of China, a reality check in the Eurozone, if you will, with Germany potentially heading into a recession. And Lee, at the same time, you've got this monster outperformance on the market cap weighted S&P 500, on the NASDAQ, relative to the equal weight, relative to what's developing in China, overseas and elsewhere. And Lee, I'm just wondering, and Tom and I have been talking about this going into the weekend and coming out of it, whether we face another period of US equity market exceptionalism because of this AI theme.
Well, I think because of the AI and also because of the relative strength of the economy. And, you know, I've been on here and I've talked about this before. The US is in a very different place from the rest of the world. And 91% of mortgages being 30-year fixed will do that. The consumer here is just not hurting. We have a very strong labor market. We still have excess savings from the pandemic. Yes, it's limited to those of higher income, but they're spending it. And at the same time, we have this fixed rate economy, whereas you look at the rest of the world, RBNZ stopped hiking last week, worried about the consumer because mortgage rates have gone up. Bank of Canada have stopped, RBA have stopped, Bank of England have got to carry on, despite the fact it's probably going to mean a deep recession in 2024. The US is in a very different place. So you've got the AI element, you've also got the underlying economy, which is in a very different place from the rest of the world because of the structure of our lending market.
So Lee, this is peculiar for you, almost original. You sound almost constructive, the US equity market, is that right?
It's a relative story, Jonathan. I'm not sure I'm constructive on the equity market absolute terms. But relative, you've got to look at the US and say, look, the US economy is in a very different place from the rest of the world. The Fed, we're still pricing the Fed cutting before anyone else. And that bit I don't understand. We've taken out a lot of the cuts, rightly so. We still have a cut by January, and yet no one else has a cut in that early. Why have we got an earlier cut in the US when the economy is holding up so much better than elsewhere and the inflation is still sticky? We saw the PCE on Friday. Why are we going to be cutting before everywhere else that's actually, flirting with recession, in recession, on the edge of recession. We're nowhere near it yet.
So, Lee, just listening to you, they're the kind of views that I'd be wanting to push through the FX market, develop a little bit more dollar strength. We've seen some of that. Lee, as you look at that differential potentially closing, how would you play that theme?
I think you play it through the dollar. I've been bullish on the dollar for a little while. It's rallied back well. We got over 140 on dollar yen. That's probably coming to the end of the story. But I think when you look at euro dollar, you look at cable, you look at the dollar against the commodity currencies, I think this has got further to go. I mean, I think, look, eventually the dollar's going to be a great sell. It's overvalued, it's overowned, etc. But what we're seeing is institutional investors are now buying dollars again. The first time we've seen that since March. They've been strong dollar sellers. They flipped around. They're buying it again. They're looking at this U.S. exceptionalism story again. So I think that momentum and this relative rate pricing can carry the dollar through. Probably during Q3, we're going to see more dollar gains. We're up around 3% from the lows in the DXY. I think there's another 3 to 5% to go on that story.
Oh, give me some levels then. We've got dollar index right now just short of 104, cable at 124, euro dollar a break at 107 earlier, 107.43. What do I need to look out for on the single currency, Lee?
I think we're going to see 105 before we see 110 in euro dollar. We're going to go below 105 before we see 110 again. Sterling, I think we're going to see below 120 before we see 125. And I think sterling we're going to get back down towards 115 over the course of the second half of the year.
Wow.
But I think certainly right now, yeah, I'm looking at the emphasis now. We've seen the sort of dollar yen move. I think the emphasis now is going to switch to dollar against Europe.
I just think this is too important. I mean, you two are seriously knowledgeable about this. The new coach at Chelsea? Are you kidding me? I thought
you want to talk. You want to go from a 1:15 call on cable to Pochettino over at Chelsea.
Just think how about Pochettino's getting paid and sterling gets to convert. It's going to be great. I mean, but the bottom line is the guy's supposed to go to the Tots and he went to Chelsea. What's that about?
You'll have to ask the man himself over at Spurs.
You know, I just
see what Dan Levy's up to. I've got no idea.
Get on a plane, John. Get over there and figure out
I've got no idea.
Is going on.
No
Lee
idea.
Farage. I mean, just
Lee making some monster calls there. TK
115 is a huge call.
124
That's edge of
right
Brexit.
now.
You know, I mean, I'd like. We got to get Lee back on here soon. I want to talk to him about Brexit.
Lee Farage is State Street. You want to talk about Brexit? Why?
Yeah, I think everybody's underplaying it. Is Brexit a success or a failure? And you know, I'm looking at the stickiness of inflation in the United Kingdom. That's killing people over there.
Going back to 2016, when Leicester won the league, 7 years later relegated.
Yeah.
Just shocking.
My friend John just said, you know, he
Shocking.
just said they're destined, and you know, there it is.
It's sad. Greg Valliere of AGF Investments joining us next on this debt deal in Washington, D.C. with one eye all morning on this. NVIDIA session highs, 408 in the pre-market with a $1 trillion plus valuation.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The White House and Republican congressional leaders are gearing up lobbying campaigns to win approval of a deal to avert a U.S. default. Both President Biden and Republican House Speaker Kevin McCarthy expressed confidence they would muster the necessary votes. The bill will suspend the debt ceiling until January 1st, 2025. In exchange for Republican votes for the suspension, Democrats agreed to cap federal spending for the next 2 years. More than 30 NATO soldiers have been injured, along with at least 50 locals in northern Kosovo, as Serb protesters clashed with police and then with NATO peacekeepers. The demonstrators were seeking to block newly elected ethnic Albanian mayors from reaching their offices. The worst flare-up in violence in years threatens an EU-brokered plan to normalize ties between Kosovo and Serbia. Elon Musk's private jet has landed in Beijing in the billionaire's first visit to China in 3 years. The Tesla chief already met with Foreign Minister King Yang and said the company is willing to keep expanding in the country. Sources tell Bloomberg Musk is also expected to meet with Premier Li Chung, as well as visit Tesla's Shanghai factory. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
bigger challenge.
Britain's next.
It was going to keep Green World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make a decision.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
I'm definitely heartened that you saw both parties there on the program expressing confidence that they're going to be able to raise the debt ceiling. Now, the fiscal decisions, of course, are between Congress and the president, and however they sort it out is good by us. But if you did not do that, the consequences for the financial system and for the broader economy would be extremely negative.
Trying to get used to this, a new face, of course, at the Federal Reserve, Austin Goolsbee, well known to us all, good friend to this program over the years, Chicago Fed president, speaking on CBS over the weekend, and one individual on the FOMC, the Committee on the Federal Reserve, leaning towards a potential pause at the June meeting. Before we get to that June meeting, we still need to deal with the payrolls report on Friday, then the inflation report, CPI, the day before the Fed meets. Bear in mind the blackout period, the quiet period for Fed speak, starts this weekend. So this is the final stretch of Fed speak so far, Tom, over the next couple of days. I think a lot of people share that view.
I mean, we're doing less of it here because Bramwell's not here. I mean, Bramwell would have, pushed the
I'm always suspect, of the person who takes a day off, calls in the day after a long weekend.
Yeah.
Always suspicious of that, Bramo. Always suspicious of that.
You wonder how it's going to go.
You extend the weekend,
Yeah.
Where have you been? What have you up to?
I had fun this weekend.
What did you do?
I had 3 sailors show up at my house here with the United States Navy in Fleet Week.
3 sailors came
3
round.
sailors. They were submariners.
Did you invite them or they just turned up unannounced?
No, they were outside drunk and we took him in. No, they were family members, wise guy.
I've got no
one
idea.
Was from Maine,
who starts a conversation with 3 sailors turned up over the weekend?
Up. They're in their fancy uniforms. One's on the 2 are on the Oregon, which is a new submarine.
Okay.
Costs $1 gajillion. Our family members on the Montpelier, which is an older submarine, and these guys are serving the nation. And they go out, you don't know where they go, and they're underwater for months and months and months.
Were you polite? Did you thank them for their service, or were you rude to them like you often are?
I served them a case of Jenny Cream Ale, and they said thank you.
As you should, good.
As I should. And what Greg Vallier knows is this ties directly in to our sailors and our officers is they are on aircraft carriers, submarines, and everything else in the military and this budget debate. Mr. Vallier is with AGF Investments. Greg, you absolutely nail it this morning by getting beyond the cable TV idiocy to the Senate's outrage over the defense of our nation. What are we going to see not in 2 days? What are we going to see in 5 and 6 days from senators worried about the Pentagon?
Well, it's going to be a big deal. And Lindsey Graham, a famous hawk, blew a gasket on, I think it was Fox on Sunday, because the defense spending in this bill will be lower than the rate of inflation. So for a country that doesn't spend as much as people think we do out of our GDP on defense, this really angers a lot of Republicans.
It angers Republicans, but I'm going to suggest the Democrats are going to show up as well. I mean, is it this is critical, Greg, is it a bipartisan fury of our officers and sailors, our infantrymen at risk? Is it bipartisan in the anger here?
It is, but we can't default. I think people realize that a default would be even worse. And during the course of this year, Tom, I think there'll be supplemental funding for the Pentagon. There's ways you can still get money from the government, and I think that you will see more spending during the year. But there's a lot of complaints right now. Just to bring it to tonight, there is a big vote tonight in the House Rules Committee. I think that Kevin McCarthy will prevail. But I think this thing drags on because of Lindsey Graham and others into next week. And it probably gets right up until June 5th.
Well, Greg, that's what I was going to ask. Do we have a week?
Well, that's a good question. Here's what I would say. If we hit the deadline, the Treasury can sell bonds out of the Highway Trust Fund. Treasury can sell bonds out of the Social Security Trust Fund and pay them back a week or two later. So I think it's highly unlikely that we would see a default. And I would add, if there actually looked like there would be a default, I think the markets would get so jittery, it would finally send a message to Washington.
Greg, we ask ridiculous questions in politics sometimes, like who wins,
Right.
who wins, who won after the weekend. Who do you think's doing a better job of just presenting what they got out of negotiations? Is it the president or is it Speaker McCarthy?
Well, I think the president's always been underestimated as a negotiator, and I think he did a pretty good job. The surprise to me, though, is Kevin McCarthy. I think he was held in low regard until a few months ago. He became House Speaker. He got something done. They didn't get all that they wanted. In fact, in this final deal, a lot of what they wanted got whittled down, especially on the total spending cuts. But no, I give both of them credit. But I think Kevin McCarthy is now a serious player.
Greg, the senator from West Virginia got a pipeline moving south from Harris. I believe it's Harris, West Virginia, on south across the border. Maybe it's Harris where it goes across the border to Pennsylvania, just southwest of Appomattox. Can you give out pipelines? There it is, from Bradshaw, West Virginia to Pennsylvania, Virginia. Okay, there's a pipeline for Joe Manchin. Can you give conservative Republicans a pipeline?
You can give people anything. And this was audacious. That's typical of Joe Manchin. He gets what he wants because he's still whispering that he may run for president. So everybody has to placate him.
Well, what about the 10, the 12, the 14 people blocking Speaker McCarthy's efforts? Can he give them a bone that's highway-like or pipeline-like?
Sure. I'm sure there are people who are going to have post offices named after them. There's lots of deals that are being cut right now to get this one holdout to vote for them later in the day.
Hey, Greg, what do you make of what the Republican candidates for the presidency have got to say about the deal that was struck?
Well, DeSantis was really strident and said, it was a terrible deal and we're still headed toward, financial ruin. It was a pretty strong statement. DeSantis now is in a position where he's got to throw bombs because he's so far behind that I'm not sure he can catch up.
Greg, just a final word on defense spend in America. And not for me to say what that level should be, by the way. Greg, can you just go through the numbers for us and really paint a picture of how much a percentage of overall spending defense spend actually is, and get to the heart of the issue? That if you do want to do something about the deficit in this country, don't they have to rethink what's happening with defense?
Well, I would say no, because we're not spending enough on defense. As a percentage of GDP, we're spending less than 3%. We complain all the time about Canada. They're not spending 3% of GDP. A lot of other countries aren't as well. And I think that as the Wall Street Journal consistently points out, we're not spending enough on defense by any historical yardstick.
So, Greg, if that's the case, where does that leave any negotiations over ever cutting spending and doing something about the deficit?
Well, you got to talk about revenues at some point. I mean, at some point that we have to at least look at taxes. I'm not saying we need a big, huge one, but fearless forecast, guys. The next big fiscal story is the expiration of the Donald Trump tax cuts in a couple of years. That will make this fight we just went through look like a picnic.
Greg Valliere, looking forward to that of AGF Investments. TK, you can see where this is going, can't you?
Peter
Just
Coy,
to some of that.
Peter Coy, wonderful at the New York Times. He absolutely nailed that in his essay on Monday after this deal. He said, look, we're all talking about spending. When do we start talking about revenues? You just heard that from Mr. Valliere.
And you saw that in these negotiations, that was just a non-starter, a red line.
Yes.
For Speaker McCarthy.
Yeah, it was. And you know what? I just hope everybody in Washington got their trades in on the NASDAQ this weekend. I mean, I guess, are they still allowed to trade?
NVIDIA 407. NVIDIA 407.
I mean, this is, and I just did a quick scan of industrials. The Dow's not there. The Dow's actually flat to red on the screen. This is a tech rally, a tech relief rally, even with SPX up 0.6%, NASDAQ up 1.5%.
It's a monster rally. To cover that monster rally, Aaron Kennan of Clear Harbor, Victoria Fernandez. She'll be joining us from Crossmark, Andrew Sliman of Morgan Stanley, right on cue. Looking forward, Tom, to catching up with Andrew in about 30 minutes' time.
Now, we're going to listen to that because you got to reframe here. If you're in the game, do you load it up? And critically, Andrew, we'll talk about people that have been comfortably in cash.
Comfortably in cash getting 5%.
Guy stopped me. I was mowing the lawn in the park over the weekend. You know, the
on that deer mower, yeah.
And John Deere, and the guy came up. He says, "You got NVIDIA and the triple leveraged all cash?" I said, "No."
Nope. Does 5% cash start looking like trash for moves like that?
We had to gross out 13.2%.
Sucked away, and then get slapped around. Classic equity market stuff.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Bloomberg Surveillance 4-day work week is Tuesday, not Monday. Feels like a Monday, but it is not. We've been looking at the festivities in Washington and certainly the festivities with a continuing advance in NVIDIA. You see it with the NASDAQ up a solid 1.4% off Friday's good move. SPX up 24 points as well, up 0.6% right now. The VIX 17.14. It'll be interesting to see how that folds out. Right now, we're going to go to the economic data, except there isn't any. Michael McKee joins us here as we stagger into the week. I mean, we've got jobs day on Friday, but first we got to look at housing data. The first thing I looked at this morning was a bank rate 30-year mortgage. Does the Fed care that we're at 7.17%? The moving average of the 30-year mortgage is right back up where it was before?
I don't think they're looking at the specific number, but they are interested in slowing down the economy. So the slowdown in housing is a good thing, but the problem for the Fed, of course, is that with nothing for sale at this point, because nobody wants to trade in their low-rate mortgage, then prices go up on housing, and we had seen and hoped for a dip in the housing component in the inflation numbers, but this may wipe some of it out down the road. A lot of what people are talking about today, though, is what's going to happen to the economy from this debt deal. We're waiting for the CBO score.
It's exactly what I'm waiting for.
But I have been reading through all of the research from the various Wall Street shops, and basically the consensus is you won't even notice it. It'll be like 0.1% or 0.2% a year from now. That's going to be the problem. And this is all against the CBO baseline. It's not like an actual, here's what we're spending and we're going to cut it by this much. It's what they thought would happen prior to this deal. So it's not a really big deal overall in terms of the economy, with the one exception of the law codifies the idea that the suspension of student debt payments ends at the end of August. And those people probably have a higher marginal propensity to consume. And so that money that they were saving and spending, they won't be spending. And that could have an impact. Mike Feroli from JP Morgan suggests that because it'll be concentrated in a short period of time, could be maybe about 25 basis points or something for a quarter if people stop spending on other goods.
There's a judicial ballet there as well within student loans that we'll have to see. As well, you and I follow CBO with immense respect. When will they weigh in with a bipartisan analysis of what was wrought this weekend?
They're going to need to get it in the next 24 to 48 hours because they need to have it before the votes in Congress. And so I would expect something fairly quick. And, you know, if the guy sitting around the computer at one of the Wall Street banks can come up with a model, they can come up with a model as well.
Are you modeling, you know, you're not in the economic game like Steve Stanley is, but are you modeling a 200,000 statistic for non-farm payrolls on Friday? Early report?
You know, it seems possible because we've been surprised by jobs to the upside throughout this whole process. People keep pushing in the Bloomberg survey for lower numbers, and it doesn't happen. Interestingly enough, Mark Zandi from Moody's suggests that the budget deal could mean we have 120,000 fewer jobs created over the next year, which again is something that you're barely not really going to see in the data all that much. But the number of jobs created has to come down, or the Fed's not getting what it wants.
Michael McKee with us, of course, doing all of our economic coverage. And in a time here where we're really resetting into June, the final month of the first half of the year, what a wonderful time to catch up with Stephen Stanley, Chief U.S. Economist, Santander, the U.S. Capital Markets Operation. I have to go to the housing data this morning, and that finally, with Carl Case and Robert Schiller's wonderful index, we're back to negative statistics year over year. Mike just mentioned that the housing economy is completely messed up with locked mortgages and all that. Can you predict the housing economy now, or do you just give up?
Well, I think there are a couple of things that we can start with. We know in the long term that the market has been undersupplied for a long time, and that was exacerbated for a time during the pandemic. I think, you know, we've had a sharp cyclical drop in demand as mortgage rates rose. But I think once things normalize, we're going to get back to a period where the supply is tight. So I think, you know, there's a strong underlying bid for housing. I think the other thing is, as Mike suggested, because there's a lot less existing home supply on the market, the share of new home sales as a percentage of total home sales has increased. And that's actually a good thing, because what we're working through right now is an excess of new home inventories. Builders had gotten basically had kind of gotten out over their skis a bit when demand pulled back, and now they're trying to work down inventories, and they've been able to do so faster because there's less competition from the existing
You
side.
are acclaimed for microanalysis. What do you learn from rent studies as you look at home ownership and for what it means for the whole economy?
Yeah. So, I mean, I think we kind of go back and forth on this from periods where the overarching goal is for everybody to own a house. We've certainly, have gotten ourselves into a little bit of trouble getting too enthusiastic about that. I think mortgage rates at these levels obviously change the equation quite a bit. But I will say, Mike before brought up the whole shelter cost piece of the CPI. And my big take there is that the movements there tend to be much more gradual than I think people are kind of braced for. I feel like there's this sense of, well, as soon as we peak and start to turn down, we're going to be 3-4 months and we're going to be in negative territory on this. And if you look at the data for the housing boom and bust 15 years ago, it took about 2.5 years to go from peak to trough on the shelter cost piece of the CPI, and the trough was basically flat. And that was a point in time when home prices were falling 20% a year.
We got coming up here at 9 o'clock, Case Shiller, 20 cities, and the survey's a negative statistic.
Yeah,
negative growth.
As Steve said, that takes a very long time to get into the CPI data. However, Steve, one thing that economists are pretty good at is forecasting CPI. And given that, at this point, is it really going to be as big a deal on June 13th, the day before the Fed decision, in terms of them making a decision? Or do they have a pretty good handle on it? And if so, what does that tell you about what you think they might do?
Well, I guess for CPI, a 10th surprise is kind of a big deal, right? So if you get a 10th higher than people expect, particularly, I haven't done my forecast yet. I don't know what the consensus is going to be, but let's assume the consensus is probably going to be 0.3 core, because that's usually what the consensus is. If the number comes out at 0.4 or even 0.5, I think it starts to raise some eyebrows. I think what you're seeing from Fed officials, or what you're hearing from Fed officials, is very much in line with what the data are showing, which is they're starting to get a little frustrated that they're not making any progress at all. I mean, you look at, so core CPI has been 0.4 or higher for 5 straight months. So, to your point about employment, the same thing on prices. Hope springs eternal. Economists keep forecasting 0.3 core, and we never seem to get it. And I think their feeling is that we're not seeing improvement in that piece that they've highlighted, that core services ex housing number. And until we see some sustained improvement there, I think they're going to be on edge.
I want to change the subject back to the debt deal for a second, because you really follow the Treasury market very closely. And there is a theory now that Treasury, having spent everything they have in the bank almost, is going to rebuild their account very quickly. The latest borrowing needs said they hope to be at $500 billion by the end of June. Right. If they do that, is it going to cause a massive liquidity drain like some people are predicting?
There's definitely going to be a huge ramp up in Treasury bill issuance. I would say it's not going to be as big a deal as it could be, because there's still a tremendous amount of excess liquidity sloshing around in the system. The Fed has done a little bit of QT, but there's still, trillions of excess reserves in the system, excess liquidity, I should say, in the system. And so I think that will help to absorb the bill supply. But yes, we're going to get bill supply coming hot and heavy over the next month or so.
Away from the pandemic, is there an analog to where we are right now? I mean, we have these historic moments, 94, obviously 01, the NASDAQ bubble and all that. But in your mind, Stephen Stanley, all you've done, Royal Bank of Scotland years ago and the rest, is there an analog to where we are right now, exiting the pandemic?
Well, I think the economy's in a bit of a weird spot, right? Because you're, a year, 2 years out of a recession. And most of the business cycles in the last 30 years have been quite long. And yet the Fed has had to ramp up rates very quickly. And, the consensus has been for over a year now, it seems that the economy's 3 months away from a recession, right? So I think there's a presumption that that this cycle is going to be very short, and we'll see whether that plays out, because you don't really have the cyclical or the imbalances, the structural imbalances in the economy that develop over a long cycle. But what you do have, which we haven't had in a very long time, is tight monetary policy.
Mike's got a question for you. He wants to know what you're going to ask June 14th at the press conference. Could you imagine Stephen Stanley at the press conference? They just ignore him.
That's an interesting idea. We could ask Steve, what is it that you want to know from the Fed that you don't know, given how much all of them talk?
Well, I think that, you know, there's all this question about pause versus skip, and I think the issue in my mind is what exactly are they hoping to see? And we have the quarterly forecasts, so I mean, I guess we can use that as a baseline. But you know, as I said before, I think in my mind, what I see when I see those forecasts, and then I see what's really happening, they're expecting a much bigger back up in the unemployment rate. We've got none of that. They're expecting inflation to come down pretty rapidly. We're not seeing that, at least in the core numbers.
We're running out of time here. When do non-farm payrolls break?
I think it's going to be a while. I think there's still pent-up demand in the labor market in certain sectors.
It's just... Stephen, thank you. Stephen Stanley with Santander. That's so important what he says there. He's won every award out there, folks. And for him to say, you know, Michael, the gloom, and you know this way better than me, we got people looking to come down to under 100,000. We've even got people that have boldly said we're going to see negative non-farm payroll statistic.
Yeah, I mean,
say Mr. Stanley's pushing against that.
If you want to get to the Fed's unemployment rate at the end of the year right now, you need many months of negative employment statistics. But they're going to change their forecast.
Yeah, the importance here is, I'm sorry, June 1 is coming up. June 2, Jobs Day, with all the work of Michael McKee. That's on the edge of getting towards the end of the year. Futures, I'm going to call it a daily high up 25, up 0.6%. NASDAQ up 1.4%. Stay with us. This is Bloomberg. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia said it downed 8 drones aimed at Moscow early today, the biggest attack on the capital since the start of the war with Ukraine. The Kremlin has intensified its bombing campaign ahead of a long-awaited Ukrainian counteroffensive to retake occupied territory in the country's south and east. Ukraine has accumulated billions of dollars for weapons from its U.S. and European allies for that military assault. The European Union has stripped out explicit references to China as a non-market economy in its joint trade strategy with the U.S. Bloomberg has learned EU nations agreed to a watered-down text of joint conclusions from a meeting of EU-U.S. Trade and Technology Council in Sweden that begins today. The newest version obtained by Bloomberg also softens earlier language on approaches for screening outbound investments. NVIDIA is set to become the first chip maker to achieve a $1 trillion market capitalization. The company's blowout revenue forecasts underline the enormous growth potential from artificial intelligence. NVIDIA is poised to be one of 5 U.S. companies with such a capitalization, joining Alphabet, Amazon, Apple, and Microsoft. Only 9 companies globally have ever achieved this level. And Canary Wharf has become the latest symbol of the global real estate downturn. Moody's has downgraded the debt of the landlord and predicted a challenging funding environment for at least the next year. Now, the East London Financial District, home to the skyscrapers of HSBC and Barclays, says it may need to rely on asset sales to repay borrowing or inject fresh capital into the business. Canary Wharf has more than $1.7 billion of debt coming due in 2024 and 2025. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of 2 different staffing needs, right?
Yes.
And making sure you have the right amount of people
yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
If inflation stays sticky, or it comes down because we enter a non-trivial recession, it's equities that I think are a scary place. They're not priced very consistently with bonds, and we're going to find out who's right in the next year.
Cliff Asness of AQR speaking with David Rubenstein. Mr. Rubenstein, you could watch the full conversation with Mr. Asness, Dr. Asness, Bloomberg Wealth, with David Rubenstein tonight, 9 p.m. in New York. I really can't say enough about this, folks. Cliff is one of the recent graduates, I should say early graduates, of a huge double-degree program at University of Pennsylvania in computer science, and then on to Chicago, one of the sharpest guys out there, whether you agree or disagree with him. Serious, serious conversation for Global Wall Street. That's what we like to do with Damian Sassower. Always interesting, but ever more so where the idiosyncratic is not becoming idiosyncratic. You can say suddenly things change in the emerging markets. He's chief emerging markets credit strategist for Bloomberg. I don't even know where to begin. There's so many stories to go. Let's start with Turkey. Okay. With an election, sure. We print through 20. It's like Dow 10,000, 20 lira per dollar. It's convex log. There's a momentum to it. What does Erdogan and Semsek, if he is selected, do, the ex-Merrill Lynch dynamo out of Istanbul, what does Erdogan, Mehmet Semsek, do to staunch the move?
Well, it's amazing. Semsek was once the deputy PM under Erdogan in 2018, but then he was replaced by Erdogan's son-in-law, Albayrak. So, yeah, no, it's nice to see him back. It's nice to see some continuity returning, hopefully, to the Central Bank of Turkey. But I think, look, I mean, if you listen to people like Morgan Stanley, they're calling for dollar lira at 28 by the end of the year. You look at the market itself, it's pricing in something on the order of 25. So there's more pain ahead for the lira. But I mean, I can remember the days not too long ago, Tom, when we were talking about 6-handle, 7-handle in lira. You're absolutely right. We're over at 20-handle now.
But this is not a banana republic. It's not, I don't mean to make a joke here, but this is not a Steve Hanke down at Johns Hopkins country. This is Turkey, a NATO nation. Yeah. How does the politics fold into the pricing and sweat of your EM debt price down, yield up?
Well, certainly, I mean, investors aren't really invested in Turkey anymore. I mean, it's down 85% over the last decade, so there's not really any positioning there to speak of. I think what's interesting, though, I mean, you have to think about the earthquake. You have to think about the fact that net FX reserves are now negative. They've actually formally, officially announced that they have no FX reserves left to protect the currency, and yet they have such control over it. I mean, let's be real. I mean, Erdogan and basically the policymakers there have complete control of the lira. People can't move their money into and out of Turkey with any regularity whatsoever, so it's not a speculator's market anymore. So I think what you have to do is you have to look at what might come next. Yes, you might see rate hikes coming back into the fray, but is it really going to be enough to protect the economy and defend the currency? Probably not.
I just don't think they can put up walls around it like they did in Constantinople years ago. I'm going to go to the blue dollar. I got a great chart from our people in Buenos Aires of the black market in Argentina. And I know it's a discrete story. The IMF has given them a ton of money. They failed. The blue dollar peso, the peso's at 238, folks, per dollar. And the black market peso is at $4.99 to print 500 today, I presume.
The real story in Argentina right now is China. Is the fact that
the swap market
is because they haven't renegotiated the $44 billion IMF line.
Right.
They are now turning to China. I'm talking Buenos Aires. The Fernandez administration is turning to China to increase that swap line because they can't pay their employees. They can't pay their people.
What is the collateral they will? What are the promises, visible or less visible, that they will make to Beijing?
Well, it's going to be commodities, right? It's going to be their agricultural exports, hopefully, because that's really what, the economy is kind of premised on. But with the drought and all the things that are going on fundamentally there, I don't even think Beijing's going to agree to it. And I think that really takes us full circle here. I mean, going into this year, and really for the better part of the first 4 months of this year, it was about China's emergence from COVID and the recovery. And now that is pretty much off the table. And what you're seeing in China is dollar yuan at 7.08. You're seeing China yields at near historical lows, or at least certainly 5 or 6 year lows.
The equity markets.
And that's telling you everything you need to know about growth globally. I mean, the fact that it is underperforming. But what's really interesting, look at the pro-cyclical equity indices. Japan, South Korea, the Kospi, they're up huge. Look at obviously the NDX, the NASDAQ is up huge. So they're telling you a different story here. And I wonder, we always hear you guys talk about it's just a few, it's just the NVIDIAs of the world that are moving the NASDAQ.
Right.
It's the same thing in South Korea. It's Samsung that's moving the market, pretty much 90% of all inflows.
So let's dovetail this, folks, and this is really important. At the IMF, the bombshell was a 5-year view of global slowdown. Whether you believe in that or not, it's a prediction we'll see out there. And the solution globally is to go to quality.
Yeah.
Where's quality EM?
Well, we're going to have some more confidence this week after we hear the minutes out of Mexico, because if you just look at currencies, which are the most liquid way to play emerging markets, it's the currency market. So on one hand, you've got Mexico, Hungary, Colombia, the high yielders that are up near double digits this year. And on the other hand, you have South Africa, which is down 13, 14% this year. And it's also considered a pro-cyclical economy, but what it is it's a manufacturing driven, it's a commodity exporter. I'm talking South Africa here. So in a services-led kind of rebound, which is what we're seeing globally.
A
tech-led rebound, if you will.
Right.
It's going to be, the pro-cyclical Kospi, the Nikkei. It's not going to be South Africa that leads the way, and that's kind of what we're seeing in the currency markets.
And this is my life, folks. Qantas is in my ear saying, ask him about NVIDIA. Damien Sassar, only I can do this. Tell me about Taiwan dollar off of NVIDIA. I mean, that's where the stuff's made. Give us Qantas wants a Taiwan dollar view. Off of NVIDIA.
So when we've said this, I've said this till I'm blue in the face, the Taiwan dollar is a great funding currency. It's a currency that you would short in order to put on your longs in high-yielding emerging market currencies.
You sell Taiwan and buy what?
And you buy Mexico, you buy Brazil, you buy these high-yielders, and you clip the rate differential. That's really been the play here. What's interesting, I think, for me, is that Taiwan's kind of flat to up slightly on the year. It's actually held in pretty well. And again, it's probably in large part due to Taiwan Semiconductor and the fact that you're still seeing equity inflows into Taiwan, which is supporting the currency on the whole. But I think, look, if we do see a flight to quality move, it's going to be an unwind of these carry trades, and the Taiwan dollar is going to be a leader there. The Japanese yen is going to be a leader there. These are the funding currencies that people have made their mint in emerging markets on for the past 6 months, Tom.
So
all that goes away.
I can do this on the Bloomberg Professional Service, folks. I can take Taiwan dollar 32 down to 30, and you're suggesting it reverts back to strong Taiwan dollar, back to 28?
You're looking at the other way, right? It's dollar Taiwan. So a higher, down to 30 would be a stronger Taiwan, right? It would be a stronger Taiwan dollar in a risk-off scenario,
So what does Japan do? I mean, Japan's not EM, but maybe they got a monetary
140
policy.
and change. They would probably, come down too, right? I mean, again, these are funding currencies, and if we do see this kind of washout and the carry trades get unwound, those are the two currencies that are definitely gonna outperform. But their equity markets already are doing that.
Right.
So it's really quite unbelievable if you just look at it from an investor standpoint. I mean, the market's telling you two different things.
I got to finish up with renminbi. I look at CNY. I know some people look at CNH, the offshore, as well. But the fact is, it's not that it's backed up weaker yuan. It's the way it's done it. Is it managed?
Oh, yes, it is. But I think what's going to be interesting here and what the markets are most afraid of is that Beijing is allowing it to depreciate now because it wants to wash out all the speculative shorts. Once, I mean, I think the fear is that, look, they're going to let it go 708. They might even let it go 710, 715. I mean, that wouldn't be foreseeable. Yeah. But at that point, basically, there's a lot of demand for yuan. From the dollar exporters in China. But I think what's going to be interesting is let's just see if the speculators really get washed out on this move. I think that's what Beijing is trying to orchestrate.
They can control it that much. They can orchestrate.
It trades within a range. It's been a very stable currency. I mean, from a carry to vol perspective, the China yuan is still a pretty it's a pretty good performer.
What's your single best EM opportunity this morning as you write for Bloomberg Intelligence?
Well, I think we got to look at the minutes in Mexico. I actually still like the Chilean peso because we saw central bank minutes out of Chile yesterday. They came in pretty hawkish, much more hawkish than the market anticipated. So the Chilean peso is one of the few currencies that are up today. I kind of like it. I think you can probably still clip some pretty good yields there. I don't think the easing cycle is going to begin by Q3, which is what the market's pricing in. Yeah, I like the Chilean peso.
See, this is the difference, folks. I'm watching Padres go down in flames to the dreaded New York Yankees, and Damian Sassower's reading Chilean minutes of what we'll see. Damian Sassower, thank you so much with Bloomberg Intelligence. Of course, some really important work there. It is an extraordinary time. I think John did a great job this morning of really featuring NVIDIA. I'm like, well, okay, it's $1 trillion company, 26,000 employees versus, say, 270,000 employees for other $1 trillion companies. It's an extraordinary story. We're going to drive this conversation forward, of course, with the leadership of Bloomberg Technology. Look for that through the day. And frankly, we'll go into the Asia morning. Coming up tonight at 11:30 p.m. East Coast time, a follow-on interview from what we did a couple weeks ago, but it's important. This is with our Stephen Engel, our strongest in Asia. Steve Engel with Jamie Dimon. Look for that tonight from Shanghai. You can see that at 11 p.m. New York time. I'll let you figure out the time zones. Damien knows the time zones. I don't really know the time zones. Tonight, Jamie Dimon. This is Bloomberg. Good morning.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
So I think the main thing we did, which was not so easy, was to stick with our process. And then it kicked in big time in the last really 2 years.
So I notice in a couple of drugstores, even in my area, which is not the poorest area in Washington, D.C., it's a nice upscale sort of area. When I want to get razor blades, you have to go to the front of the place and ask somebody to unlock it. Why are you locking up razor blades and other things that I might want to buy?
Yes. So, this is a national problem. And, this isn't, random theft. This is organized crime. And, state legislation has put guidelines on, how much the theft that you can steal before you're convicted. So it's a $1,000 limit. But we have been partnering with other retailers and sharing our camera feed. I know some of our partners here from Walmart are here, but we're all part of an organization that's coming together that says if we can put our camera feed together and tell that person has been in our store and their store, and the numbers are higher than 1,000. So we've been able to impact these theft rings most recently.
What are the things that are unlocking key the most? What are people trying to steal the most, other than razor blades?
I will tell you, it started at razor blades because that's such a high ticket item, but it's a lot of cosmetics. But really what happens is that they take advantage of what I would call the elbow move, and they just come in and swipe a counter. And so it's just a matter of categories now.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. And the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Let's get your week started. Live from New York City this morning. Good morning, good morning. This equity market, this NASDAQ, better than good. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
Live from New York, coming up, Biden and McCarthy working to push through their deal. As Nvidia surges towards a $1 trillion market cap, investors begin to consider one more hike in June. We begin with the big issue. We have a deal.
It takes the threat of catastrophic default off the table, protects our hard-earned and historic economic recovery, and the agreement also represents a compromise, which means no one got everything they want. But that's the responsibility of governing. I strongly urge both chambers to pass that agreement.
We know at any time when you sit and negotiate within two parties that you got to work with both sides of the aisle. So it's not 100% what everybody wants, but when you look, the country is going to be stronger.
And now for the hard part, gearing up for a lobbying campaign on Capitol Hill.
Just because the swamp is flawed doesn't mean the average hardworking American should take it on the chin. Why should they accept that? Sweep the COVID money, sweep the IRS money that was, to expand the IRS to go after the American people.
I haven't seen the text. You know I'm not a big fan of in principle or frameworks. We're all trying to wade through spend right now. At the end of the day, though, the American people have to understand that we are at the brink of default. We don't have a deal yet.
So as expected, some Republicans aren't happy, some Democrats aren't happy. And even though time is short and the Treasury cash balance is below $40 billion, the president is still feeling good.
I never say I'm confident what the Congress is going to do, but I feel very good about it. I've spoken to a number of the members. I spoke to McConnell. I spoke to a whole bunch of people, and it feels good.
If that good feeling is warranted, if this deal passes, it would suspend the debt ceiling until 2025 and cap federal spending for the next 2 years. Goldman Sachs calling it a major reduction in uncertainty, a minor reduction in spending. They say the spending deal looks likely to reduce spending by 0.1 to 0.2% of GDP year on year in 2024 and 2025. Let's get to the Bloomberg team. AMH down in Washington, D.C. alongside Katie Lyons. Anne-Marie, how difficult is the next few days going to be?
Yeah, John, it's going to be difficult. Landing the deal is one thing, and they were able to do that over the weekend between the president and McCarthy really being the final negotiators at the table. And then, of course, getting it through the House and the Senate is a completely different story because both these men are dealing with the far right and the far left of their parties. Today, there'll be one crucial step forward and a test, really. It has to first go to the Rules Committee. There are 3 hard right conservatives that are very critical of McCarthy on this committee. So today, we'll even know whether or not this bill will make it on the floor. But if it does, it would set up a vote for tomorrow. And if we have a vote tomorrow with both camps really calling the centrists within their party, making sure they can get this over the finish line, we would likely see that happen. Then it goes to the Senate. And the Senate, even though you have the president saying he's spoken to Mitch McConnell and he feels like he can get the votes, what you could have is a very long, drawn-out, cumbersome process because already you have senators like Mike Lee of Utah who say it doesn't go deep enough in the spending cuts, and then others like Lindsey Graham who wants to see amendments for higher defense spending because they don't think 3% is enough when you start to factor in inflation. So while there is a path to get this done by June 5th, there could potentially be some drama.
Kaylee, is time against us?
Well, the clock certainly isn't in anyone's favor here because we're now less than a week out from June 5th, which
as Anne-Marie was just alluding to, does provide some challenges because there isn't much room for error, and yet there is room for error in Congress. And we have to keep in mind as well that it isn't ultimately just about getting to June 5th. It's whether the ratings agencies decide that we're too close to the brink, because, of course, we had Fitch putting the U.S.'s credit rating on negative watch last week. We all know what happened in 2011, where we hadn't even hit the X date yet, and the U.S. was downgraded. So certainly there are risks here. We also have to consider the risk for the market of the deal actually making it through Congress, passing, the president putting the signature on it, raising the debt ceiling in time. What that means, though, John, is that the Treasury is then free to borrow and will need to borrow a ton in order to rebuild its coffers. We're talking estimates of $1 trillion in issuance by the end of the third quarter, and that could really create a liquidity drain for this market and ultimately weigh on risk assets, even if there is a deal in the first place.
Let's have that conversation right now. Kelly Lyons, Anne-Marie to the two of you down in Washington. Fantastic work through the weekend covering this deal as it came through. Joining us now is Crossmark's Victoria Fernandez, Morgan Stanley's Andrew Sliman. Let's pick up on that point from Katie, Victoria. Let's pick up on that point. Maybe up to $1 trillion of T-bill issuance coming up over the next couple of quarters. I don't know what the number's going to be. Is that something I should worry about?
Well, Jonathan, I think it depends on how that's going to be funded, right? We say 1.1 trillion are the numbers that I'm seeing by the end of the third quarter when we start to do the budget deal. If we get the money coming out of the reverse repos, then it's just kind of a shift on the balance sheet, and it's not going to be affecting liquidity. And I think that's the key thing we need to be watching here is what's going to happen to the liquidity in the market, because that's been the base that's been supporting the market for the last 6-9 months. If we see money coming out of reserves, then that's a little bit of a different story, and I think we have to be concerned as to what happens there. So I think we have to dig down a little bit deeper than just the amount that's being issued, and also realize what that's going to do to debt coverage, because we're issuing at much higher rates than what we've done before, and it's a tremendous amount. So I think there's a lot of issues to deal with. We look at 2011, everyone likes to compare it to then. Once we got the deal, there was actually more austerity in that deal than what people anticipated, so the market pulled back. I don't think we're going to get that same reaction this time based on what we're seeing in this deal. There doesn't seem to be as much austerity, but the liquidity component, I think, is key. That could drive some more volatility for this market.
Well, let's unpack those two issues and start with the growth story. Andrew, is any of this meaningful enough to be a drag on growth anytime soon?
Certainly, I think higher yields continue to stress the banks. And to the extent that, as Victoria said, there's more liquidity, there's more issuance coming, or higher rates, only will further tighten financial conditions. So I think that's the point of stress in the system right now.
Let's pick up on that point. Victoria, you alluded to it. Are banks going to be competing with the T-bill issuance of the next couple of quarters, if indeed we assume this passes?
I'm not sure how they can avoid it. I mean, this story that we've had over the last 2 months or so has been about banks having to raise those rates. If we see all of this issuance come out, it's a very easy process for people to shift those funds into buying T-bills. I mean, we did it for our clients last week. We had clients calling us saying, hey, we're moving some cash over to you. We want short-term treasury bills to capture that 5% plus yield that we're seeing because we're not getting it at the bank. So it's already starting to happen. Does that continue? It could. So what does that mean for banks? Well, they've had a tough time since the banking crisis started back in March, but I think they can level that off a little bit, raise rates a little bit. Yes, it hurts their margins, but I think they're going to have no other choice but to do that.
If we can park this and refocus on the data, payrolls on Friday, June 13th CPI, June 14th the Fed decision. Victoria, I've got Andrew Hollenhorst over at Citi setting the bar pretty low. He says 200,000 new jobs out this week, another 0.4% month-on-month core CPI read. He says this Fed's going to hike in June. Are you on the same side as that?
I don't think I can disagree with them from where we sit right now. Look at Fed Fund futures. I mean, you've got a 67% probability that we're going to have a 25 basis point rate hike in June. Last week, that was at 20% chance. So it's been a huge shift because we're not seeing inflation come down at the rate that the Fed wants to see. Now, if you tell me JOLTS numbers comes down, if you tell me we get more people coming into the labor force and we're starting to see some cracks within the labor market, then perhaps the Fed says, all right, we're going to pause a little bit. but monthly CPI continues to hold strong. You look at the weekly economic indicators coming out of the New York Fed, they're holding steady. We're not seeing that decline like the Fed is wanting to see. So I don't think we rule out a 25 basis point hike in June, although I think the other thing that we might see is a skip, not a permanent pause, but a skip there, and then maybe reassess in July. I think those are going to be your two options.
At the start of the year, people were itching to buy T-bills, whatever. And if I promised you 5% for the rest of the year, a lot of people would have taken it. It looked good. Cash wasn't trash anymore. It gave you 5%. Then, Andrew, Meta happened. Nvidia happened. The NASDAQ happened. Andrew, there's this great quote from you and our colleagues here at Bloomberg in the last week, and want to share it with our audience who might not have read it. If I were a financial advisor and it gets to October, November, and I haven't made money for my clients because I'm heavily in cash, I would start to get nervous. Andrew, do you think they're getting nervous right now?
No, I think it's too early for two reasons. Number one is it's too early. We still have to get through the summer. It's always a rocky time for equities. And the stock market's up single digits. So single digit stock market versus 5% or whatever risk-free, is not compelling enough. I think it's when you start to get returns where if the market breaks above a double-digit return and you're still sitting around waiting for that big pullback that so many strategists have predicted, that's when the nervousness sets in. I just think there's a high level of fear, and it's only a question of when does fear pivot to FOMO, and you're seeing markets move higher. People are generating returns in stocks versus sitting in cash.
I can see that fear right now in Nvidia, the fear of missing out.
Yeah.
Andrew,
Yeah,
that
absolutely.
name right now, 406. The line in the sand is 404.86. That's the $1 trillion market cap line in the sand. Victoria, how deep is the FOMO right now, looking at that name on the screen?
It's pretty deep, Jonathan. I mean, we had clients call us last week saying, do we need to switch and be more growth oriented in our large cap strategies where we have more of a core focus right now because of exactly that. They do have a fear that they're missing out on some of those elements, but we have to talk to people and go, look, we've got to look at balance sheets. We've got to look at valuations. We know there's this element here. We have exposure, but do you want to overweight to a stock that's trading 175 times forward earnings? It's a little scary to do that, I will admit, as a portfolio manager. So I think you have to balance that. You have to have some exposure for your clients there, but I also think you have to talk to them about valuations and what it means to have a more diversified portfolio and have some of those more defensive stocks, because quality is the factor that's leading overall right now with such narrow breadth in this market, and you can't ignore that.
What a run. We'll continue the coverage. That stock up by more than 4%. Victoria, Andrew, sticking with us. Equity futures going into the opening bell about 20 minutes away. Futures positive by 0.5% with some movers. Here's Abby.
You gave the number, John, and it is 404.86 on NVIDIA. Above that, and we are above that level right now in the pre-market, means $1 trillion achieved for a chip maker. The first time that this will happen, potentially likely to happen, and that comes on that blowout quarter and the massive enthusiasm, the mania for AI. It's also helping out Palantir Technologies. Take a look at that stock soaring up 7%, another AI play. And Kathy Woods is saying that Tesla is an AI play. Christian Fromhertz of Tribeca Trade Group told us this last week as well. That stock up 4%, and we've just even had a headline, John, that CrowdStrike is now announcing introing AI-powered security. If you have those two letters, your stock is higher.
Of course, why not? Just throw out AI and see if it sticks. Abby, thank you. Coming up, NVIDIA continuing to fuel the AI frenzy.
Every 2 years, we take giant leaps forward, and I'm expecting the next leap to be giant as well.
NVIDIA looking to become the world's first chip maker with a $1 trillion market cap. That conversation up next.
So many people recognize you because you have a very famous hairdo that I've asked you about before. But to some people, they may say, well, Ken, what happened? Where did that hairdo come from and where is it gone? Because right now it seems a little different than what I've seen before.
Yeah, it's growing out a little bit, David, but COVID, I ended up with hair going back down to my shoulder, and I finally realized that one of the things I had to do, I'm a very loyal person, and I used to have hair down to my waist in my college and my hippie days before that in Ann Arbor, Michigan, and I had it cut off in the summer of '75, and I've gone to the same person, now a grandmother many times over, who was a young gal cutting hair in Amherst, Massachusetts, and I still seek her out, and I finally just said to her, COVID's enough of a change that I ought to be able to do something new.
This is Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
Every 2 years, we take giant leaps forward, and I'm expecting the next leap to be giant as well. This is the new computer industry. Software is no longer programmed just by computer engineers. Software is programmed by computer engineers working with AI supercomputers. These AI supercomputers are a new type of factory.
It's the hottest stock in big tech. It is arguably the hottest stock in the world. NVIDIA, rallying ahead of the opening bell, poised to become the world's first chip maker with a $1 trillion market cap. This coming after unveiling a batch of new AI-related products in Taiwan. The company's CEO feeding the frenzy, saying all the right things, telling graduates during a commencement speech, quote, agile companies will take advantage of AI and boost their positions. Other companies will perish. Adding, quote, in every way, this is the rebirth of the computer industry. Alex Webb joins us now for more. Morning, Alex. Quite a speech from that man.
Absolutely, and it was really interesting actually when you look at the industries that he was willing to talk about. He was talking about the gaming industry, obviously very significant in its own right, but he also talked about this partnership with WPP, that's the world's biggest advertising agency, and the way that AI capabilities can be used to make personalized videos, huge, like loads of different iterations of videos for a given product. Now, don't forget, advertising is the business that underpins Google and Facebook, so the biggest tech companies of the past decade or so. It's sort of saying that we are going to be taking a chunk of this massive industry that has underpinned the last tech surge. He's making a very compelling case for the long tail that AI is going to provide NVIDIA. He's sort of trying to provide justification for this, very pricey stock price right now by showing the long tail that he sees.
Alex, it's funny you mentioned WPP because some people are trying to work out how much of this is marketing and how much of this is real.
Look, I think that we are seeing a lot of people, as Abigail was saying just before the break, a lot of people throwing AI into their public statements right now to try and bid up the share price. The thing is, we're seeing AI already. This isn't just stuff that we've seen with ChatGPT. AI has huge applications that aren't necessarily quite as consumer-facing. ChatGPT really brought it to the public's attention. Now everybody's sort of saying, well, hang on a sec, look, we're doing this already. We don't quite know the extent to which NVIDIA is going to be able to dominate that market. I don't think there's really a question that the market exists and that there will be a huge number of AI applications in the years ahead. The question is what chunk of it, the size of the chunk that NVIDIA is able to take. NVIDIA will have you think that basically they're going to be getting the lion's share. The reality might be a little bit more nuanced, and that's when the sort of pricing question starts to become a little bit harder to answer.
Alex, thank you, mate. We'll catch up with you around the opening bell, I'm sure. That stock right now, 406. The number, the line in the sand, 404.86. That's your $1 trillion market cap watch going into the opening bell. Victoria Fernandez, Andrew Sliman, back with us. Victoria, I'll build on the question I asked Alex. How much of this is hyperbolic nonsense, and how much of it is just an unavoidable trend that you need to get a part of and get a part of quickly?
I wish I knew the answer to that, Jonathan. But you think of like the word count. I don't know how many times AI was mentioned during the earnings season, but it was some astronomical amount, and everyone is latching onto it. And you have to kind of wonder, is it similar to what we saw in the EV space, right? Where you had Tesla come out and they were the main driver, and they still are, but you started to see everyone else try to catch up to them. Is that what we're going to see with NVIDIA? I don't know. It seems like maybe we're in that position right now, but I have to tell you, this whole thing really scares me. I wonder, maybe I show my age when I say, do people not watch the movie The Terminator and understand what all is going on here? And I think we need to be very cautious going forward and really look at what kind of regulation goes around this and what that's going to mean for the growth of AI going forward. I just think there's so many unanswered questions. I don't think you put all your eggs in the AI basket, but you have to have exposure knowing that it's going to be part of the future.
What you just said just reminded me of that line from Michael Hartnett of Bank of America going into the weekend. If you're going to lose your job and be replaced by AI in the next few years, you might as well own some AI as a hedge, no? Andrew, I think a lot of people might be on that page right now. Andrew, I've heard people look for a rotation away from the winners, a change of leadership in this equity market. Where's that change in leadership going to come from with these things developing on the screen?
Yeah, well, look, first of all, one thing I would point out is, yeah, we're very focused on stocks like NVIDIA right now, but, 90 of the 500 stocks in the S&P are at 52-week highs. That's 20% of the S&P. So there are a lot, and it's not just all tech, healthcare, industrials. So I think energy is the only area that doesn't have a stock 52-week high. So there's a lot of ways to generate return in equities without just chasing what we're all focused on today. The other thing I would point out is some of these chip companies and semi-equipment companies are still relatively cheap, I think, and clearly they will participate. So there are ways to play the AI without just chasing NVIDIA. In terms of the broadening out, look, I think a debt deal to pivot here, whenever the days when it looked like we were moving forward, the breadth was better. When in days like we're moving backwards, the breadth wasn't as good. So I think a debt deal would help areas like industrials, materials, some of the more cyclical areas. I could see a little bit of a rally in those areas because they are so oversold relative to tech.
Andrew, if I'm in the index right now, at the index level, in the S&P 500, like so many people are, is bad breadth, narrow breadth, bad news?
Well, that's a great question, Jonathan, because that's the argument amongst the bears, is that bad breadth is, a sign that we're on the precipice like the year 2000. And it is true that we had very bad breadth in 2000 before the market collapsed. However, when you look at the data, there's no conclusive proof that actually bad breadth doesn't lead to always a sell-off. Many times it leads to broadening breadth in the market rally. I think that will happen. I'm just not sure, other than short-term on a debt deal, I'm not sure that will happen until we get past Labor Day.
Victoria, final word, please.
Well, I just think people need to be a little bit cautious here. Yes, just because we have a lack of breadth in the market does not mean that the market can't go higher. It can when we have the momentum and the sentiment that we're seeing, especially around the AI stocks. But I think we have to be careful if we're looking at a sustainable bull market. A lack of breadth makes that hard to happen, especially as we go into the later part of this year, where we're working through 500 basis points of rate hikes, a potential another rate hike, the consumer slowing down, earnings probably coming down. I think you have to position yourself with a little bit of defense in your portfolio in order to buffer some of the volatility that I think we'll see as the markets pull back in the end of this year.
The Nasdaq up more than 30% year to date. Right now, at more than 1%. Victoria, Andrew, to the two of you, thank you. Your equity market about 7 minutes out from the opening bell, positive on the S&P 500 by 0.5%. Coming up in the morning calls in later, Clear Harbour's Aaron Cannon joining us at the opening bell to discuss the narrow breadth in this equity market and a record-breaking stock, NVIDIA, adding hundreds and hundreds of billions of market cap in just a few weeks. This is Bloomberg.
You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it's very different, and it's not something people have had to operate in for a long time.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Equities up big time on the Nasdaq. You can thank Nvidia for that. On the S&P 500 up by about 0.5%. As the price action hits some morning calls. First up, Jefferies upgrading Ford to a buy. $16 price target, seeing signs of improving execution during the automaker's investor event. Roth MKM upgrading Constellation Brands to a buy, expecting beer sales to start accelerating during the summer months. That stock is up by 0.8%. And finally, Atlantic Equities upgrading Coinbase to overweight, recommending investors shrug off the near-term risks with longer-term opportunities piling up. That stock is up by another 4.5%. Coming up, Nvidia charging towards a $1 trillion market cap. The AI rush fueling another day of big tech outperformance. That conversation up next with Clear Harbour's Aaron Cannon. Your opening bell just around the corner.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Two-day winning streak on the S&P about to become 3 at the open and bell. Equity futures right now up by 0.5%. On the Nasdaq 100, 5 weeks of gains. We had some more weights at a rally around the open. The Nasdaq 100 up by 1.25%. One stock to watch, Nvidia. We'll get it to Nvidia at the open and bell. There is your open. Switch on the board and get to the bond market. Yields look like this, down about 6 basis points. Your 10-year, 374. A touch of dollar weakness out there, some euro strength. Euro dollar 107.34. That's after breaking 107 a little bit early this morning. Briefly, a 106 handle. That currency pair now positive by 0.2%. And crude just about holding on to 70 cents, call it 30. We're down by more than 3%. We are about 25 seconds into the session. Equities up by 0.5% on the Nasdaq, by more than that, with the one stock to watch at the open, Nvidia, rallying after unveiling a batch of new AI-related products. 404.86 is the level to watch. And Abby, we've got through that level right now.
Indeed. $1 trillion, the first chip maker to achieve that level. And for moments there, we went back below that 404.86. But right now, the stock up well above that level, up above that key $1 trillion mark by almost $2, having to do with those new AI products that you were talking about, along with that blowout outlook, more than 50% above what the street had been estimating. And it just anything AI, this mania that we have, is driving this stock higher. But Victoria Fernandez made a great point when she was talking to you just moments ago. The valuation, it's crazy high on other metrics. EV to EBITDA, 31% above the group. Revenue to enterprise value, I believe it's like 13% above. So how long will this parabolic trend, up 30% over the last couple of days, last? It's unclear whether or not that will happen, but there is that $1 trillion mark for Nvidia. And right now, this mania, it really has some takers, John. It's going to be interesting and fun to watch.
Phenomenal. That's a melt up in market cap. Just amazing. Nvidia up by another 4%. We'll return to that name in just a moment. I want to turn to Tesla just briefly. Shares up this morning by about 3%, just short of 200. Elon Musk meeting with China's foreign minister early today. Ed Ludlow has more. Morning, Ed.
Yeah, good morning, Jonathan. Shares up about 3%, as you say. The meeting with Qingang took place in Beijing. In a statement issued by the Chinese government, Elon Musk is quoted as saying that Tesla is against a decoupling of the relationship with China and will continue to expand its business in that region. Qingang, the foreign minister, also saying in the context of US-Chinese relations that it's important to get the steering wheel right, he said, and step on the brakes in time to avoid dangerous driving in the context of that relationship. Important because, as Dan Ives of Wedbush puts in his note, Jonathan, it's a good opportunity in the first instance for Tesla to take more market share of domestic sales relative to domestic peers in the EV space. It produces a lot of vehicles out of Shanghai, but doesn't sell proportionately as many of those in that domestic market. But of course, as well, an expansion of Shanghai is underway. As Bloomberg reported, according to sources, a new generation Model 3 is nearing the trial phase of production in that plant. So critical market for production, but as Dan Ives of Wedbush notes, a key opportunity to expand domestic sales as well.
Just out of interest, Elon Musk has been very open about his willingness to express his political views here in the United States, even if it costs him. Now, I just wonder whether the same applies to China.
Yeah, I think what's interesting to note is that this is Elon Musk's first known visit to that nation, to China, since before the global pandemic. They've continued to invest and expand their operations in that Shanghai plant. They are a large employer there. There have been tensions relating to issues of security, for example, around the camera and data sensitivity around camera imagery taken from the Tesla vehicles. But it's an area that continues to be important. And again, go back to the earnings call transcript and look at how many times the word China comes up.
Stock is up 4%. Ed, we'll touch base with you again in about 10 minutes' time. Elon Musk in China. Jamie Dimon heading to China as well. We're going to catch up with Jamie Dimon a little bit later on this evening on Bloomberg TV. So look out for that conversation. I want to turn to crypto-related stocks as well, getting a boost as Bitcoin climbs for a 6th consecutive session. Katie Greifeld has more. Hey, Katie.
Hey, John. Well, it's hard to know with crypto. This could be a relief rally coming off of that weekend debt ceiling related news. It could be a knock-on of the AI boom. We know that crypto and tech stocks tend to trade hand in hand. But no matter the cause, the takeaway here today is that these crypto stocks are definitely rallying. If you take a look at Marathon and Riot, those are both Bitcoin miners really seeing a pop this morning. You can see that Riot there down at the bottom up over 10%, as is Coinbase really seeing a pop this morning. It was upgraded to an overweight at Atlantic Equities. Of course, Coinbase is one of the biggest crypto exchanges out there, and you see SoFi rallying as well. That could be more again about the debt ceiling. BTIG did say that the resumption of student loan payments should help that company. But what's interesting here, John, is that the rally that you're seeing in the stocks is greater than Bitcoin itself. Again, you can see Riot there up almost 11% at this moment. Bitcoin up less than 1%.
Katie, thank you. Big run there year to date for some of the crypto-related themes. Here's another one. Just looking at the Bloomberg right now, NVIDIA, $1 trillion market cap. Just today alone, we've added an extra $40 billion to the market cap of this company. We're up by about 3.6% right now, just pulling back from that $1 trillion line in the sand. AI-related stocks gaining across the board, though. Microsoft up just a little. Meta has been a standout year to date as well. Let's get back to Alex Webb for more on some of this. Hey, Alex.
Hi, Jonathan. Yeah, it's really a kind of blockbuster number they've finally been hitting. Interestingly, this is very much a pure play hardware company, deep tech. The other companies in this bracket are the Amazons, the Microsofts, the Apples of the world, all of whom have got a slightly different proposition. This is a cliche that has been invoked heavily over the past few days. It is the picks for the gold rush, but the crucial thing with NVIDIA is they have the picks today. They have them, they're able to sell them. That means that when the demand was there, they were able to deliver on it almost immediately. There are going to be other winners in this space. The question is whether they have the availability right now in the way that NVIDIA does, and that's clearly one of the reasons we're seeing such stellar numbers to them right now. 6
minutes into the session, that stock's up by close to 4%. The broader market on the S&P 500 up by 0.5%. The Nasdaq up by more than 1%. Alex Webb, thank you. The run continues. Big tech continuing its big outperformance and grabbing the attention of Wall Street. Deutsche Bank's Jim Reed going into the weekend saying this continued tech frenzy has caused the narrowest rally of the century. The S&P 500 now outperforming its equal-weighted index by the most since 1998. Citi Stuart Kaiser noting stocks can continue to rally. He said, quote, not all periods of large cap leadership end poorly. There are 10 previous episodes when cap-weighted SPX beat equal weight by at least 300 basis points in a 3-month trading window. Markets were up in 5 of 11 cases and rose over the subsequent 3 months in 6 out of 10. Let's have this discussion right now with Aaron Cannon of Clear Harbor Asset Management. Aaron, great to catch up with you, sir. We've got to build on some of these big gains. And I guess the question at the moment, does this narrow leadership really matter? If I'm at the index level right now, hugging the gains, do I care?
Well, we work in the world of probabilities, Jonathan, and I think that, if you look over the course of history, narrow breadth tends to be problematic. And there are a couple of exceptions to that are worth noting in 88, 89, 94, 95. But since 1929, when breadth is as narrow as it has been recently, when I say narrow, we're talking about 7 stocks, 54% of the NASDAQ 100, 7 stocks, 27% of the S&P 500. And you look at the returns of the 493 stocks not represented, they're only up a little less than 1% year to date. And the S&P is up over 10%. Large cap, too, is up almost 10%. Small cap, looking through the prism of the Russell 2000, down less than 1%. So the breadth has been truly problematic for this market.
So when people start talking about setting up potentially for another period of U.S. exceptionalism, U.S. equity market exceptionalism after the last 10 years of FANG, are you pushing back against the idea we can do the same thing with AI?
Well, I think it's remarkable, and I still believe that if you look at NVIDIA, it's a wonderful case study in American ingenuity, in American exceptionalism from a technological perspective. And I think that we do have the brains, in the know-how, in the funding to continue to create these companies to add value to the overall economy and increase productivity as well. But it's also the case that we could be entering a period of economic deceleration. It appears as though that's what's happening, and maybe employment has peaked. And so I don't think it's a conflict of thinking that perhaps we continue to see slower growth here going forward. We could see some pressure on the equity markets going forward if this breadth finally falls by the wayside and we start to see a real correction in the market.
but that companies will continue to wade through difficult times, capture market share. Those that are well managed, have great technologies, wide moats, certainly will prosper over time.
And you've mentioned that weaker growth, those disinflationary trends that you and I have talked about continuously over the last several months together. Whenever you've come on, you've always talked about that. And at the same time, I've had yields higher over the previous 11 days, not including today. I'm talking about pricing out rate cuts and pricing in rate hikes. Yields up, and it hasn't hurt the equity market story. Aaron, what do you make of that?
Well, I think part of it is just that this breadth effect. It has, for the vast majority of the equity market, been a point of pressure. But you are right. You look at the 10-year Treasury yield; it's up about 15 basis points year to date, and been marching higher over the last 2 weeks. Two-year Treasury yields as well. We've gone from sort of, Fed rate cut mantra for the next couple of months to, well, we may even have another couple of hikes here in June and maybe even in July. So certainly, points of concern here in the underlying market.
A lot of speculation. Go on, Aaron, complete your thought.
No, I was just sort of thinking too, at the end of the day too, we are seeing further evidence of inflation deceleration. I think the notion that we've gone from 9% inflation headline to 5% inflation headline, and it's going to be difficult to move from 5 to 2, and maybe that's the indigestion that many sort of bears in the market, and I don't consider myself a bear, far from it. I think in the short term, again, it's about probabilities. I'm concerned. I think in the long term, the equity market must outperform the bond market over a multi-year period, or else we're all in trouble here when you think about just sort of the capital stack in corporate America and around the world.
With that in mind then, given what you've just said, for anyone who's been sat in cash through much of this year, and they've been rewarded for that, given what the yields are at the moment, I can pick up 5%, hide, not pay attention to any of this. If you were allocating new capital today, Aaron, in this equity market, where would it go?
Yeah, I think you want to respect the rally on the one hand, which is contradicting perhaps my concern about breadth. And so, owning broad market is okay. And owning broad market ultimately means that the future winners in the market will accrue. And that's in a market cap weighted index. But I also think there are wonderful opportunities outside of the three sectors that have rallied year to date. And we know why those three sectors have rallied. You look at communication services, you look at consumer discretionary, you look at tech, and then you go back to those 7 names that we just mentioned before. That's why those sectors are up year to date. But there are some wonderful industrial companies that are, on the cutting edge of increasing productivity on the manufacturing floor. You look at the utility segment, everyone's looking at, electric utilities. How about natural gas distribution utilities? How about the water utilities? Lots of interesting ROE growth opportunities here and into the futures as municipalities say, you know what, we don't want to manage our water systems. We would rather outsource that to companies that are experts, that only do this for a living and have done it very well. So, there are lots of opportunities in this market that we're very excited about. But we think about valuation and we think about the duration. How much time do each one of our investors have as it pertains to these investments? And we craft our asset allocations around that client. And that's what we're doing here at Clear Harbor.
One quick final question from me, one last question. 12 months ago, in the summer of 2022, if we had these kinds of equity market gains, Aaron, and I said if this was a problem for the Fed, overwhelmingly, I think a consensus view would have been it's a problem for the Fed. They need to get financial conditions tighter. They need to get inflation down. Has that view changed 12 months later?
No, I think the Fed, they got into the game late, and I understand why. They thought that it was going to be transitory in a very short duration perspective, and now they do not want to be accused of taking their foot off the gas pedal. And I think that's a real predicament for the Fed, and we understand why that is. But there are incipient reasons to believe that employment is starting to, you look at the JOLTS data, you look at, some of the temporary companies that are in the business of hiring, things are softening there. We're at a historical low unemployment, but we're also seeing a lot of the, sort of supply chain woes trending through. And we understand that, at the end of the day, when you raise rates over 500 basis points, it's going to have an effect, but it's going to have an effect with a lag. And the Fed's aware of that. And the timing, all of this is uncertain. We believe at the end of the day that the Fed raises rates 1 or 2 more times, and pauses, and then we eventually see cuts as the likelihood of a recession over the next 12 months becomes a little more obvious on the heels of weaker growth and weaker employment.
Aaron Cannon, a Clear Harbour. Aaron, always great to catch up with you, sir. Thank you. About 14 minutes into the session. Here's the name to watch right now. NVIDIA near session highs. Session's young, I know, 15 minutes into this session, but still up 6%, this name at the moment. A $1 trillion market cap, up more than 6%. Now, typically, I don't care about the round number stuff. Tom and I were talking about this earlier this morning on Bloomberg Surveillance. It's the manner at which we got there. The fact that we've added hundreds of billions of market cap in like several weeks. In fact, one session we did that last week. It's just been absolutely phenomenal. That name up more than 6%. Coming up, from Musk to Diamond, corporate America making their way to China.
Things will get better again. China didn't use massive stimulus or this paycheck program. We see some bumps here, but we think the overall journey to recovery is on track.
That conversation up next.
Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's for the Fed to respond to it, and this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise that people are not expecting.
Be ahead of the game.
Certainly the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this moment.
You go all birds on us and you say, turn, turn, turn. Is that what we're doing right now?
Yeah, big question coming into this year for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president's calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
What is the measurement of uncertainty that we have in studying the American economy?
Milton Friedman had said there are long and variable lags in the impact of monetary policy. But man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance, weekdays from 6 to 9 a.m. Eastern. The moment news breaks, no one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
I would say recent April-May data weakness as a hiccup. Things will get better again. China didn't use massive stimulus or this paycheck program to jumpstart the recovery. So like other Asian economies, without that massive transfer program, you need time. So it's not a surprise we see some bumps here, but we think the overall journey to recovery is on track.
Corporate America continuing its push into Beijing. The Tesla CEO Elon Musk meeting with government officials in hopes of maintaining ties with China. Wedbush's Dan Ives saying the visit comes at a key time, writing playing nice in the sandbox in Beijing is something the street is laser focused on to make sure there's no disruptions to Tesla's expansion. This is JP Morgan CEO Jamie Dimon brings his China summit back to China for the first time since 2019. Let's get to the team coverage. Ed Ludlow and Shanali Basso join us right now. Ed, let's go to you first. Elon Musk already there.
Yeah, Elon Musk already there. First visit since before the pandemic. And, you know, the key development was his meeting with China's foreign minister, Qin Gang. You know, the ministry issued a statement which quoted Elon Musk as saying that Tesla is against a decoupling from China and that it will continue to grow in that nation. But it's kind of consistent with corporate America. Tim Cook visiting Apple in March, reiterating its importance strategically for the iPhone maker. Mary Barra, the CEO of General Motors, kind of talking about the need to work with local partners in China, it being a key market for clean energy vehicles. There is this growing narrative that contrasts corporate America's view of China with that of President Biden in this nation, the action of sanctions, for example, hitting NVIDIA's ability to export its latest chips to China. And not just here in the US, but in continental Europe as well. You look at what the Germans and Olaf Scholz have done, or the Dutch in joining with US chip sanctions against China. There is this contrast between the corporate narrative on the importance of that market and what political leaders are telling us.
Shanali, Jamie Dimon's turn. Up next.
It sure is, and this is a massive conference. We're talking about 2,600 people that are going, companies, investors. Remember, this is not only from China, this is also large corporations from the United States also going. Executive CEO from the likes of Pfizer, Starbucks, while Morgan Stanley over in Hong Kong also has another conference with another 1,500 investors. So this is an insanely important market. Remember, not just for the companies themselves with an expectation of the market reopening, the consumer coming back potentially a little bit stronger here, but also this idea that there is wealth, serious wealth, John, accumulating in China, and these are big clients. These are big private net worth, high net worth clients at a time where JP Morgan, Goldman, Citigroup, all are big in China and growing those businesses to gain some greater returns at a time when their other businesses have been under pressure.
Shanali, is that still the place they want to be, or has that changed in any way, shape or form over the last couple of years?
Listen, anybody that was in China to begin with knew that it would be a slow, steady burn, that there would be fits and starts. And so if you've made the commitment and if you're operating at scale, you're not backing away. Though if you are not at scale and you're a smaller fund manager in the region, you are probably not sticking around for the economics less than the geopolitics. But the big banks, they're certainly committed to China, and there's no sense of them pulling back.
Looking forward to our conversation with the man of South, Jamie Dimon, coming up a little bit later on this evening, I believe 11:30 Eastern time. That taking place over in Shanghai. Shanali, thank you, alongside Ed Ludlow. For the broader price action, about 22 minutes into this, we're up by 0.3% on the S&P. The gains fade a little bit. On the Nasdaq, up by 0.8, call it 0.9% into positive territory. With some sector price action, here's Abby.
It's interesting, John, because we do, of course, have this gain for the S&P 500 and this feeling of a big rally because of NVIDIA, but we have more sectors trading lower, led by energy. We have a quiet sell-off, I would say, for crude oil, down 3.6%, just holding on to $70 a barrel. On the other hand, we do have tech sharply higher, up 1.6%, driven by NVIDIA and the chips and anything related to AI. Let's take a look at these stocks in this index over the last week, because it is a big rally. The stocks last week putting up its best week going back to November of last year. There's NVIDIA over the last 5 days, up 36%, an absolute melt-up, as you said before, parabolic. The question is, will these gains last, John?
Abby, will they stick? Have to bear in mind it's only May, so when we talk about year to date, we're not even halfway through the year and we've got gains of more than 100% on that name and on Meta as well. Coming up, your trading diary, going into Payrolls Friday, up next.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
"26 minutes into the session, advancing by 0.3% on the S&P. Day 3 of gains on the S&P. On the Nasdaq, up by about 0.7. The gains fade just a touch. That's the price action. Here's the trading diary. Coming up through the week, U.S. consumer confidence numbers at the top of the hour. Richmond Fed President Thomas Barkin speaking at 1 p.m. Eastern Time. We get the Fed's Beige Book on Wednesday. More Fed speak before the quiet period. Collins, Bowman, Harker, Jefferson, all on the agenda. And before we get to payrolls on Friday, ISM manufacturing, the ADP report, jobless claims, then the big one, payrolls, the estimate, 190K. From New York, that's it for me. Thank you for watching Bloomberg TV. This is Bloomberg.
So many people recognize you because you have a very famous hairdo that I've asked you about before. But to some people, they may say, well, Ken, what happened? Where did that hairdo come from and where has it gone? Because right now it seems a little different than what I've seen before.
Yeah, it's growing out a little bit, David, but COVID, you know, I ended up with hair going back down to my shoulder, and I finally realized that one of the things I had to do, I'm a very loyal person, and I used to have hair down to my waist in my college and my hippie days before that in Ann Arbor, Michigan, and I had it cut off in the summer of '75, and I've gone to the same person, now a grandmother many times over, who was a young gal cutting hair in Amherst, Massachusetts, and I still seek her out, and I finally just said to her, you know, COVID's enough of a change that I ought to be able to do something new.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
898, I won! Look for the winning number in sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking, and of course Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19 they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments. But the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venegold as an opportunity to leave that troubled home. Venegold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venegold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Gold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Gold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environments, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000!
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building this social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
The Fidelities and the Schwabs and the E-Trades of the world, they look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only